welcome. Good morning. You're watching India Market Open, and after a few weeks, it's a full house, guys. Good morning. Good having all of us together this morning.
Yeah, good having all of us. And well, I think
the viewers should say that, but yeah, it's good for me to have both of you here today.
No, it's great. And thankfully, the market's showing a rub of green as well. But hey, guys, ahead of Trump swearing in, so many things happening, including Justin Trudeau resigning as Canada PM, and Donald Trump at it again, putting that, hey, good that Trudeau's resigned. Canada should merge with the US. What a great nation it will be. Like, Donald Trump was on fire. I mean, he's posted something like this maybe 20, 30 days ago. Yeah. Elon Musk taking a dig at Justin Trudeau, Donald Trump posting this message. It's fun and games on the geopolitical front.
Fun and games. But I just from the Indian perspective, a lot of interest in this because Justin Trudeau and his government has been very clearly not favorable to India. But my point being that if his party doesn't change, it's a party line. So unless there's he's resigned from his position as the head of the party. So unless the party in power changes, not too many things may change. But yeah. Justin Trudeau, once a favorite, now no more, has stepped down. So, all right, that's the interesting thing this morning. But let's get you a check on what's happening globally and in markets as well. I would say a mixed day of trade for US stocks, only because the Dow underperformed. The S&P 500 and the NASDAQ up in the green. The Dow was down mildly, but the story is all about chip stocks and the NASDAQ. The NASDAQ was up about 1% or 0.5% up on Dow futures right now. And this is because of semiconductor stocks rising across the board. In fact, chip stocks have been in focus across markets after Foxconn reported record revenues. Jobs data points will be, though, the next big trigger that becomes important in the week to come. And, can we just put out all of those pointers that I had given on when we are seeing which jobs data? Because you have different kinds of data coming in through Tuesday, Wednesday, and Thursday. Tuesday, you have jobs opening data. Wednesday, you have ADP private payroll data. Friday, you have non-farm payroll data as well. So it's a busy week in terms of data coming in. Bond yields have risen ahead of jobs data, 10-year at 4.6%. So slight uptick there. Oil stays steady. Brent is hovering around $76 level. Not too many, I would say, indicators there, or nothing moving too much. Asian markets have opened largely higher on in the chip stocks boom, but Tencent in Hong Kong are getting a drubbing because the US government has now, and I think this is important as well, the US government now has marked Tencent as a military company. So that is a huge hit for Tencent, and that's probably impacting some of those markets there. But the Nikkei up 2.5%. Implied open on India, let's pull that up quickly. We had a good, a crazy day yesterday. Are we going to see some bounce back? Then maybe yes. 93 points up. Fund flows have shown that domestic investors came in and bought yesterday. Foreign investors sold. I think retail investors panicked to some extent. I think the big story yesterday, Neeraj and Samina, was the fear of a new virus, which is why you saw markets completely give up all gains. I mean, overnight, I think there are more cases now, cases across three states. We'll, of course, have more details on how much we should worry about it or we should not. But the fact is that that's exactly what spooked markets yesterday, and maybe some come back in place today with people realizing thoda sa zyada ho gaya, maybe a little overblown.
Yeah, I think it was follow-up selling that came in from Friday as well. So, of course, Thursday you had that very sharp short covering rally that lasted all of Thursday. Friday, you saw correction coming in. Monday is when traders built on that correction and continued to sell in yesterday's trade. Couple of factors, the virus being one, the other being a stronger global dollar. Apart from that, you had a falling rupee, higher crude prices, FI selling, and expectations being fairly muted around the earnings season that kicks off on Wednesday with TCS reporting. This morning, 23,460 becomes an important level. But what happened in trade yesterday, right? It was a 1,200 point fall on the index. Volatility, which is your VIX index, spiked significantly. The last time we saw such a big spike on this was all the way back in August, a 15.5% jump on the VIX. That's an indication how volatile and nervous the street was in the second half of trade yesterday. We broke the 200-day moving average, which was turning out to be an important level of support in trade, 23,700, and of course closed below those levels. 24,000 was important on Friday, but that unfortunately got taken out pretty much in a jiffy in Monday's trade to close below 23,700. Broader markets did worst. The mid-cap index was down 2.5%. So while the Nifty declined sharply, broader market stocks were not spared either. My concern has remained Bank Nifty, and that clearly seems to be in a bearish formation. You had disappointing business updates coming in from HDFC Bank, prior to which the stock had already sold off on Friday. That reportage did not help, and as we went into trade yesterday, a significant level like the 50,000 mark on Bank Nifty got taken out. So it's a concern, and the fact that it's not participated and falling is what the bulls on the street would be concerned about. Well, apart from that, sectorally, broad-based selling. So all we've seen in the last few years has been broad-based buying. Now we're getting used to broad-based selling. So be it PSU, metals, real estate, saw very, very sharp declines in trade. Apart from that, I don't think there's much to report on, Neeraj. Today, even if you see a bounce back, I would put it down as a technical recovery, if that. But 23,460, if that gets taken out, I think a downside is confirmed.
Yeah, and maybe a lot of people, actually technical analysts, are saying that that's the zone of support as well, 23,400 to 23,300 odd. But yeah, I mean, multiple reasons, right? So when you look at the Japanese rate comments, plus the banking updates that came in over the weekend, and essentially two key negatives, and then even if the HMP virus the scares are unfounded, even if they are. I mean, we just pray and hope that this is nowhere close to COVID. After COVID, we've learned to say never. But the hope is that the stuff thus far doesn't seem to suggest that it may be as deadly or as potent as what we've seen in COVID. But even if that is not, if a market is in a bit of a bearish mood, they didn't clutch on to any straws which give it a reason to be negative on. And I think this one could well be it from a market's perspective, I'm saying. This one could well be that. I mean, so that is the other thing to keep in mind, in addition to the fact that thus far, there is not too much to really cheer in terms of the results update as well. If anything, there is enough to kind of doubt whether quarter 3 also will have a decent outing or no. So that's the second piece, and therefore very difficult to really call for a sustained up move. I mean, I kind of agree with what Samina was saying, that you probably have a dead cat bounce today. It will last for 2 days, who knows? But is there enough out there fundamentally, both globally and locally, to call for a sustained up move as yet? Maybe not, and therefore it remains stock specific. I mean, you could see diagnostic plays coming in because of this virus scare. You could see defense companies still remaining in focus, because at any given point of time, we'll have a defense company getting an order or two, because a lot of orders will get bunched up.
Just railways to that as well.
Yeah, railways too. But just the quantum of defense orders to be given out is very large. So there is a bit of a predictability to that for quarter 4. And therefore, that adds up to that.
So yesterday, diagnostics, you had hospitals. Apollo Hospital was a clear winner. You had airline stocks taking a beating. You had hotel stocks taking a beating. Just, I think what has scared the street on the virus, if I can just add to that, is not the severity or not severity of the cases. It's the speed with which new cases are being reported. So at last count, we have 7. We know that this is largely in small children. Under the age of 5, they seem to be more vulnerable. And the other part that is concerning the street is because there's no clarity of the exact picture coming out of China. There are just reports that it's widespread in China. But how severe? Is it fatal? Are people dying? Is there a cure? Because it's in China, once again, that sense of deja vu and a bit of concern that do we really know the true picture? I think unless there is a clear statement from the government, the street will be okay. So wait and watch maybe until then.
Yeah, I mean, but typically if you look at viruses in the past as well, this is the pace at which they anyways would multiply. I think the scare around the fact that it is emanated from China and COVID had also emanated from China, adding to that. So yeah, that too. But like I said, I mean, it's just a fear that the market will clutch onto. I mean, GIFT Nifty for the last so many sessions now, right? The futures are trading at a discount versus spot currently. Until that kind of covers itself up, you probably know the bent of the market. The bent of the market is not towards the upside. It is firmly towards the downside for now.
Yeah, so please, I guess the fact remains that this is a tough market to navigate. And while, we've talked about this, funds have been sitting on dry powder or cash. Aggressive allocations may not be happening just yet, and hence we saw correction despite heavy buying coming in from DIs in yesterday's day of trade. 23,460, watch for that. That was the closing low last week in trade, and that becomes sacrosanct for the markets. The hope is that gets respected and we see a flattish to slightly higher start in early trade this morning. The reasons, of course, we've explained to you why we see it could be a difficult day, but the fall coming in on large volumes bothers me the most, and unwinding that was seen in futures. So that is what is concerning again. So big volumes, unwinding in futures, and both the Nifty and Bank Nifty below its 200-day moving average is what makes us ripe for further selling. May not be today, but over the course of the next few days. You've also got a whole bunch of stocks. The news flow is thin as we go into the earnings season tomorrow with TCS reporting, but let's take you through what I have. Power Grid has been declared a successful bidder for 2 projects, and that becomes an important counter on the upside that you want to track in the session. This, of course, is an interstate transmission system under Build, Own, Operate and Transfer, which is a BOOT basis. So watch out for how Power Grid does and reacts to that news flow. Nesco, I'll quickly mention it. The National Highways Logistic Management has declared the company as the highest bidder. The estimated investment on this project is close to 75 crores, and the revenue that will be revenue contribution that you will see from these projects will be to the tune of 350 crores from the 3 sites, and a 4th edition will also be announced shortly. Ashok Biocon has turned out to be the first has executed a concession agreement with NHAI for development of a 4-lane economic corridor in West Bengal. The accepted bid project cost is 1,391 crores. Now, this anyway you would imagine some low-level buying emerging on the stock as we open up for trade. 1,391 crore order win should impact this further, and I'm hoping that it recovers after a 9% fall yesterday.
The fall was broad-based and everyone got pummeled, so at least Ashok Biocon has good enough reason to recover. Not so much for Zomato. I just found the stake from Jefferies interesting more than anything else, which is why a thumbs down. Not that they're very negative on Zomato per se, but they have downgraded it to a hold from a buy, and the target price from 275 from 335, which is a bare upside right now. They expect a year of consolidation for Zomato. They say valuation's not excessively expensive in context of strong execution, but importantly, they've cut the EBITDA forecast for Blinkit sharply. Over FY 26-27, Blinkit is expected to face profitability issues. They've cut target multiples by half for Blinkit to 6x. I mean, I just found this interesting because Zomato has been on a one-way street, and just a whole host of optimism around it. Questions then came about whether Swiggy was also a good bet, etc. You could have a Zepto, which could list this year. So are we going to see some of that fizz of Zomato going off is my question. So watch out for Zomato. Was also down in trade yesterday, but the 12-month performance has been insane, and nearly 100% up in the last year. So is it time to take some money off the table? Titagarh Rail Systems is the other one, and Samina talked about railways a short while ago. I found this very interesting, and actually we should try and get some pictures up of this later on in the show, because it's a proud moment. They have delivered a driverless made in India train set to the Bengaluru Metro Yellow Line. So there's a innovation part over here. It's completely indigenous and a big deal for Titagarh Rail Systems, and we'd love to talk to the company about it as well. Definitely an upside over there. Sentimentally, fundamentally, how the stock reacts today, we'll have to see what the overall market mood is. Vodafone is the other one that I found interesting. They've entered a share purchase agreement with iBus Network for transfer of 50% stake in a company called Firefly Networks. They get about 4.5 crores for it, for the stake of the entire, for the sale of the entire stake in Firefly. It's a joint venture between Vodafone Idea and Bharti Airtel. But why I thought that it's interesting is because they are working towards getting their house in order. Now, whether it works or not is a different question. So these were some that I spotted and are on my radar, Neeraj. Yeah,
on my radar, one of them is IGL, though IGL, BPCL and GAIL, all of them could very well be in focus because BPCL has given an in-principle approval for the listing of MNGL. Now, what is MNGL? MNGL is a JV of IGL, which owns 50% stake. BPCL owns 22.5% and GAIL owns remaining 22.5%. And MNGL is the company authorized to be the authorized city gas distributor in the city of Pune. Now, why is this important? Well, I rest on Citi's shoulder to lay out the point. Citi says that the listing of MNGL could help unlock value for IGL because the company's two JVs, which is MNGL and CUGL, together contribute to about 56 rupees per share of their target price of 450. But more importantly, MNGL's contribution is about 45. So if Citi's target is 450, 10% of the target comes in from MNGL. If MNGL gets listed, that's value unlocking happening effectively for IGL, and therefore a stock that corrected yesterday could actually see a bounce back today. So Ashoka Buildcon is not the lone ranger in the list of stocks which has a fundamental reason to recover today. GAIL too maybe, but about 12 rupees per share in an overall target of 280, so not really that dramatic. So watch out for IGL, even BPCL and GAIL, but mainly IGL. This could be the key mover in the session. So that's something that you certainly want to keep an eye out for. You want to keep an eye out for SH Kelkar's business updates as well. Not the best update, unfortunately, I would say, because their revenues were up 4% at 514 crores versus 496. Now juxtapose this with the 9-month revenue of 17%, which includes this 4% growth, by the way. So it actually, 9-month revenues have been dragged down by this 4% number. Otherwise, the numbers would have looked even better. So Q3 clearly was a disappointment. They have faced gross margin pressure, and they have said that the margin pressure will persist until Q4 FY25, and the net debt has gone up to 700 crores from 596 crores. So therefore, a bit of a bummer for SH Kelkar to keep an eye out for this one. And InfoEdge, standard quarter, if you will, 15% growth across line items. So standalone billings 15%, recruitment solutions 15%, 99 acres actually 16%. So in some sense, not a bad update. Let's see if there is a bit of an uptick out here. And guys, I mean, there are a clutch of brokerage notes, etc. But, you know, the primary market activity is interesting because while we'll have a listing today, which is the second most subscribed IPO of the last 12 months, but Standard Glass Lining Technology has been subscribed 13 times on day one already, shows that no matter what's happening in the secondary markets, primary markets are active. 13 times on day one is big. You will probably see Standard Glass Lining Technology really get subscribed well. And I wonder if it's got some positives for GMM Pfaudler, considering that was the lone ranger in the glass line equipment, and now maybe this one too comes in. So could be an interesting one.
Why would it be a positive if competition is coming in?
No, a sector getting discovered, maybe. You know, Zomato moved up ahead of the Swiggy IPO listing as well. So who knows? I mean, I don't know really. Just keep the stock in mind.
Absolutely. GMM Pfaudler is another one that you could look at. And yeah, Zomato also moved up because then its numbers, the GOVs, etc., are looking much sharper. Yeah. So if GMM Pfaudler then looks much better compared to the new listing, then perhaps. Absolutely, yes. Another set of stocks that will be in focus today is the steel pack. The ministry has launched its second round of PLI scheme for specialty steel. Which companies does this benefit? Mihika is joining us for more on that.
Yeah. So when we talk about, you know, the steel companies, you have a Tata Steel, you have a Steel Authority of India, as well as a JSW Steel that will be in focus. They were under pressure yesterday, but the Steel Ministry has now launched the second round of its already present product link incentive scheme, which is for specialty steel. Now, the plan will remain open from the Jan 6th to the 31st Jan of 2025 and will be implemented during the production periods of FY26 to FY30. But when you talk about in terms of allocations, well, it will operate within the funds originally allocated in the first round, which stands at 6,322 crore rupees. Now, this PLI scheme 1.1 will cover 5 product categories: coated plated steel products, high strength or wear resistant steel, specialty rails, alloy steel products and steel wires, as well as electrical steel. Now, there is something different this time in the PLI scheme 1.1. Not all the companies will need to install new mills. The companies investing in augmenting their existing capacities will also be allowed to participate. They've also reduced the threshold of investment as well as capacity for something called CRGO product subcategory, which stands for cold rolled grains oriented steel. And a little bit about the first round of PLI scheme. Well, it was notified back in 2021 on the July 29 with a budgetary outlay of 6,322 crore rupees, and the objective was to promote manufacturing of value-added steel grades as well as reduce the imports of the value-added steel grades. Lastly, it attracted a total investment of 27,106 crore rupees and attracted downstream capacity creation of 24 million ton. So with more changes made to PLI scheme 1.1, we could see similar kinds of investments as well as capacity creation coming in as all the players might participate in the scheme as well.
Okay, Mika, thanks. Let's see. PLI schemes galore would be the order of the day, would be something that people will keep on talking about because India's focus on manufacturing certainly tops the agenda. And whether it's defense orders, railway orders, PLI schemes, I think the focus is on manufacturing. Make India a manufacturing hub in as many parts that we can, and especially in specialized products wherein the outlay may not be necessarily that high but could do well. In fact, I think there is a newspaper report today which speaks about how India seeks private capital to the tune of $107 billion to expand the power grid. And therefore, even that, right, in some sense, investments into expanding a power grid which brings manufacturing of ancillaries firmly into focus. So clearly all of that is in focus. But let's talk about HMPV now. At least 5 confirmed cases in India so far. But the big question is, should you worry? Ministers have been trying to assure the public of safety and the need to not panic. Most importantly, Health Minister JP Nadda as well has issued a statement saying that the ministry is closely monitoring the situation. Listen in.
चीन में जो HMPV वायरस के मामले पर हाल ही में आई रिपोर्ट्स पर स्वास्थ्य मंत्रालय ने इंडियन काउंसिल फॉर मेडिकल रिसर्च के साथ और नेशनल सेंटर फॉर डिजीज़ कंट्रोल के साथ और वर्ल्ड हेल्थ ऑर्गेनाइजेशन के साथ चीन सहित पड़ोसी देशों में स्थिति पर कड़ी निगरानी रखे हुए है। WHO ने भी स्थिति का संज्ञान लिया है और जल्द ही वो भी अपनी रिपोर्ट साझा करेंगे हमसे। ICMR इंडियन काउंसिल फॉर मेडिकल रिसर्च और इंटीग्रेटेड डिजीज सर्विलेंस प्रोग्राम IDSP के साथ उपलब्ध सांस संबंधित वायरस के देशव्यापी डेटा को भी समीक्षा की जा रही है।
All right, Dr. Abhirup Sarkar, Laboratory Director at Suraksha Diagnostics, with us this morning. We're also speaking with Professor Sunila Garg, Chair of Program Advisory Committee at the National Institute of Health and Family Welfare in Delhi. Welcome to both of you. Very good morning, Dr. Garg. Professor Garg, actually, let me begin by just getting your view on the pace of spread of the cases. When people are watching this and they're saying, okay, 5 cases, now 7 cases, the worry is that, is this something which is already endemic in our country? Because the first few cases are in newborns who haven't traveled outside India. Is it very much here, and how dangerous could it be?
You see, first of all, very much good morning to all of you. And I wanted to say that, when we talk about HMPV virus, that is human metapneumovirus, as the name suggests, basically it is related to respiratory infections. And primarily the symptoms are with regard to respiratory infections like cough, cold and all that. But predominantly, this is also a season for cough, cold and, the respiratory infections, because not only HMPV virus, but we do have flu virus, respiratory syncytial virus also in circulation. So we don't have to worry much about it, but then, we have to look at certain age groups, like infants, when we talk of children who are less than a year, or when we talk of elderlies who are 65 years and above. So we need to be more cautious. And amongst those who are infants, particularly who are born with low birth weight, and India is known to have almost 30% of children who are born with low birth weight, and we do have preterm babies, plus, people who are 65 years and above, who are immunocompromised, who are suffering from comorbidities, we need to be cautious with them. So those who are suffering from these symptoms, they need to isolate themselves. But as far as the country is concerned, we need to be vigilant. We need not panic. But of course, our systems are already in place because we prepared the systems during COVID times. So our system preparedness is there, our human resources preparedness is there. The whole purpose of this media program should be that we need to create more and more awareness amongst masses so that, we can reach the last mile and people become more aware of the symptoms, and they need to rather consult the healthcare providers as soon as they feel, particularly when we talk of, wheezing, or when we talk of, severe breathlessness and all. In that case, a healthcare provider must be immediately consulted also.
Okay, so the most vulnerable age groups are young children below the age of 1, in fact, is what Professor Garg is saying, and those who are above 65 and have comorbidities or who are immunocompromised. But is there enough out there to test them? Dr. Abhirup Sarkar is joining us now. He's Laboratory Director, Suraksha Diagnostics. Dr. Sarkar, just trying to understand that, do we have accurate current testing mechanisms for this? Because from what I understand, we're using the PCR tests, which we used for COVID as well. But this could be a slightly different kind of virus.
Absolutely. It is generally detected by the PCR method. And as we have said, we know very well about PCR method, and during COVID times, we have used it extensively in our labs. And the testing for HMPV is actually available for years now. And most of the top labs like us also, we are doing HMPV tests for several years now. We are doing it as a part of a respiratory comprehensive panel. So that includes multiple viruses that are generally causing the upper respiratory tract infection or lower respiratory tract infection. And we can test HMPV singly also through RT-PCR methods. Those are already well known. And most of the labs are already equipped to do this testing. If any surge comes, we are well equipped, and India is well equipped to do that.
What are the current sort of testing that you have, for example, and what are the costs of these tests, Dr. Sarkar?
Yeah, so generally, if you test as a part of comprehensive respiratory panel, the price can be 10,000 to 20,000, and you can test it singly as a single human metapneumovirus detection. It can cost you around 2,000 to 3,000 rupees.
So 1 minute. So are you saying that the current test for HMPV is 2,000 to 3,000 rupees that is available in the market right now?
Yes, it's available in the market.
And a comprehensive one can be up to 20,000 rupees. Is that what you said?
10 to 20,000, yes. Exactly.
10 to 12,000 rupees. So,
10 to 20,000.
10 to 20,000 rupees. All right.
Yeah.
So
it depends on the sample type you are using. So you can do it for upper respiratory. So that will be a nasopharyngeal panel. You take the swab like COVID, but it can also cause pneumonia. So if you are testing for lower respiratory tract infection in some immunocompromised person who is having pneumonia due to human metapneumovirus, then you can test for sputum or bowel fluid or like that. Then the cost can be slightly higher.
So Professor Garg, here's a problem, isn't it? Because as the fact is that we need to detect cases at this point.
Yeah.
And then you have tests that cost at this level, and that's going to cause some concern.
See, definitely, I'll say that it is not that cause of concern, because we need to look at the individuals, their symptoms, the signs, that means with what they are, what the doctor is eliciting, and then we go for testing. And as far as I'm aware, during COVID times, we brought down the cost very much low to as low as almost 500 rupees, because this is a point of care test now, which is easily available. We do have a technical know-how, particularly all the healthcare facilities in government setup, where we are talking of, a different level of laboratories. We have prepared the systems, and we need not worry about that, because the data also goes to IDSP platform. So, we need to see that exactly how the costing, particularly in private sector, also needs to be brought down. That is important part, because this is point of care test, which has been already well developed, and we need to see that how, basically it is available to everyone if it is required. That is important, because it is a self-subsiding infection. Most of the cases, they subside within 3 to 6 days also. But only thing is we need to be worried about, as again I said, that about our infants, children less than 1 year, because in them, the pneumonias could happen, and particularly in elderly population and people who are comorbids. So we need to, as I said, be vigilant, and we need to also test, with very, very comprehensively. That means we need to see that people who require to undergo all this, that is important, because against 5 cases which we are talking today, or 7 cases, each case there is almost, a load of 100 subclinical cases.
Okay, I think that's an important point, that the number of cases doesn't mean that all of these are severe infections. That's something that we've learned from COVID, and that's what we should keep in mind. Thank you so much to both of you for joining us on this segment, where we're just trying to give our viewers right and expert-backed and factual information on what is clearly a cause of concern. But we'll take a very short break. On the other side, we get you top trading strategies for the day. Stay tuned.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change?
Welcome back.
back. You're watching India Market Open. We're gearing up for trade. Remember, in yesterday's trade, the markets were caught in a complete bear trap, with the Nifty declining over 1.6%, with broad-based selling across the board, closing below a very significant level of support, which is a 200-day moving average of 23,700. The VIX as well jumped quite sharply. Traders were caught off guard, and it looked like a fairly painful session, to say the least. But as we set up for today's trade, let's take you through where the action is. But an early indication is that Jan futures are indicating to a marginal premium, but there has been a decline in OI to the tune of 1-odd%. On Bank Nifty, which looks a lot more trouble than the Nifty itself, is also seeing actually a much better picture than the Nifty itself. Nifty Bank Jan futures are trading in a premium, and there's an increase in OI, indicating that there could be a little bit of recovery and upside movement that could potentially be expected in today's trade. Well, what is happening on the put and call side? 24,500, that becomes an important sort of strike, which is where you had over 1 crore contracts being added. So that's your key level of resistance. That is followed by 24,200 and 24,000. So in terms of activity, the first level of resistance that traders will be tracking is 24,500 on the upside, where you've seen maximum OI in terms of calls, followed by 24,200, and then you have 24,000. Call writing was seen aggressively at levels of 24,000. So this is where, and this is really the trade that was seeing maximum amount of activity, followed by 24,500 and 24,200. In terms of call unwinding, the action again was restricted in the range of 24,000 and 24,500. That really becomes a key resistance that the street will be tracking. On the put side, 23,000. Now that sees, or rather has seen, quite a bit of activity in terms of OI being added, and then followed by 23,300, 23,500. So that largely remains your trading range in terms of what the puts and the calls are indicating on the Nifty. My bigger concern really is what's happening on Bank Nifty. We've dipped below levels of 50,000, and that is always unsettling. 50,000 has been an important level. It's also your 200-day moving average that got taken out in trade yesterday. The early positive sign this morning is that there has been an increase in OI, and bank futures are trading at a marginal premium, indicating that if nothing, you may get a little bit of a short covering rally in today's day of trade. But to take us through what the strategy for the day should be, Amit Goyal of Amit Goyal Ventures joins in. Amit, you know, before I talk to you about Bank Nifty, where you've got a bull put spread, what I want to understand is, how are you feeling about the Nifty at this juncture? We were caught in an aggressive bear trap yesterday, broad-based selling across the board. The VIX has declined. We've closed below our 200-day moving average. And even this morning, while GIF Nifty or implied Nifty is indicating to a small uptick, it doesn't seem like it's going to sustain at those levels.
Hi, good morning, Samina, and thank you for having me on your show. Good morning to all your viewers. I concur with you that Bank Nifty yesterday, we have had a very sharp decline. And if you notice that last time I had come on your channel, I had given a bearish view on Bank Nifty, and we continue to hold that trade. However, I do feel that until 23,263 or thereabouts, that is the previous pivot low, till that is breached on the lower side, we will possibly be in a sideways sort of a range. I don't think that we are going to see any further continuation of this of yesterday's dip. I believe we did have a knee-jerk reaction in this. Hopefully, we should find some support at lower levels, and because of which I also noticed that the option chain is fairly scattered in terms of writing both calls and puts. If you notice that the futures OI has actually dipped yesterday, the additions in futures OI on Nifty, whereas on Bank Nifty it has been a marginal uptick. If you look at the data on Bank Nifty's option chain, call and put, the change in call, while it seems that it is very high, but if you look at the data granularly, it is actually the 61,000 call strike which has been added yesterday massively, and not anything close to the current market price, which is what I believe could be the reason that there has been a sharp uptick in the open interest on the call side. However, I do see some bit of a reaction on the upside in terms of a reversal, which is why I do have a bull put conditional trade.
And I want to talk to you about that bull put spread on Bank Nifty. The condition is that we are going to be tracking this for tomorrow 10:30 a.m. You want to walk our viewers through it and what those conditions are, because only if there is a close or a trade above 49,500 should one initiate this, right?
So the trade is conditional to today at we will look at the data, we will look at how the price action is till about 10:30, give it an hour or so for the markets to settle down the initial reactions, and post that we will consider adding, getting onto this trade. See, the point is this: we already continue to hold the bear put spread of 52 and 53,000 strikes, which was given on the 30th of December. So we are making some profits in that. What I'm trying to do is I'm trying to club this with that trade and convert the entire setup into a iron condor sort of a thing by entering into this conditional bull put spread. The condition is very simple. We will wait for about an hour or so to see if the first candle of the first hourly candle is a green candle, because that will confirm that there is some sort of a pivot and some sort of a reversal on these time frames, which is the hourly or the 75-minute time frame. Because I do see some sort of oversold levels at these in this time frame, and I expect that the market will probably go to 51,000 odd levels, which is the mean reversion trade here. Hence, I'm suggesting the traders to put up a bull put spread in which we will sell the 49,500 put of Jan expiry, and we will buy the hedge of 48,500 put of Jan expiry again. The max credit or the profit likely to be in this trade is about 4,500, given that the margin is about 25,000. The risk reward will be about 1,500 is the risk we are taking. That is, if the 50,000 level on the futures is breached on the downside on an hourly or a 2 hourly closing basis, we will exit this trade and continue to hold the bear put spread which we already have. The reward in this trade is likely to be about 3,000.
Just to conclude this, if there is no reversal observed by 10:30 a.m., you don't recommend this trade being initiated. Is that correct?
Absolutely.
And
this is only conditional.
Right, and you're also recommending that one should close the trade and book a loss if 49,500 is breached on a closing basis. So what you want to do is track this at opening. If there is a reversal, well and good, execute that trade. But on a closing basis, if 49,500 gets breached, then you might want to exit the trading strategy. Is that right, Amit?
Right, absolutely.
Right. Thank you very much, Amit. Always good talking to you in the mornings with your F&O strategies. With that, I hand it over back to Neeraj.
Yep, well, thanks for that, Samina. So some interesting strategies out here. Now, let's try and figure out what's there on NDTV Profit's watch list before we move ahead. And well, starting off is InfoEdge. Standalone billings rose about 3% quarter on quarter. But on YOY basis, most things delivered a 15% growth. Titagar has delivered a driverless train set and therefore a proof of concept, if you will. Let's see if it ignites the stock. Ashoka Buildcon is in pact with NHAI for a 1391 crore order, could be active. IGL has gotten there's an in-principle note for the MNGL IPO from BPCL. IGL owns 50% in that, so could be active. Dynamic Services has received a work order of 476 crores, could be active. So watch out for this. And
Hyundai, like they say, Cindy initiates a buy on the counter, so track this one. Zagel usually reacts to these agreements. Kiran Car Tech and Zagel have signed an agreement. The counter will be one to track. Kalyan Jewels, good business, good growth. They've reported a 39% growth in revenues in their business update. And a downgrade comes in for Zomato. Jefferies downgrades it. The stock could see some selling. On the flip of it, Swiggy could see some buying on back of Zomato's downgrade.
Okay, Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities. Kunal Rambia, founder at The Street, joining right now to talk about the markets and the outlook ahead. Good having both of you. Thanks for joining in. Kunal, the fall yesterday and a small uptick anticipated today. How would you use this uptick? Would you use it to lighten up your positions, or do you believe there could be a sustained bounce?
Good morning, Neeraj bhai. Thanks for having me on the show. So if I just talk about, say, historical levels again, it's been almost six and a half months now. Nifty has consistently held upon 23,500 to 23,250 mark. That's from June 2024 so far. If I talk about Bank Nifty, precisely 49,900 to 49,650 is the zone which is held upon. And whenever we have seen the indices coming near these lows, we have always seen the bounce coming in. So if I look at the last 2.5 years, 3 years of rally, it's been positive. Last 6 months been sideways consolidation. But right now, indices are on the support. And as a technical trader, when the markets are nearing the support, we should be thinking of initiating buys. So at this level, I'm very comfortable holding the positions. In fact, creating new longs with the stop below these two mentioned levels. By any chance, if the indices close or lower, then we might have to change our view. But otherwise, this can be the good level to initiate the longs.
Okay. Good level to initiate a buy. So in light of that, I mean, and would you do that the same for the bank Nifty? And in light of that Nifty call, are your calls today more bullish, Kunal, or are you doing a mix, or are you bearish?
Absolutely, Neeraj bhai. So on the bank Nifty front, as we just discussed, 49,900 to 49,650. Now I'm giving this zone of around 250-300 points because of extreme volatile nature of the market. So considering this, I think from here on, one can think of initiating all the buys. And my view for the market from here on is going to be bullish. So all three calls which I'll be sharing today with our viewers are going to be on the buy side itself.
That's good to hear. On the buy side, you want to tell our viewers what those buy side stock ideas are, Kunal?
Absolutely, Samina. So first is HCC. Now on the HCC, you can see that the counter is been in sideways consolidation since last 3 months. Consistently, it's holding on to these 35.5, 36 kind of levels. So keeping the stop of 36, one can initiate a buy on HCC. And the targets can be 42. That's the first counter. Second is IndusInd Bank, which started participating in the up rally in the recent times. We saw the first bounce coming in, and yesterday we saw the correction, but though it was not as deeper as the rest of the market, I consider this to be like a good buying opportunity considering the stop loss of 960. One can go long on IndusInd Bank and the targets can be 1000. And the third counter, which is again been the underperforming but recently participated, is the Tata Motors. Again, this counter saw a very good uptick, consolidating near the highs itself, keeping the stop loss of 760. One can go long on this, and the first conservative target can be 800. Mind you, in all three counters, one can trail the stop loss and hold the position if the market continues in the bullish direction.
Okay. Watch out for those. Now, just Sunny Agarwal, very quickly, are you in the buying mode, in the buying the dip mode, or are you in the wait and watch mode?
Again, good morning, Neeraj and everyone over here. So I think, again, we are closely tracking the provisional business update, and we believe the companies which are posting a very good set of provisional update, a case in point, Kalyan, Titan, in a jewelry space. So Kalyan is something which is on our radar. At the same time, we believe the rub-off effect will be seen in other jewelry players like Senco. So we'd like to add Kalyan and Senco in this current dip. Jubilant Foodwork, again, a very strong set of update, quarterly update from Jubilant Foodwork. So seeing that QSR as a sector is coming out of woods after the pain of last 2 years. So Jubilant Food is the one counter which we would like to keep on our radar. At the same time, on real estate side, Macrotech has posted very good set of pre-sales number. So Macrotech is on our radar. Among the banks, NBFCs would like to be selective. Case in point, Catholic Syrian Bank, Bank of Maharashtra, Bajaj Finance again have reported a very good set of quarterly updates. So again, very choosy in terms of buying on dips.
Okay. Well, speaking of specifics, right? Because it's a market which is going to be difficult to trade as an index, so therefore look at specifics. Well, watch out for Zomato, because Jefferies has downgraded the stock to a hold from its earlier rating of a buy. Harsh Johnson to give us more details of why is Jefferies doing this. Harsh, is it competition? Is it saturation? What is it?
It's a bit of, it's more of competition than saturation, Neeraj, but it's a bit of 2-3 factors playing out. I'll cover the first one. You've seen a very strong rally in the stock, and therefore they're trying to suggest that there'll be some amount of consolidation, at least in 2025. That's the expectation coming in. So that's point number one. Point number two is the competition that's coming in, and there is new competition coming in a strong fashion, and therefore there will be pressure with regard to margins as well as profitability. They're pushing back profitability. They've toned down with regard to the expectations, EBITDA expectations from the Blinkit business of Zomato for FY26 and 27. And both of those factors leading to tweaks in Blinkit's valuation per se, which is what is impacting the stock valuation that they are ascribing to Zomato as well. So that's point number 2. Aggressive moves by incumbents and entry of new players. Both of those factors will play out as competition ramps up. There is a threat to medium-term profitability, especially where Blinkit is concerned due to this competition. And they are worried on the rise of a quick commerce competition. So all of those 3 lines which they've written out point to the fact that the competition is going up and why they need some bit of EBITDA normalization over the next 2 years, which will likely impact the EBITDA numbers. Last off, just with regard to the multiple itself, they've cut the target multiple by half for Blinkit to 6 times, which is what has led to the downgrade, 275 being the target price versus earlier 335, upside just about 1% now.
Thank you for that, Harsh. That's Zomato and Jeffrey's downgrade coming in on the stock. It did see pressure in trade yesterday itself. Some follow-on selling may not be ruled out on back of that brokerage call. Sunny, what is the word on Zomato? And then, of course, Kunal, I'll talk to you about the technicals as well. But you want to first go at this, Sunny, on Zomato? What do you do? Do you use this current opportunity as a buying trade or a long trade, or is it best avoided?
I would like to add on dips because of this volatility, and the reason being that despite of increasing competition on the quick commerce side, the growth opportunity is pretty robust for all the players. So I think the pie is pretty large, whether it is in quick commerce segment or on food delivery segment. So I think yes, with the recent entry of Flipkart, there has been an entry of a deep pocket player. But I believe again there is a space for everyone to grow. So I think I would be a buyer in both, in fact, Zomato and Swiggy on any correction during the month of January.
So you would buy Zomato and Swiggy on correction. Kunal Rambia also with us this morning, is founder of The Street. Kunal, I'm just wondering if you have any take on a Zomato.
Absolutely. We have been discussing about Zomato on our channel since quite a long time, right? Because the trend was absolutely positive. Now, if we just go back and check the historical data, on 2nd of August, the counter was up by around 12%, and from 240, it went up to as high as 280 kind of levels. Now, that 240 level was tested almost 3 times by the counter, and that support was taken and the counter kept making new high. As of now, it's trading near 264. As I've always been saying, the trending counters have to be bought in the correction itself. So keep this level of 240 in mind. If the Zomato remains above 240, it's absolutely comfortable adding on dip. Because of panic, we might get an opportunity to buy near that support. If the counter closes below 240, then this entire view of last 2 years, which is the trending view, might just come to an end. But till the time, it's a buy on dip counter.
It's a buy on dip counter on Zomato. I mean, Kunal, I'm just wondering whether, you're seeing any further upside to some of those stocks that moved yesterday on the back of this virus scare. So I just want to pull up a Metropolis, for example, and Apollo Hospital, for example. Do you think that you'll see some profit booking today, or would you want to buy any of these right now and are seeing a longer, more bullish trend?
So again, we have been following trend consistently since last 3.5-4 years. If I just look at Metropolis left, the rally started from precisely from December 2023, where the counter stopped its downtrend, sideways consolidation, and gave a first breakout, and that level was around 1700. And since then, we are onto it. It's been last 3 to 4 months. The counter is sideways consolidating, but it's holding on to the support levels of 1970. So for now, our trailing stop loss on the position is 1970. If the counter falls below 1970, it's a complete exit. But otherwise, I think this trend might just continue. There is no major selling volume. In fact, yesterday, we have seen a very good positive volume on the chart with the counter going up by around 2%. So I think this is the ongoing trend which might just continue. The positional target can be 2550 to 2600. And the stop on this is right now 1970. So with that, one can even keep on initiating a buy at this level.
Right. Kunal, we've also got tech earnings that kick off, and I think IT has been showing some signs of holding up, barring yesterday, of course. Anything in the tech pack that you would buy? A couple of brokerages as well had long trades, in LTI, Mindtree, case in point. TCS kicks off the earnings season. Would you be brave enough to initiate a fresh long ahead of earnings?
Certainly not, Samina. Again, we have been discussing about IT peg per se in the past sessions also, right? Just look at Infosys. From 2nd September till now, this counter is failing to surpass 1980. There were 5 attempts done by the counter, but it was a failure, though it gave a closing for a day in between. But again, it slipped below that level itself. And yesterday's high was also 1975. Similar is the case with TCS. Just have a look at the levels of the historical times. It's not able to sustain near those 4,300 kind of levels, right? So though as of now, TCS has come down and it's near to the support, but I'll wait for some kind of consolidation before initiating a buy. The IT counters, which are near all-time high, one needs to watch out for 52 weeks high on the charts. If that's clicked in, that's going to be the first breakout sign and one can think of initiating a buy. Otherwise, for now, I'm just away from the IT. I'm just waiting for some more signs of clarity.
Okay. We'll slip into a short break. Stay on. Gentlemen, viewers, stay on too. We'll be right back with the pre-open session.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face.
Welcome back. Just about a couple of minutes for the pre-open session to go. I'm going to quickly pull up your implied, just to take a look at whether we will have a sustained reversal of trend. It might be difficult the way the market's mood is going on today. Kunal, Rambia, I just want to talk about a few ideas that we need to look at, and I'm just wondering if there is anything in the Nifty bank and banking space, the BFSI space, that you want to look at more closely. And let's hone in on an HDFC specifically. The business updates were less than exciting, to be fair, but it did not for the first half of the day crack to that extent. Do you think that HDFC Bank could be the dark horse in this season? And is that something that you would look at?
Yeah, specifically on HDFC Bank, the observation was that it gave a first breakout, all-time high breakout, that specifically in the first week of December, where the counter closed about 1800 and went up to 1880. Though it is right now in the correction mode, but the trend, which is open from May 2024 so far, is very positive. It's clearly making higher top, higher bottom, and it's considered to be the retesting of the breakout zone, which was near 1800 levels, and the previous breakout was 1700. So this 1700 to 1800 looks like a bargain buying opportunity to me. The stop loss on this entire view is around 1670. If the counter falls below that, then the breakout can be considered as a trap, and we might see the further correction till around 1500. But otherwise, this level seems to be the perfect level to initiate a buy. Now, can we catch the falling knife is a question. So for that, we have kept the reversal level of 1730. That's around 20 points up from the present level. If the HDFC Bank goes above 1730, then with the stop loss of the 1700 as a conservative one and lenient stop loss of 1670, one can capture the rally and ride the rally. I think the targets can be 1950 to 2000 levels.
Coming on HDFC Bank, the business updates weren't too impressive, but it seems like there could be an opportunity to make a quick buck on the stock. Well, Sunny, what is it that you're making of HDFC Bank and banking as whole, really? Business updates were rather mixed. We've had a handful of banks that have reported actually pretty solid business updates. You've also had, other businesses, so non-banking companies such as an Angel One that have come out with strong reportage. How would you place your bets ahead of earnings across this sector?
Again, coming to banking sector, Samina, I think again a mixed bag set of numbers. So if you look at a few banks like Bank of Maharashtra, CSB, that is Catholic Syrian Bank, Karur Vysya Bank, Bank of India among the PSU. So these are the few banks which has reported more than 12-13% kind of advances and deposit growth. So again a clear outlier. On the other hand, banks like HDFC, Union, or for that matter, South Indian Bank have disappointed in terms of advances and deposit growth for Q3. So would like to stay with the banks which are reporting healthy advances growth, and at the same time deposit growth is at least in line with advances growth, so that we know that the pressure on NIM going forward will be very minuscule for this bank. So again, if I have to pick among the recent updates by the bank, so I would like to go ahead with the Bank of Maharashtra, Catholic Syrian Bank. And among the NBFCs, the Bajaj Finance has again reported a very strong set of growth, more than 25% kind of advances growth. So I think Bajaj Finance is the one name I would like to keep on my radar among the non-banking financial services space.
So Bajaj Finance is the NBFC space bet. That looks interesting. I mean, I'm wondering what you're thinking about auto right now, Sunny, and let me come to you on that. Initial data from FADA is out. Auto sales surprised on the positive when the numbers from the factory gate came out earlier this month. But it's a bit of a mixed bag, isn't it? Would you look at autos, two-wheelers or passenger vehicles this year, or anything that you're finding interesting right now?
Again, within the auto space, there was a clear-cut surprising number from Eicher Motor and Maruti. So again, I would like to keep on my radar Maruti and Eicher Motor within the auto space. Mahindra and Mahindra continue to be remain outlier, both on tractor side as well as on SUV, that is a passenger vehicle side. So no doubt Mahindra and Mahindra is a first preference, and followed by Maruti and Eicher. And at the same time, what we believe is that auto ancillary players, which are basically powertrain agnostic players, a case in point Lumax Auto Technology, which basically supplies components to both the powertrain player, whether it is the IC engine or EV. So Lumax Auto is the one company. Again, one has to keep in mind that for Lumax Auto, Mahindra contributes more than 30% of the sales, and they have presence in there all the leading top selling model of Mahindra and Mahindra. So Lumax Auto, again, we have recently initiated coverage, and our price target is 857 with an investment horizon of 12 to 18.
Okay. You know, the other thing is, Sunny, I don't know if you looked at this this nod that has been given by BPCL for the MNGL listing, and the brokerage notes that we read, especially cities, seem to suggest that there is significant value unlocking that could happen for IGL. Now, is this, have you looked at it? Do you know about this? And is this a good enough reason to trade or buy into IGL tactically?
Sorry, Neeraj, I am not aware about development. Yeah.
Completely understand. Okay, I wonder, Kunal, where on the charts does IGL find support? Because it has been in a corrective mode, but there is a fundamental development which is positive. So is there a support area for IGL or not quite really on the charts?
So Neeraj bhai, again, on the IGL chart, if you look at the historical data from 2020 so far, this counter tested 330 marks almost 3 to 4 times. 3 times precisely. And on the higher side, this counter is not able to cross 560 mark. That's been almost last 4 years. Now, if I look at the recent development, recent bounce, actually it started from 310. It's right now at 425. The immediate support on the daily chart is at around 380. Because of the spike, the massive uptick, the stop loss is far away, the support is far away, that's 380. And the resistance is right now placed at around 450. So one needs to strategize accordingly. I think in the correction near 385, 390, one can think of initiating a buy. Then the breakout can be considered as 450. So for the momentum trader, if the counter goes above 450, it can be a good buying opportunity. But on a broader time frame, I think the sideways consolidation is on the way, and it's right now in between. So, you know, the risk reward for even the long is not really favorable for going absolutely positional on this.
Well, it's now time for a big brokerage. It's 9:05. Harsh is standing by with a report on the recently listed auto major Hyundai. Citi, I believe, has initiated coverage with the buy rating. Harsh, what is the brokerage saying?
Well, they see an upside from here and a strong one. They see 23% upside, 2250 being the target price. What they're saying is their thesis, or their initiating coverage thesis with a buy, suggests strong parentage one from the Hyundai Motor Company. Second is their diverse model lineup, including their focused strategies on SUV as well as higher ticket and more premiumized segments of the auto auto sales. In terms of the focus on premiumization, definitely a positive, because those are the trends that are playing out in the market as well. Wider sales and service network is the other positive that they see in Hyundai, and strong brand is also what they believe Hyundai has achieved. A potential upside from exports could well start to play out. Capacity expansion at the new plant should boost volumes from second half FY 2026 onwards. Are some of the other factors that they believe will play positively for Hyundai. Key risks here: elevated competition, relatively extensive related party transactions is what they mention, and the third part is regulatory risks. All three of those could well be huge risks. Now, their price target is largely based on a 22 times FY26 EV to EBIT. This is at a 5% discount to Maruti, of course, because Maruti is the leader of the pack. They also see that Maruti's market share is higher, and therefore they've ascribed a 5% discount to the valuation that they give to Maruti.
For that, Harsh, so it's a Hyundai over a Maruti for Citi at least. Well, we have with us Rahul Arora, CEO of Nirmal Bang Institutional Equities, joining in. Good morning, Rahul. Happy New Year. Thanks for joining us. How are you feeling about 2025? It's looking like a tough year for Indian equities. Not like the previous year was easy, but nevertheless.
Good morning, Samina. Happy New Year to you and the entire team and the families. Yeah, I think it's going to be an interesting start to the new year. We have a new president getting sworn in to the United States in a few days from now. We have the union budget in about 3 weeks from now, and then we kickstart earnings later this week. So I think there are a lot of moving parts. Add to that, while the geopolitics seems to be somewhat okay, there's no significant deterioration on that front, but I think news flow on the health front from China hasn't been too, or rather, let me put it this way, has been a little disconcerting for the markets over the last couple of days. So I think it's going to be an interesting 30 days. It's going to be very difficult to take a directional call. I think it'll probably be best to take a directional call, say, closer to the mid of Feb as to how the rest of the year pans out. But this is going to be one hell of a challenging year, I think, whichever way we look at it. And all the things that I said notwithstanding, just principally because I hope last quarter's results were not anything to go by, because they were probably the worst quarterly results in many, many years that we have seen. If we are able to follow that up with a good earnings season this time around, or at least better than what we had last time, we could probably safely say the market had found some flow. But if earnings continue to be bad in the wake of an uncertain US environment and uncertain China environment, then I don't know. Probably all bets are off as to what the market does then.
Good morning and a Happy New Year, of course, formally on TV. But here's the question. The updates that have come out thus far don't inspire the confidence, right? I mean, GCPL mid-quarter 3 gave an update about a weak quarter 3, and FMCG will likely dole. Banking numbers haven't necessarily been the best. Yes, there is an odd Bajaj Finance, but otherwise fairly quiet. Very likely we'll see not so great an earnings season.
I think you've hit the nail on the head, Neeraj. I think if you look at the composition of the Nifty today, you are almost, 40% BFSI, IT services is about 12-13%. Consumer will be somewhat similar. And if you add a Reliance to it, you're already talking about 75% of the Nifty. So I think when you talk about an earnings upgrade or a downgrade cycle, I think these 4 pillars of the market have to play very important roles. As you rightly pointed out, and in fact, we had put out a very detailed thematic recently which said that credit and deposit growth has converged after a very, very long time. And it's not inspiring too much confidence, because I think, credit growth has dropped down to about, depending on which month you pick up, because we put out a sectoral credit deployment report, it's hovering between that 11 to 12.5%. And if the economy continues to slow, then there is a risk of that slipping into single digits. I think you're bang on, Neeraj, in terms of the commentary that you're talking about from consumer companies. I think, even Hindustan Lever is struggling to give you 2-3% kind of volume growth. The only consumer companies that you're seeing, positive traction are consumer discretionary companies. I think you saw that in the commentary of Jubilant. We've done some challenge checks in the alcohol beverage sector. So I think there's some positive commentary coming there from hotels and aviation. But if you strip that out, I think core banking, core consumer is a bit of a challenge. We put out our ID sector preview, earlier this morning. Barring HCL Tech in the large caps and something like a Coforge and a Persistent in the mid caps, I think most other companies are probably going to grow at between 0.5% to 2% quarter on quarter. I mean, these are not numbers, Neeraj, that you'll want to pay 25, 30, 35 times. And for consumer companies, 40, 45 times valuation. So there is certainly a challenge as far as earnings is concerned. I think, Neeraj, I think the optical number is now less relevant. I think the market will cheer if, say, a 2-3% volume growth for Lever goes to a 5%. I think the market will cheer if a 10-11% credit growth was to go to a 13%. Optically, these numbers are bad, but they're still better than, the previous bad number, so to speak, the lesser of the two evils. But you're absolutely right. I think, Neeraj, when you're looking ahead to FY26, I think, the best of margin expansion seems to be behind us. The best of deleveraging seems to be behind us. So even getting a 15% earnings growth could be a bit of a challenge for the fiscal year that we're getting into. I think the only positive that the market could potentially hang on to is a positive budget. Like I said, the lesser of the two evils in terms of the result season, and perhaps maybe a rate cut before the fiscal year ends by the Reserve Bank of India. If these three things happen, at least we'll be able to say the market has found some sort of a floor in and around where we are currently. But all things said, I completely agree with your point that, given the commentary that we have seen, it's not looking all that bright as of today.
Rahul, hi, Tamanna here. So just looking at what the light is at the end of the tunnel or the silver lining, you're essentially saying it comes down to what North Block does and what the RBI does. Not so much demand consumption of the private sector at all. Then where is the bet?
So Tamanna, if I was to just break it down in a very simplistic way, right? If you look at growth, when you're talking about growth and you look at the formula for GDP, which is C plus I plus G plus X minus M. Now the X and M is export and import, as we know, but that can change so dramatically if Trump does something to tariffs, not only to China, but to India and other emerging markets. So at this point, to take a definitive call on X and M could be a bit of a suicidal call. And, we've seen the balance of payments and we've seen the current account deficit numbers that are coming in. A lot of that is being driven by gold imports that we are having. So, what is the stance that the government and the RBI takes in terms of gold imports? The point I was making to Neeraj earlier about credit growth, a lot of that also is for loan against gold. It's not so much against property and vehicles and so on and so forth. So I don't know so much about the X and M part. But you're down to CING. C we just discussed. Has a bit of a problem. Consumption, there is, barring discretionary, there is a problem. So you're down to investments and government spending. And I think, generally in India, private capex has lagged government capex. And I think that's why, most people, I'm sure that you also have spoken to over the last 3 months, would have told you that the onus squarely lies on government spending from here. It's because the other four legs are not aspiring too much confidence that the onus has come back on state and central government to lead the capex. Now, whether they do it through infrastructure, irrigation, ports, defense, railways, etc., remains to be seen. But I think that will probably have to kickstart, and which is why we think at our brokerage house that even though valuations, fluctuate very widely in these PSU government-related stocks, it may not actually be a bad theme to be playing, including something like a defense, because the order books are there. Even if these guys just execute the order backlog that they have, these guys can grow at 20-25%. That is the strength of the order backlog. So I think consumer discretionary, government capex related stocks could probably be two places that we could certainly look to hide. And within consumer discretionary, like I said, hotels, Alcobev, aviation would probably be our preferred areas.
Okay, 10 seconds to go. And by the way, remember, Nirmal Bang was amongst the first ones to downgrade defense names. I'm hearing Rahul say that defense could be a pocket to hide in or watch out. So keep an eye out on those stocks as well. We'll take in the top call from Kunal Rambia post-market open, because the markets are starting. We have a tick of green, exactly in line with what the implied open was suggesting about an hour ago. Bang, everything participating, if you will. I wonder if IT is participating as well. In fact, 0.5% or thereabouts. So the strongest of the large indices. Mid caps 0.5%, small caps 0.5%. Let's see if this is sustainable or does this get sold into. In fact, that is something we'll ask Kunal Rambia immediately as well. Sea of green, very little red. The one you can actually lay emphasis on is ONGC. A second big brokerage after Jefferies, CLSA, to upgrade ONGC. And that stock is revving up, 2.5% higher in trade. Somewhere in the next 15 minutes, we'll tell you what CLSA's rationale is, but that's the top stock. Some gains to consumers' names, Titan, Tata Consumer, doing okay. HCL Tech, about 1.25%, Tech Mahindra. But effectively, just that, a tick of green, almost everything doing well. ONGC and BPCL with reason. Just one last point on BPCL, viewers. Remember, the way IGL benefits by virtue of MNGL listing, so does BPCL, because BPCL is about 22.5% stake and it has given the in-principle nod for listing of MNGL. So I think those two, with some reason, active, but nice to see a bit of green.
Relief to see a bit of green, I would say, Neeraj, after what was a tough day yesterday, 0.5% up on both the Nifty and the Sensex. The broader market's also not doing too badly. Let's just pull up the mid-cap and the small-cap indices before we go to the sectoral heat map. Better recovery there, in fact. 0.75% on the mid-cap, the small-cap nearly 1% up. But remember, the mid-cap had lost the most steam yesterday. The entire index was down nearly 2%. Let's pull up the sectoral heat map very quickly for you and tell you what's working. The story is about oil and gas this morning. ONGC, BPCL, both doing well. The energy stocks also, obviously the Nifty Energy tagging along, as are the CPSE, Nifty CPSE, that's the public sector companies. Only the India VIX in the red, and that's great. So fears have been calmed. I think enough information out there in the last 12 hours or so to explain that this new virus is not as deadly as one would have thought. It's not going to lead to any kind of a situation where, you have economic activity stalling. I think that's what you're seeing reflected on the screen this morning. Specific stocks that we are tracking today. Let's look at Info Edge. Positive business reports, positive business updates for the company, and pretty stellar quarter is what it seems to be looking at. So Info Edge was doing very well pre-market, obviously seeing some hit right now, about 3% down. Nuvoco Vista is the other one. They have a cement acquisition, of Adraj cement acquisition. That stock about 2% up. ITI has been running and was running in the pre-open session. Once again, about 4.5% up. I want to pull up Zomato. Jefferies has downgraded Zomato to a hold from a buy. Stock now seeing quite a hit. In fact, they've cut the EBITDA outlook for Blinkit quite aggressively, about 5% down on the Zomato stock. Let's look at the auto pack. FADA numbers out today. The two-wheeler sales have dropped 17% year on year. And you're seeing a spot of red over there. I was wondering if you can pull up TVS as well. So two-wheeler is not doing too well, but auto is okay. Virus fear impact. These stocks were running today. Has that eased? It's an interesting gauge to see right now. Rainbow Children's Hospital is up 1%. Is it because this virus is expected, unfortunately, to impact smaller children more? Apollo Hospital was running yesterday. It's cooled off. So is Metropolis. So it's very clear that the street is now understanding that this is a virus with a limited impact and nothing too much to panic about. I don't know if that gives us hope of this rally sustaining today, Samina.
Looks tough, Tamna, but for now we'll just enjoy what we have, which is a little bit of green on the screen. The street's still concerned about so many factors that have been weighing on it in the last couple of months now. Well, a quick check of what is moving beyond what Tamanna and Neeraj have indicated. On the sell side, Zomato is the sell call of the morning, and so is InfoEdge. InfoEdge business updates were looking okay, but I don't think the street seems too impressed by what they've seen. The stock is down 3%. Easter Planners, which was up and hit upper circuit in trade yesterday, is down about 20% as we see it. You've got WeGuard, 361 WAM, Blue Star, Adani Wilmar, Westlife. Those are a few handful losers beyond the ones highlighted already. On the buy side, Aegis Logistics is up 6.5%. Intellect Design is up 6%. Oil India is looking good. Biocon is up in the bar, and we'll go to that management in just a minute from now. ONGC, UTI Management, Just Dial, CRISIL, KFinTech are some of the other big gainers in the session. So no real theme emerging just yet. What you're seeing is a little bit of broad-based movement upward after a broad-based sell-off that the street had witnessed in trade. ONGC is the stock of the morning on back of what CLSA said. CLSA has a high conviction outperform with a target of 360 rupees, and that's what is giving ONGC a much needed bump up. They've also said the recent production ramp up at KG 98 has raised audience confidence, increased gas prices, realizations to become visible in its Q3 earnings. Rahul, that, of course, is the ONGC story, and you've got a whole bunch of other names that aren't doing too badly. But I want to continue talking to you about valuations and earnings, right? According to Bloomberg, 433 stocks from the NSE 500, for which earnings estimates for FY26 are available. A staggering 273 are trading at P multiples which are north of 25 times FY26 earnings, and another 85 are hovering in the 15 to 25 times range for FY26. Now this is stretched, is what I would think, right? No matter how well the next quarter is, valuation still not showing signs of easing, in my opinion. Would you agree? And would you then wait for valuations to become a little more acceptable before you make any sort of considerable allocations?
So there's two parts to that, Samina. One is that the reason you saw the stock price reactions at the end of the previous quarter's results is because most sectors and most stocks in India were trading between 1.5 to 2 standard deviation above 3 and 5 year means. So that was the one consensus call that everyone had, that valuations across the board were expensive, and that's why you saw the exaggerated sell-off. The second point to that, Samina, is despite let's say the worst of negative flows or news points that you have around a particular sector or stock, the liquidity in the market is so much, and this is not a today phenomenon. I'm sure you're tired of hearing about it as well. This has been the case over the last 4 or 5 years, since the low of 7,500 on the Nifty during the lockdown, that every quarter when you have funds or foreigners making their adjustments, you are finding that the pressure on quarterly performance has increased from a fund management standpoint as well. Obviously, there have been certain, regulatory changes as far as mutual fund managers are concerned, where some part of their salaries are locked into their funds as well, which has increased the pressure on performance and has probably made the horizon a little shorter in terms of monitoring it. So, the famous QSQT that we used to talk about with respect to earnings, that has actually come into the fund management industry to some extent as well because of the pressure of performance. Now, what happens is, I think those days where you saw, major derating of stocks, on shallower liquidity, I think are a thing of the past. Today, if you have a good quality stock that's down 15, 20%, I don't think the market is waiting for much more in terms of correction, because they're like, agar main nahi le lunga, koi aur le lega, and they don't want to miss that 5-6% of alpha on a particular stock. So while you are seeing corrections, and you're probably seeing more time corrections than absolute price corrections, a classic example, like Neeraj was talking a little while back, we downgraded the defense sector. I remember within 3 months of us downgrading the sector, while the stocks were down 50%, they rebounded 50% in the next 1 month. So I think that's probably what's playing out in the market, is this fear of losing out if you wait too far on the sidelines. And that's why cash deployment is happening. Samina, the one very important thing is, for a lot of first generation people who entered the market post 2020, 2021, they've not seen a meaningful correction in the market. And to be fair, I know stocks have corrected in a material way, but you can't really call a 26,500 Nifty down to a 23,500 Nifty a correction when you had a Nifty go from 7,500 to 27,000. So you've had a Nifty that's gone up 4x and you're down 10-15%. I understand we as human beings have a recency bias and we don't look at how much money we've gained in a rally, but we tend to look at how much we've lost from the top. But I personally think that despite the challenges that we have, the liquidity in the market will provide a support, which will be an optical illusion. But, I guess that's what we have to live with.
Okay. Well, Rahul, may not be the best of the year for making money. Maybe a good year to inculcate some discipline, I guess. But thanks so much for bringing that to us. Really appreciate your time this morning.
Thank you so much, Neeraj. Pleasure.
All right. Well, the market's 0.5% or slightly above that higher. Sunny and Kunal, to you, both of you. And thanks for waiting by patiently. Kunal, I'll come to you first. Would you sell this rally or would you not do anything?
So Neeraj, it's always great to hear the other voices also on our channel. Coming to this bounce, as I said, it's actually from the support level itself. I'm very comfortable buying. And the counter which I have shortlisted just now is the Reliance itself. Now see, this counter is not falling below 1210 mark. It's been almost 3 months again. I think this can be a good buying opportunity. Keeping the stop loss of 1210, one can initiate buy on Reliance. And the targets can again be, the previous highs, which are 1260 to 1275. That's the first counter which I shortlisted. And the second is the Hindustan Lever. I think this counter is again starting from extreme low levels. It actually retested the breakout zone and it's moving up again. So HUL future is right now trading at 23.95 with the stop of 23.75. One can initiate a buy, and the positional targets on this can be 24.60 to 24.70. So these are the two large cap counters which are shortlisted, along with HCC, which is anyway doing good as well.
Would you go along on the Nifty, Kunal? I mean, if anyone watched our closing show yesterday, Hemin Kapadia, at the end of a terrible day, stuck his neck out gingerly and said, a buy on the Nifty at the low of yesterday. That call
Wonderful.
Seems to have worked out. What would you say right now, Kunal?
So yes, absolutely. This is very comfortable level. If someone initiated buy yesterday with the stop below yesterday's closing, one can initiate a fresh buy also and hold on to the position. I think 23,900 to 950 is very likely. Because of this support zone, I expect the bounce to continue.
Okay. Sunny, oil and gas seems to be the main piece of the morning, right? So, I don't know if we spoke about ONGC, but if we haven't, I don't think we have. Are you constructive upstream oil, ONGC? Are you constructive maybe a BPHP IOC? Because the marketing margins in Q3 will look solid, and therefore for HPCL, that's a bit of a trigger as well. What do you feel about this pocket?
Yes, definitely, Neeraj. Compared to Q2, I think Q3 numbers will be far better for both upstream as well as downstream companies. Especially for downstream companies, so we have seen Singapore GRM has bounced back from a lows of $1 to $2 to currently trading in the band of $4 to $5. So definitely, I think a top pick among the oil marketing company will be HPCL. On the top of that, there is a talk in the government that the subsidy burden pertaining to LPG, that is something which will be compensated by the government maybe in a coming quarters. So that will again add a catalyst to the earning for oil marketing company. So I would like to remain positive on HPCL among the downstream company. Among the upstream company, the no-brainer definitely ONGC is where we have, where the production is likely to go up for the gas. That's a clear-cut topic as far as upstream companies are concerned.
All right, thank you so much, Sunny and Kunal. Great as always to speak with you. Let's hope this green on the screen sustains at least for some time in the market. But one pack which is really moving, and ONGC among them, has emerged as one of the top Nifty gainers this morning. This is because of a CLSA upgrade to the oil and gas major. Mehika is telling us more.
Yeah, so CLSA has done its upgraded ONGC from an outperform rating to a high conviction outperform rating. The brokerage has also hiked the target price for the upstream company to 360 versus 330 rupees earlier, and this puts a potential upside of 41.2%. Now, in terms of the view on ONGC's business, well, the recent production ramp up at their KG98 block kind of raises confidence for the company's ability to meet its peak production targets, what CLSA is saying. They also saying that the increased gas price realization, this isn't regarding of the ONGC's new wells getting a premium pricing in terms of the fixed pricing. This the results of this will be visible in Q3, and also the removal of windfall taxes will allow ONGC to have higher crude realizations above the $75 dollars per barrel mark that the windfall taxes were previously capping the realizations on. CLSA has also raised the FY25 and FY27 EPS estimates by 2 to 8% because of these factors, and it's also noted that ONGC is currently trading at a material discount to its peer average, and this comes despite multiple growth triggers for the company.
For that, Mehika, ONGC doing well this morning, and the entire oil and gas pack actually. We'll get a more detailed report on the IPO node, which has BPCL up in the green as well. So it's not just ONGC, it's BPCL as well. But let's now take stock of Biocon Biologics. It's been a year since they've become a global biosimilar company. I caught up exclusively with Shrihas Tambe, MD and CEO of Biocon Biologics, and here's what he had to say on the growth outlook.
It's been a great year. Overall, I would say, stepping back, not just the last quarter, which you referred to, which was an amazing way to end the year. We couldn't have had a better way to end the calendar year that we did, with the kind of approvals and the recognition of all the effort that our teams have put in to work with global regulatory agencies and setting us up in a very nice way to get to the next calendar year. So I think the end of the year was good. But having said that, the year itself, Tamanna, has been a very, very eventful year for us.
Now tell us why. What do you think has been the biggest challenge, and what has been the biggest achievement in your view?
I think the way I would see it is that these are two coins. These are two sides of the same coin, whether it's the challenge and the opportunity. And we've had quite a few of those at Biocon and Biocon Biologics in particular. The year that went by was another eventful year. It's really transformed us into a truly global, multinational, multicultural, global company, which is amongst the top 5 biosimilars companies now in the world. We used to be known for our innovation, which we continue to be focused on, which is a science and operations company, or development and manufacturing, as they would say, to now having got through the acquisition that we did in November of 22, a very strong commercial engine. So we are now a fully integrated player, one of the top 5, as I said, and in over 120 countries, where through our own self-led teams as well as our partner-led teams, we are in a better position to reach out to more patients and serve them with these high-quality products that we are developing and manufacturing at Biocon Biologics.
Let's talk specifically about the 2 approvals that have come in, one of Yesentech and Yesafili. What are the launch plans? What is the kind of timeline for this? What can you add, Mr. Tambe, in terms of the market size and revenue addition that you expect from these 2?
Yeah, and I must first compliment you for the way you pronounce them, because that's the exact way to call them out. The year is to look forward to the Affili and Intech. These are the 2 products that we will be looking to launch in the coming year, and we have been able to navigate the IP landscape. So you will see us bringing these 2 products, which are focused on debilitating diseases, one in immunology and the other one in ophthalmology. So the Yesentech product launches in the US in February of this year. It also has a global launch plan, because we also will bring it to patients in Europe and other parts of the world in a staggered manner. And we'll also bring Affili, which is the ophthalmology product for certain very debilitating conditions for patients where the injection is an intravitreal injection, so it's injected into the eye. And these are products that we are very proud of, and we'll bring those to different countries as we navigate the IP landscape. The first one will be, of course, Malaysia and Turkey, and we'll bring them into Canada shortly. So a lot of interest and a lot of excitement about these products in the months to come.
What are the broad timelines that you can share with us, Mr. Tambe? And I'll reiterate my question on revenue contributions that you're expecting in year one.
Yeah, as I said, the timeline it starts right away in this financial year for Intech, which is starting in February of 2025, which is in this quarter. So you will see that starting to make a difference right away. And you will see, Affili, which will start probably in the first half of next fiscal year. So that's how we have phased these launches. But in addition to these two new launches, Tamanna, there are several other products that we're launching as well. The year that went by saw 60 product launches in different countries for products that we had sold in the US and Europe before, but we launched them in 60 different countries. So it's a very busy time at Biocon Biologics. So that's the first part of the question. The second part was you asked about the revenue contribution. We've refrained from giving specific product related revenue contributions. But I think what is very, very important to note is how we've grown the business. If you just look at last year, we've had a 58% revenue growth over the previous year and a 64% growth in EBITDA. So it's not just been a sales increase, it's been a very profitable sales increase. That's when you call it growth. A 25% EBITDA margin with that kind of growth where you're over $1 billion in revenue, I think bodes very well as we get into fiscal 26.
Well, the stock of the day is Biocon. It's already up 4.5%. To catch an exclusive conversation only on NDTV Profit, where Shreyas Tambe is in conversation with Tamanna Inamdar. Catch it at 12:30 p.m. on the channel. Well, moving on from there, one stock that is in focus in the management of who we will be talking to shortly is Gensol Engineering. They, of course, are back in action with their recent solar PV project win in Gujarat. Mika joins us with more on that. Mika, you want to tell us a little bit more about this 1,061 crore solar PV project in Gujarat, what it means for Gensol, and of course, what it means for the outlook and guidance?
Yeah. Gensol Engineering is engaged in the business of solar consulting and EPC, as well as diversifying into EV manufacturing and EV leasing. Now, the latest order win is a 275 megawatt EPC contract for a solar PV project in Gujarat. Now, the total bid value is around 1,061.97 crores, and the contract also includes a 3-year portion for operation and maintenance services, which is something that we've seen in most of its EPC contracts. Now, in terms of revenue visibility, as per the company, they do have 8,300 crores of revenue visibility over the long term, as this is as per their Q2 investor presentation, that this comes from revenue from renewables as well as battery energy storage projects spanning over the next 12 years that the company is focusing on, as well as solar power generation projects over the next 25 years.
Thank you, Mika, for that. That is, of course, Gensol Engineering that we're talking about. We have with us Anmol Singh Jaggi, MD of Gensol Engineering, joining in. Anmol, good morning. Thank you very much, Mr. Jaggi, for joining us. Firstly, congratulations securing a 1,061 crore solar PV project and the 897 odd crore NTPC renewable project. Firstly, can we start with you providing us timelines for the execution of these contracts?
Yeah, good morning, and thanks for having us. The two projects that we have won are basically projects which are going to get delivered in about 18 months timeline. Solar projects of about 1,000 crore plus in that range are generally the timeline is between 15 to 18 months to deliver them.
Okay. What is the expected margin profile for these orders and how do they compare with your existing solar EPC projects, sir?
So on the margin front, we have kept margins stable. Our existing projects are also between 12 and 15% EBITDA. And these projects also will deliver EBITDA of 12 to 15%. So we will have a similar margin profile on our previous projects that we have been doing and on the two large wins that we have had recently.
Right. Mr. Jaggi, how are you positioned to secure more sort of large-scale contracts? What I want to understand is, are there any upcoming tenders in the pipeline that you're bidding for that we could anticipate and expect announcements on this quarter?
So we continuously bid. We have a large bidding pipeline. In fact, the whole renewable energy sector is doing extremely well. And in this, there are a lot of tenders which are coming out. Not just tenders, there is a lot of action on the private side also, where a lot of private IPPs are setting up capacities and they need good large EPC contractors like us to execute for them. So I think we have a very strong pipeline which we are bidding for, and I am very hopeful that you will hear some more good news in this quarter.
What is the outlook for the end of the quarter, Mr. Jaggi? And what are you looking at ending the year with in terms of the order book size?
So currently, I think our order book, including energy storage, is about close to 9,000 plus crores. I think we will be able to add a couple of thousand crores more to our order book before the quarter ends.
Your unexecuted order book currently stands at 3,400 crores with 200 contracts under award. You want to tell me the timeline for execution of this, and when will this be revenue accretive? Will we see it in this quarter? Will it be FY26? Just help us understand that.
Sure. So I don't, from the current order with very small quantity of revenue will be booked in the two orders that we have won in the last 1 week. Very small quantity of revenue will be booked in. Majority of the revenue from these two orders will be booked in Q2 and Q3 of the coming year. So from these orders, we do not expect any large revenue increment to come in Q4, the quarter in which we are. But our existing order book is very healthy, and we would do a good show when it comes to our quarterly results. I think on a whole, Gensol has been growing 60, 70, 80% year on year, and we will continue to deliver those kind of numbers.
Phenomenal. Your net profit has grown 52% to 50 crores. But I don't know whether I missed it, but possible to quantify the expected revenue contribution from the unexecuted order book for this quarter and FY26 as well, sir?
So I think if I remember clearly, last year, Q4, we did 400 plus crores revenue. And like I mentioned, Gensol will continue to grow between 50, 60, 70%. And this quarter also, we will do 50, 60, 70% growth over the last year.
What is the split between revenue visibility between renewables, battery energy storage, and solar power generation?
So battery energy storage has close to zero contribution for this year. The contribution from energy storage will start from the coming financial year. And on the renewable side, I think today it is primarily, like I mentioned, the 75-80% of our revenue is coming in from the solar business, and about 20-25% of our revenue comes from the EV leasing and EV leasing business. So these are the two business segments that we operate. Energy storage, you would see perhaps the revenue coming in from next year, from FY26.
You know, Anmol, it's been phenomenal for you and the company, right? Recently placed, and your run rate in the first half of FY25, your revenues grew 49%. Now, is this a one-off? Is this sustainable? Do you feel like this run rate could continue for Gensol over the next 2 to 3 years?
So we have been delivering not just in H1 of FY25, but if you look at FY24, we delivered very stellar numbers. FY23, we delivered stellar numbers, of course, coming from a smaller base. But as our base continues to grow and the order book is extremely strong, and we have some fantastic wins, and the sector has some fantastic tailwinds, I think this does not look to me like a one-off, but it looks like a very structural story where renewable energy is becoming mainstream, and companies like us and others who are in this sector stand to benefit from it.
So margins have significantly improved. Now we are standing at 25.8, I understand, from 16.1 a year ago. What is this? What is this margin expansion about? Is it because you're managing to win orders at a better margin profile? Or is this more optimization internally that's leading to this? Or is it simply economies of scale? And of course, looking into the next couple of years, can we expect margins to expand further, maybe even inching up all the way to 30%?
All three of the factors that you mentioned, one, of course, is economies of scale. Doing a 1,000 crore project, doing a 1,000 crore revenue versus doing a multi-thousand crore revenue, of course, gets you more economies of scale without any doubts. Two, on the client side also, there is a good pricing power that EPC contractors now have. And if you look at quality EPC contractors in the renewable energy space, there are very few, and we are one of them. So you would see that we are doing there is pricing power that contractors have. And three, I think our procurement team is doing a brilliant job in getting the best quality materials at the best quality prices. So we are seeing all three contributing: internal, external, as well as economies of scale. And on the margin side, I think I don't expect us to increase further margins over here. We'll be very happy to maintain our margins at these levels.
And Mola, also, of course, the going is good and it looks healthy and the outlook looks positive. But I must ask you, right? I mean, you're also playing catch up in some ways because you're growing so significantly. And more often than not, the back end takes some time to play catch up. Are you at this stage anticipating any overruns or delays, cost overruns, delayed payments, delayed deliveries, anything that we should be a little more mindful of as we look ahead? Or anything that you're preparing for internally?
No, absolutely. I think while we are growing at a very significant pace, it is important to build up the right team, and we have had some very significant team additions. Shilpa joined us as the CEO for the EPC business. We have had a great CFO joining in. So I think the combination of our great CEO and great CFO along with the execution team is taking us to near heights. While we grow larger, we have to, of course, be having decent risk management in place, and as a team, we are doing enough risk management, whether it is on customer size, whether it is on customer payments. And you look at this, that if you look at the first 6 months of the year, actually our operating cash flow is greater than our profit. So we have been very good in collecting cash from customers.
And Mol, I know you alluded to this at the start of our conversation, but while I wrap this conversation up, any sort of closures, any sort of orders that are close to closure this quarter that we should be keeping an eye out for? It's always exciting to know.
We are bidding well. We are in a very good space, and Gensol will surely win some few more orders in this quarter and the coming quarters. Specifics I would want to avoid, but surely these are not the only two orders that we have won. There are many more which are coming in.
We are excited for you. Congratulations, good luck, and hopefully 2025 brings with it a lot more success for the company. Well, we'll do a little bit of a detour and move from a hardcore EPC company to what's happening on the consumption side. The grand spiritual festival Mahakumbh Mela is all set to take place in Prayagraj. This time around, it is celebrated every 12 years, which draws millions of pilgrims from across the world. Uttar Pradesh government has made the biggest arrangements to make this Kumbh successful one. Anushi joins us with more on this. Anushi?
Hey, so it's one of the biggest festivals that we'll be watching forward in 2025, Mahakumbh 2025, all eyes over there. It's the world's largest public gathering in terms of where the spirituality lies as we speak. Religious pilgrimage that is celebrated 4 times over a course of 12 years. This is for Kumbh Mela. What makes this more special is the Mahakumbh 2025, which happens once in every 12 years. So something all eyes, all devotees would be here in Uttar Pradesh, and that's where our focus would be. Now, this is expected to take place in Prayagraj starting from January 13 onwards, which will go on for the next 45 days and end at Feb 26, 2025 on the occasion of Mahashivratri. So what next can we expect from this? How will this contribute to Uttar Pradesh government, the economy and all? The government is expected to spend about 7,500 crore. This is as per the reports. A lot of arrangements being made, which we will discuss later on. If you are to see the tourist influx expected from this in 2013, we saw about 12 crore of devotees in this. 2019, this number almost doubled, 24 crore. And 2025, the expectations is of 40 crore of devotees which are expected to be a part of this Mahakumbh Mela 2025. Now, how this would result in the benefit for the company? This is expected to generate revenue of around 25,000 crore for the economy. This entails not just on the business side, but even in terms of employment generation and other festivities that are going to be made. Now, what should we be focusing on the stock specific side? Firstly, all the tourism stocks in focus. This includes Thomas Cook, Ease My Trip, Yatra, Rate Gain, and Genesis International. This is on the occasion of the mapping that is going to be taking place. Next slide, we have the hospitality stocks in focus. Here, IHCL is the player emerging. So Prayagraj is the destination wherein this Kumbh Mela is going to be held, but the adjacent markets, Ayodhya and Varanasi, are on the drivable distance, so these are supposed to be benefiting out of it. And so Taj Ganges, which is owned by the Benares Hotels and IHCL as an arm, can be a beneficiary of this move as we speak. The next bracket or the segment in focus that could be benefited from this is the food delivery apps that includes your Zomato, Swiggy and IRCTC. Even the railway and the aviation sectors are something that we should be watching forward for. We have the names of IRCTC joining the list again, RVNL in focus, and Indigo is another stock in aviation side. If you look at the rates also from Mumbai to Allahabad on those, we are looking at ticket prices faring above the 20,000 levels on January 12th, the day before this event is expected to start. So a lot of focus has been drawn here. If you look at the arrangements that are being made in terms of where this is, even the security stocks, they are going to be installing more than 23,000 of CCTV cameras to ensure that there is safety maintained. SIS and Allied Digital is something that we should be focusing on. So overall, all these segments are in focus on the back of this Mahakumbh 2025 that we are looking at, and something that we should be looking forward to from Jan onwards.
Hey, big event there. Thank you for that very comprehensive look, Anushi. And it's an interesting way to look at the Mahakumbh, because we usually see it, of course, as a religious event. It is a huge tourist magnet as well. People come from all over the world to experience what happens in the Mahakumbh. But to get a sense of what the business and the economics of it is, I'm joined now by Preeti Satyanarayana. She's President, Ease My Trip, and Prashant Priyani, Vice President of Institutional Equity Research and Sector Lead for Agri Inputs, Sugar and Hotels at Elara. And I'm coming to you first, Prashant, because of a note you guys put out recently on Kumbh, and you also added Coldplay. And let me start with that broad brush sort of events-led growth that we're seeing. While we're talking about concerns about consumption, economy, etc., the fact is that wherever there are big events, there are people coming, and the local sector is booming.
Right. So because of a lot of MICE events that happens in H2, we see a decent amount of business demand as well as MICE-related travel, which drives growth for the industry. And right now, it is also a fact that because of the kind of places or convention centers that we have in Mumbai, in Delhi, these kind of convention centers of such capacity and such quality were not there previously. So now with these convention centers coming in, we attract a lot of events which were not happening of that scale previously in India. So that is an added advantage. So I think Q3 and in particular Q4 attracts a lot of these MICE-related travel, which benefit all the hotel and travel companies.
Okay, so just let me get a sense of what the business perspective is. Preeti, just let me talk about Kumbh first. The overall view is that perhaps not too much tourism in terms of flight bookings, in terms of hotels. Maybe this is more train travel, maybe more temporary kind of structures. Is that really the fact? What are you seeing on ground?
Okay, let's understand Mahakumbh 2025 first of all. So Mahakumbh 2025 is coming once in 144 years.
Yeah.
The whole planetary cosmos concoction of the Jupiter, Sun and Moon is in this period. So it's a belief that whoever does the holy snan at the Triveni Sangam is going to be completely blessed and maybe moksha. So for your information, is just not the IRCTC or the train. We have large bookings in the aviation. We have large tourists coming from international. Ease My Trip has done the luxury tents. We are housing people to very large numbers, not only from India, but also from international and all age groups. So you might be wondering, it's only a 50 plus thing. No, the youth are very, very anxious to do the Holy Snan in the Triveni Sangam, and we're booking all kinds of age groups in large groups to make sure that they do the Holy Snan at those Snan dates.
So what does it mean? And thank you, Preeti ji, for putting that into perspective, that this is not the regular Kumbh. This is a once in 50 years event. It has a wide interest, and a lot of people are coming from all age groups. I'm just trying to understand the economic aspect of it. What are the kind of upticks in bookings, for example, you have seen on your platform?
Right. So we were actually pre-arranged. We created this whole luxury tent, the Akhada, and we tied up with multiple other akhadas who are doing Havan and special Havan. And we have large numbers coming from South India. We have numbers coming in from the North, from USA, from UK. So if you look at the number perspective, almost 40% of our booking are the youth in the age group of the 30, 35. And then we have about 20% of our booking who are the senior age, who are staying there for a prolonged time, like 40, 45 days doing prayer only. And about 30% of our people who have booked with us are there for some special snan date and special puja dates. We're also housing people for special yagna and special akhadas with the Ayurveda teaching, and to meet the gurus and the sadhus. So it's a very varied method of the holy connect, where each one is coming for their own purpose, each one is coming for their own moksha purpose. So it's really mixed, and the numbers are large.
Okay. Now, Prashant, I was reading some of the things that that probably you also believe could happen, in that it's not just about the influx of devotees and tourists in Prayagraj, but adjacencies as well, which will have a tremendous benefit. So in some sense, Prashant, I would love to understand from you, what's the benefit of for the ecosystem in terms of, let's say, percentage of annual revenues, if you will, or some context to what this could mean? Because it's one thing to say, oh, hotels will benefit. Yes, obviously. But two is, what kind of benefit comes in through an event like this?
See, for this particular Kumbh, while it is a 45-day affair, a lot of preparation goes on, maybe say for a month or two before the event starts. And so the demand not only kicks in from January or from the day first of Kumbh, it may be a month or two back as well, from where we can see the actual influx of demand coming in for the hoteliers. Now, this is point number one. Point number two, while this is a very location-specific demand for pan-India hoteliers like IHCL or EIH or anyone, it may be demand for one particular hotel. But for one of the subsidiaries of IHCL, which is your Banaras Hotels, another listed company, for them, Taj Ganges is they are a 2 or 3 property hotel only, out of which 2 are located in one premises of Varanasi. So just to pinpoint on a very stock specific, which can have a major benefit, it could be Banaras Hotels, because it is a very location specific company. And for them, we have seen Q3 also driving rates for that particular property higher by around 20% year on year on the OTAs. And this was for the month of October and December, where we have not even seen the event kicking in. So in Q4 also, at least for the month of Jan and Feb, we can see a decent ARR growth for that particular hotel or the company as such as well. So that will drive the demand for Banaras hotels. And in terms of financial impact, it will be more in Q3 and Q4, where because of very good ARR growth, we can see most of it trickling down to EBITDA as well, and then further down to profit. So H2 for that particular company may see a very good growth.
You are talking about Benares Hotels, right?
Yes.
Okay, and Benares Hotels at 8,300. Of course, remember viewers, it's an illiquid stock, up about 1%. I mean, relatively illiquid stock. So keep that in mind as well. Okay, aside of hotels, Prashant, very quickly, anything else that sees a material benefit? I mean, which might be having some listed space repercussions? Very quickly.
So stock specific, I would restrict myself to hotels only because that's the sector which I track. But I think air travel, rail travel, and as your colleague mentioned that before the start of this conversation, food delivery companies can also benefit from it.
You know, Preeti ji, we spoke about the Mahakumbh and what Ease My Trip is doing for Mahakumbh specifically, but I just want to get your view on how big a factor for travel overall have become the MICE segment or events overall. I mean, we've seen that with concerts. We're already going to be seeing a rush with Coldplay. The whole of 2025 is packed and lined up. Are you seeing that as a big segment growing forward, and what is the kind of potential you're tracking?
So as we're looking at Mahakumbh in this particular discussion, I would want to come back to spiritual tourism. For giving emphasis on spiritual tourism, Ease My Trip has launched a special vertical, Easy Darshan. So Easy Darshan has come in being almost a few months before the launch of Mahakumbh. So we prepared ourselves, pre-arranged ourselves with the luxury tents, with the food arrangement and all of that. And yes, coming to MICE, as per your question, MICE and the other segment is also attracting spiritual tourism because we have a lot of youth going to the spiritual sites, like the Ujjain Mahakal, like if you look at down south, you have Kumbakonam, you have the Rameshwaram. And for your information, we're doing the large groups like the MICE for these sector as well. And Mahakumbh also is attracting large groups, so you could also consider that as MICE. So Easy Darshan of Ease My Trip is the one who's done the special arrangement to ensure the complete comfort and the reason of fulfillment of the tourist visit.
By the way, just hang on, I just wanted to mark the new kid on the block, 22%. So really not a dramatic listing for Indofarm equipment. Usually companies which would be subscribed so heavily would see some massive upticks. This is 26%, not a bad listing. Nothing as dramatic as maybe what the subscription would have made you believe. But it's a successful listing nevertheless, so we'll watch out for Indofarm equipment and what they do in the times to come for sure. 27% and counting. So it's a stock which listed at 22% and then is rising as well. So bear that in mind. But Tamanna, interesting that once in 45 years, multiple avenues to benefit, and not just for the period of the Kumbh Mela, but pre, maybe a couple of days post, but largely pre and during the 45 days as well.
Yeah, so Indians are traveling in large numbers, and I think you can no longer sort of ignore the might of spiritual tourism as a whole segment of wealth creation as well. And we'll see that in the days to come. We'll take a very short break, but on the other side, we come back with Paras Defense. A huge positive move for Paras Defense. New permissions have come in. All of those details will be discussed with Amit Mahajan, the Director of Paras Defense and Space Technologies, after this very short break.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money.
in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI and Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. Markets holding on to the green, losing some of its gains though, and you're seeing that slide coming in off its highs definitely on the Nifty, giving up some of those gains. What's not giving up gains though is Paras Defense. Just want to pull up the Paras Defense stock, and interesting news coming in there. They have been authorized to manufacture modernized, enhanced, redefined LMG capacity. They've gotten a license from the Ministry of Commerce and Industry to manufacture light machine guns. Let's talk about 7% up. Speaking now to Amit Mahajan, Director at Paras Defense and Space Technologies, to understand more about this. Amit, thank you so much for your time this morning. Can you explain to us what license this is exactly, and what does it mean for your portfolio?
So this license is primarily for us to enable to manufacture light machine guns. Now what happens is we are doing a lot of control systems, we are doing a lot of work which eventually culminates usage of light machine guns. With this particular license, what we will be able to do is we might get an option. We can choose to get an option to do a complete machine gun with the control system and deliver a complete solution to the customer. So that's the intent with which we applied for this license. We're doing very many parts, either controlling or then subsequently surveillance and border defense systems, which involve light machine guns.
Which involve light machine guns. So what, as I understand, Amit, then tell me if I'm understanding this correctly. So far you've been doing components, now you can create the entire product.
Correct.
Okay. And what is the differential in terms of margins or in terms of size of orders that now are on your horizon thanks to this?
The order size will increase, the value that we deliver to our customers will increase, and definitely a large portion of this particular gun, including the mechanical, because Paras has today mechanical manufacturing, electronics manufacturing, optical manufacturing, all of that in-house. So we will be definitely doing much better when it comes to margins, because the components required for the complete solution will also be manufactured in-house.
So Amit, good morning, Neeraj here. Just trying to get a sense of what could this mean. So let's assume, I'm just trying to understand, when does this take shape and form? When do you deliver? And some idea of how important this is. This is important. We heard you say this as well. But relative to the annual numbers that you clock in, how important could this be?
So this is our strategy of getting up the value chain. Now, when it comes to the size, if you see the journey of Paras Defense in the last 2 to 3 years, from optical components we have come to optical systems. And when we are looking at these optical systems to be manufactured, the value, say, if I'm doing a 100 rupee component, when I do a complete system, it is a 1,000 rupee system, where because the component along with its ancillary equipments like electronics and other mechanical systems, then the integration of that, the wiring, harnessing, and the whole thing, the whole testing, you build value not just with raw material, but you build value in the process. Now, when you build value in a process, the whole optimization of the process brings about the profitability of that particular system. Now, when I'm looking at this particular gun, today I'm doing a lot of control of this gun. I'm using this gun as a border defense system. Now, when I tomorrow go and manufacture the whole complete solution, I may look at the quantum jump into my order per system. So
Amit, okay, let's assume that you cannot say by when will the numbers start trickling in. But do you believe, when you would have applied for a license because you would have believed you will get in some order inflow, right? Is there an expected order inflow that you anticipate in 2025 as a result of the fact that you've gotten this license?
I do not want to put it whether 2025 or no, but between 2025 and 2027, I am expecting orders in this.
How much? I mean, that's the question. I still don't have clarity on what does this win mean for you in terms of some numbers that you can share with us. Some idea.
The quantum of my order per solution today, which is about 5 to 10 crores, will go to 100 to 150 crores.
But you expect some orders for these solutions. One is quantum, one is the number of orders that you will receive, right, for this thing. So you expect an X number of orders for the next 2 years, maybe?
Yes.
What is that X?
I am looking at the orders going in the range of delivery of anything between 30 to 50 systems.
Okay, yeah, and Amit, I'm not going to push you कि भाई order क्यों नहीं आया क्योंकि आपने बोला था 2025 में आ जाएगा. These things are fluid, but just wanted a sense of what this could mean. So thank you for that.
Yeah, all right. Thank you so much, Amit Mahajan, for speaking with us, Director at Paras Defense. And a pretty big development actually for Paras Defense, because from making components for light machine guns, now they have the official license to make the entire solution, as they say. So defense looking good, Paras Defense looking good this morning. Another big development, another space which is actually buzzing is oil and gas sector. BPCL has given an in-principle approval for an IPO of Maharashtra Natural Gas Limited, also known as MNGL, which is the reason you're seeing BPCL was buzzing in the morning. It's come off its highs right now, though. Let's get in Mihika with more details.
So, we actually have BPCL, IGL and GAIL India in focus. Now, this is the company that has gotten the in-principle approval is Maharashtra Natural Gas Limited, which is a joint venture between these three companies. And the approval is for roughly around 1,000 crore IPO. Now, in terms of the stake percentage in Maharashtra Natural Gas, Indraprastha Gas has 50% stake in the joint venture, Bharat Petroleum at 22.5% and GAIL India at 22.5%. And the Maharashtra state government holds a balance of 5%. In terms of what it does, well, it is the authorized city gas distributor for the city of Pune. And as per city research, there is value unlocking for the stocks, currently listed stocks. The listing of the joint venture will help unlock value for IGL and Maharashtra National Gas. Contribution in city's target for IGL stands at 45 rupees per share, which is a significant number. And the potential listing could also unlock value in GAIL's unlisted city gas distribution investment as per city.
Okay. Well, BPCL is one, but IGL is possibly by virtue of that 50% stake, the principal beneficiary. So bear that in mind. Okay, so that's the newsy stuff. Let's get in. Rajesh Bhatia, he's Chief Investment Officer at ITI Management on the show to try and understand how does he think about the landscape currently. Rajesh, great having you. Thanks for taking the time out. Rajesh, when we spoke midway through the year, you were relatively cautious on select aspects of the market. As we hit 2025, it does seem that the caution was well warranted. The question is it time to be even more cautious now? Because the overarching view on the street seems to be that it's a year for discipline and not a year for gains.
No, Neeraj, I would concur with that view that it is the year to lower your expectations of returns. We have done extremely well as a market over the last 4 years. In fact, even longer than that. We had a fantastic run from March 23 to September 24. 6 quarters of continuous rise in the market. The breadth of the market was excellent. It was really a fantastic bull market. Since then, we have seen some softening thanks to the slowdown in government expenditure. We all know that. And that has definitely hit the corporate results, corporate slowdown. And therefore, I think that's what is the continuation of that we are seeing. The risks have come from, apart from the slowdown in government expenditure, which has slowed the economy, has also come from the election of Trump as the president, because it brings a degree of uncertainty in the global environment, especially as it relates to what happens to the dollar, what happens to interest rates, what happens eventually to inflation and risk appetite, and so on and so forth. So there is some uncertainty that has been brought about by the election of Trump. And I think what people are looking forward to is this rebound of government expenditure, which can ameliorate our slowdown or help our slowdown. Because if you look at our GDP components, C, consumption, plus G, which is government expenditure, I is investment, export minus import. What is working, or what was working, is really G. Consumption is slow. Private investments, nothing much to talk about. It's good, but it's not going to drive your growth. Exports, we're in a global slowdown, so don't expect too much from there. So the government expenditure really was the one which was driving the GDP growth of the country. So for the moment, we are looking forward to the G bouncing back, and that's really where we are.
Mr. Bhatia, very good morning. Tamanna here, and glad to speak with you here on NDTV Profit. In terms of government expenditure, is that the only sort of missing brick, and is that going to be enough? I'm just wondering how you're seeing at corporate performance ahead of Q3. We're going to get into the thick of it. And are you penciling in or preparing for another disappointing quarter?
So I think you've had some previews come in from banks and some consumer companies. And of course, I think the primary reason why the market was down yesterday was not as much about the concern about the virus, but the fact that corporate results could again be a little anemic going into Q3. And I think people are still looking for visibility for when does the economy revive, because like I pointed out, they're looking forward to government spending. Now, with the rupee being where it is and global interest rates being where they are, the 10-year treasury in the US, it reduces monetary flexibility. You cannot reduce interest rates dramatically. To some extent, it may reduce even fiscal flexibility. So that is the challenge that we are kind of going through. Whatever, all said and done, it will take time to repair. Even if we have to kind of repair some of that slowdown, probably people will wait, or the governments also will wait, policymakers will wait for the Trump effect to kind of be known before they start pushing the pedal. So my sense is that even if there's not too much of a bad news regarding Trump, I think this slowdown will take some time to kind of work its way out. So that repair will take some time. And that's why I think you should keep your expectations from equities low, at least in the first half of the year.
First half of the year, keep your expectations from equities low. When you're looking at the equity basket, I'm just wondering, Mr. Bhatia, what is the kind of allocation that you see? Would you be taking some profits off the table, sitting on cash? And if you are looking at equity allocations, then to what extent are you looking at key sectors, and which key sectors are those?
I still believe that we are in a bull market. So this is really a consolidation in a bull market. So, and I don't know how much is the price-wise correction that can actually occur. Maybe there's a bit of a time-wise correction that happens in the equity markets. And of course, we have seen some part of that already. So I'm not sure whether you want to take a very, very aggressive cash call unless you're that type of an investor. For a long-term equity investor, I don't know if you need to take a very, very aggressive cash call. Keeping some cash is always helpful. But if you're a long-term investor, my sense is that, you stay invested, but keep your expectations low. Don't over speculate in this market, especially on the long side. So that is really where what I would think as to how you deal with this period of consolidation.
Rajesh, could the markets correct further? And by correct, I don't mean 1-2%, but significantly, simply because one, there is uncertainty. Two, if the earnings isn't the best. Three, if the budget has something around tax, a bit of an uncertainty there. There's also this new virus thing. And if the tariffs go up in the US, then it's inflationary and we might actually see rate hikes too. So while everybody's talking about when the markets will recover, I'm asking you the converse. We've corrected. Can we correct about 10% more? Or is that not the base case?
Well, not really the base case. Maybe, another 5-7% is, it can always happen. Because if you are saying that there's going to be a more than a 10% correction from here, what you're saying is that from the top, you will have a 20% plus kind of a correction, which is really a bear market. So I'm not sure whether we are going into a bear market unless there is change on the macroeconomic front. So that is where the uncertainty is. Do the macroeconomic variables change, dramatically? We have a very, very stable macro. So my sense is that anytime we have a bear market, those are usually caused by macroeconomic events where the stability becomes instability. We are not seeing anything at this moment which says that we are going into a macro unstable environment. Our macros are quite stable. So unless incrementally, this is just a valuation correction and a slowdown correction that we are seeing. And of course, we have an opportunity to kind of climb back up as soon as the government expenditure, etc., and is restored. And once we have greater clarity on what Trump will do. So that's really my base case. Unless macroeconomic variables change dramatically, I don't expect a bear market in India.
Okay, fair call. So that kind of correction not seen, but 5-7% from these levels not ruled out entirely. The other question is, Rajesh, do you reckon that there could be outliers on the upside? There is a lot of talk of how defense names will be in focus because orders will get bunched up in Q4 and there could be upsides there. There is talk of how pharma, despite not being in the Biosecure Act, could actually see a bit of an upswing by virtue of the fact that, if the initial signs of the US-China hostility is evident, is anything to go by, there's going to be a lot of China plus one in the next 4 years. And therefore, you look at all critical areas which might actually do that. So are there going to be telltale winners independent of what the markets or the headline indices do?
So Neeraj, you're absolutely right that this is going to be a little more stock-specific market. Look, the breadth that we saw between March 23 and September 24, at least that breadth has narrowed. So, when you go into a correction, instead of seeing, in a bull market, you see a very wide breadth. But in a bear market, you're more likely to see, or a declining market, you're likely to see the breadth kind of narrow. But as far as defense and pharmaceutical is concerned, I don't think the starting point of valuation at this moment is, compelling. Of course, the narratives are very good as far as pharma or defense is concerned. But I don't think that the stock prices are reflecting value at this moment. They're still slightly what I would call expensive stocks. So the narrative is multi-year, no doubt about it. But my sense is keep your expectations low.
Rajesh, I'm just wondering whether, going forward, what are the big factors or landmarks that you're seeing where you can see a turnaround? You've said earlier in this interview that hang in there for the first half of the year. What could change by the second half of the year in that sense? I'm just wondering where those silver linings are or where those positive triggers possibly are.
No, you raise an interesting question. One is, I think the market will want to see what are really the policies of Trump. And I think the 20th Jan event is a pretty significant one. So I think market will take some time to digest. And if it is not as fearsome as people predict, then I think definitely that could definitely help our cause. Second would be the budget. My sense is that this is a time where the government demonstrates whether it is favoring macro stability or whether it wants to go for growth. So if it really pushes the pedal on expenditure and tries to kind of revive the economy, that I think would be second catalyst that the market would look for. And if both those events are favorable, in fact, yesterday there was a Washington Post article which said that Trump tariffs are not going to be as severe as expected. And of course, Trump has denied that news. But if that were to be the case, and then the Indian government starts spending and is focused on growth, those are two events that I think I would watch out for. And that will give me a clearer direction that now the bottom is made and the markets are ready to bounce back again.
Okay. Rajesh, the conundrum when I think of things is technology. Simply because while banking would be update-wise and the economy grows, you probably see banking come back. If it doesn't, then you see banking languish. Technology is a bit tricky in that the valuations are not necessarily mouth-watering. We're coming in a year wherein maybe budgets get finalized, but still a lot of chatter around AI-related business losses too. Who knows? If attrition was an issue 2 years ago, it's AI currently. Where are you on this argument of Indian IT services? Are they good to have in the portfolio? Are they avoids in the portfolio? What would be your stance if you are allowed to not necessarily match the index which you might have to as a mutual fund?
So the expectation from IT is that growth rates will actually start to accelerate. Accelerate. The reason for that is that people believe that what does Trump want to do? He wants to cut corporate tax rates. He wants to raise tariffs. He wants to deregulate businesses, and he wants to stop illegal immigration, right? Corporate tax cuts and deregulating businesses. In fact, I read somewhere that just the deregulation of businesses will mean $4 trillion of mergers and acquisitions. Now, that's definitely going to spur banks, apart from the corporate tax rates. Banks are a very large spender in the IT category. So the expectation is that if the US economy revives and in fact accelerates, because that's what Trump wants to do, then Indian IT companies, which 60 to 70% of their sales come from the US, are likely to benefit because that will now act as a tailwind. The improved economy of the US will act as a tailwind to Indian IT services companies. So the expectation is that will help accelerate the growth rates of Indian IT companies.
TCS taking it to the chin ahead of its results this morning, but look at the kind of recovery in the Bank Nifty. That's definitely something to take heart from. Thank you so much, Rajesh, for speaking with us. Rajesh Bhatia, Chief Investment Officer at ITI Asset Management, joining us today on Talking Point. We'll take a very short break, but coming up next is Ask Profit, where we get experts to answer all your queries. Stay tuned.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on all of your stock-related questions. And to that end, if you've got questions for us, you can message us on that WhatsApp number, or you can even call us, as so many of you have done over the last few weeks. It's been absolutely fascinating and fantastic to talk to each one of you that has called. The insights that we get from you are always something that we talk about even in the newsroom. So don't hesitate to pick up the phone and call us on that number. We'd love to speak to you. Let's take a look at where the markets are right now. And after a very torrid, very difficult start to the trading week, there is a little bit of relief on the screen. You have the Nifty 50 trading with gains of about 0.6% or so. There's been a bit of chop and churn, but we've recovered from the low point of the day, and that low point also in the green. So not too much to speak of in terms of the declines, but of course we're still a ways off from the 200-day moving average for the Nifty 50. That's certainly something to watch on the upside. Let's look at the broader markets as well, just to see how they're faring. And you have the mid-cap index with gains of about 0.8%, certain amount of ground being clawed back. The small cap index also gaining about 0.9% or thereabouts. So broadly, you're seeing some recovery from yesterday's sharp cuts that you saw, the cracks that you saw across the board. In terms of the sectoral performers, you have the Nifty oil and gas that is standing tall in trade, gaining about 2% or so. The energy index is up about 1.3%. Metals as a pack doing reasonably well, up about 1.3% or thereabouts. Pharma is up about 0.8%. I guess to a certain extent, some of the talking points overnight are carrying through
in trade for us here in India as well. Globally, of course, equity markets have reacted to a source-based report that suggested that the Trump tariffs that everyone was worried about, maybe the aides of Donald Trump are looking at a diluted version. Of course, Donald Trump coming out on Truth Social and dismissing that report as untrue, but still you have equity markets around the world that have reacted positively to that, and the Indian equity markets are also reacting positively, as I said. Action in the primary market continues, of course, today, and you have a new listing that we should talk about, and that's Indo-Farm Equipment. It was a 260 crore IPO. It was significantly oversubscribed. It was a mix of an offer for sale of 75.25 crore rupees and a fresh issue of 184.9 crore. If you missed that issue and if you're wondering what the company does, it is a fully integrated manufacturer of tractors, pick and carry trains, as well as cranes rather, as well as farm equipment. So essentially a farm equipment company. We are joined by the management, Mr. R.S. Khandwalia, who is joining us, as well as Anshul Khandwalia. Thank you so much, gentlemen, for taking the time. I'll come to you, Mr. R.S. Khandwalia, first. Congratulations on a successful issue. And I'm sure that a lot of your new investors want to know how you're going to be utilizing the fresh issue proceeds.
Yeah, good morning, Alex. Yeah, this new, whatever we are raising this money, the first big money is going in the expansion of our crane capacity. We are putting a new facility in 30 acres of land nearby our existing facility, and the capacity will be increased to 306,000 crane per annum additional to our existing capacity. So, and then further 45 crore will be investing in our NBFC company, which will support us for retail financing support in the tractor business, Baroda Finance, which is a 100% subsidiary of this company. And around 50 odd crore, we will be repaying our short-term loans.
Okay, so that gives
and balance is general corporate.
Yeah, that gives me some perspective. Thank you for that. I'm just curious about where you see the biggest leg of growth. Is it in the tractor space, or is it in the crane space where you are increasing capacity? Anshul, maybe you can give me some perspective on that, because a company like yours in the crane space especially would be, a lot of people would look at it as a barometer to how the industry as a whole is doing, right? So what are the kind of prospects in those two businesses?
Right, sir. So, there's no doubt in saying that our name is Indo-Farm. We started as a tractor manufacturing company, but I think we're slowly pivoting and migrating towards a construction equipment company. Sir, with the government's current focus of making India a 10 trillion economy and the focus on infrastructure, we feel that we could see a lot tremendous growth opportunities in the construction equipment sector. Hence, the organization is also setting up a new factory there. So we feel the construction equipment space is where our more focus will be in the coming future, sir.
Just a follow-up to that then, and at this juncture, we're just looking at the latest data from CMIE as well. Anshul, I'm guessing that you may have seen some of the headlines this morning. We're still seeing a little bit of a lull in capex, and we're still seeing a little bit of slowness in spending and expansion of capacity, even though that number as a whole for India is above the average over the last 10 years. It's still lower by as much as 22% in the third quarter. So are you seeing any signs of a pickup in the second half, and what does that mean for your own business?
So definitely, sir, see the first 2 quarters. So see, I'd like to answer this in 2 parts. Sir, Indo-Farm currently operates in a very small part of the country. We only cover about 20%. So moving forward, the remaining 80% of the country is the opportunity for us. So that is one part where, despite however the industry performs, we could see potential growth there to cover the rest of the industry. Also, sir, the first quarter of this year had the elections, and during election times, a lot of projects get held up. But now, I think in the last quarter, definitely there would be an increase in the infrastructure projects.
Mr. Khandwalia, one last question from our end to you, of course. Can you give us a trajectory heading into next year as to where you see top line growth, and Of course, your new business, or rather not, I shouldn't say new business, your NBFC is geared towards increasing business in the tractor space. So certainly that is also going to bode well. And the rural space is seeing increasing demand is what we're seeing. So therefore, what is the perspective heading into FY26?
Yeah, there are two things. Once our NBFC is getting funding, that definitely it is going to support the tractor sales in a bigger way, because we are a growing company and we need the retail financing support is very essential for grow this business. Next is the capacity expansion of crane, because we are utilizing our almost 95% capacity. In our existing capacity, we are able to sell. There is no issue. Whatever we produce, we are able to sell in crane. And once the additional capacity is created, that we are expecting by the month of October, it will be start operationals around October. So 6 months we are going to benefit in the next financial year, and that the number increase. So definitely you can imagine the capacity we are creating 3,600. How much some capacity will be able to convert in sale. So it is a good number. And the capacity, the realization value of one crane will be plus 20 lakh rupees each crane. 3,600 crane is a big numbers. Once the capacity is created. And we, in the crane also, we have got only 20% area across the country. We have got enough market. For us, market at this stage is not an issue.
No, certainly, and exciting times for both of you. Congratulations once again from us at NDTV Profit, and we look forward to speaking to you, gentlemen, over the course of the coming quarters, and certainly to get some perspective on the farm sector as a whole, as well as the prospects in the construction space. Thanks so much for taking the time. All right, let's also talk about this with our expert today. We've got Asta Jain joining in, and she looks at IPOs very closely. She's a senior research analyst at HEM Securities, and we've also got Swati Hotkar, AVP Technical Research at Nirmal Bang, joining in. Thank you so much, as always, ladies, for taking the time, and good morning to you. I'll come to you, Asta. Did you have coverage on Indo-Farm equipment, and was it a subscribe rating? Would you say it's a buy even at this level? What are the prospects?
Hi, good morning to all of you. Yes, we did cover this IPO, and I had a subscribe rating both from the listing gain as well as long-term perspective. Now, talking about this company is into the farm equipment manufacturing, and they have 2 decades of experience. But what is major focus point of this company, that through these IPO proceeds, they will be using it in their NBFC, Baroda Finance. I think that will be helping the company in expanding its dealer network and in turn the tractor sales. So that is a major focus point of the company, and what we believe that this company is well poised to show some more returns from here now. If I talk about the listing is as per expectation. We were expecting the listing anywhere between 25 to 30%, and the stock prices are really quoting at those levels. So those who have not received the allotment, they should not make entry at this point of a time. I think let the stock cool till the level of 250 to 60 and then make an entry into this counter. But those who already got the allotment, who are lucky enough, then they can wait for more upside. Maybe 300 or 305 are those levels where some profit booking is advisable for long-term investment horizon. But in the shorter term, if anyone has just applied for the listing gain, then partial profit booking at the current levels is also advisable, but only partial.
All right, that was the view for the Indo-Farm equipment, the new listing in town. But now with that, let's move to the queries for today. The first query is from Karthik. He's holding about 110 shares of Zomato. This is at a price of 230, wants to understand whether this is a good time to add more shares to it or not. Now, in this last 1 month, we've seen quite a bit of correction in terms of where Zomato was headed. And in fact, today there was a note also from Jefferies wherein they've downgraded the stock to a hold rating. Swati, let me come to you on this one. Zomato, we've seen quite a run up in 2024, but 2025, it started on a more of a sovereign note. So can you elaborate what's your view on Zomato?
First of all, good morning, all of you. My view on Zomato is a little bit cautious. In this month, within the span of a 6 to 7 trading session, we have seen a 8% correction in this particular counter. Now, there is a cluster as support levels nearby 230 levels. If it's fails to respect that level, then more profit booking can be seen into this particular counter, which might take us stocks towards 200 and so level. Since the client's position is already bought at the 230 levels, I will not suggest to average it out at the current level. If you're getting any dips towards to 220, 200 levels between that trading zone, definitely one can go for a long position. At the current level, I believe the profit booking is likely to be extended, and which might take a counter towards to 220, 200 levels. So try to wait and watch policy should be applied. Any corrections can be utilized to take a long position, but not at the current market price.
So hold off on fresh entries into the counter. The stock is down as much as 4% in trade today, possibly reacting to that note, that downgrade from Jefferies. Shweta is calling us. She's the first caller today. Shweta, good morning. You're calling us from Hyderabad. How can we help you today?
Hi Alex, good morning.
Good morning.
My question is, I want to take a fresh entry in IT stocks.
Okay.
I would like to know, is it the correct time to enter in any IT stocks? If yes, then I would like to know one from mid cap and one from large cap, with including the stop loss.
Okay. So, because you're mentioning a stop loss, I'm assuming that this is a short-term question. But have you identified what the time frame is that you want to keep on this trade?
My time frame is around 1 year. But as the market is so volatile nowadays, I would like to know the stop loss also.
Okay. So what you're saying is it's actually a fundamental reason why you're buying the IT stock, but you want to keep a stop loss. Is that right?
Yeah.
Okay.
True.
So, Asta, this is the right week to talk about IT, but perhaps you don't have all of the insight that you might want because you're still waiting for the earnings to come through. They, of course, start this week. But heading into that earnings season, what would you watch for and what stocks are on your radar? Of course, she's looking for a mid-cap and a large-cap company.
Yes, so in large cap, we are liking Infosys at this point of time. I think it's a well-placed counter which can grow from here in the stock price momentum. So Infosys is looking good to us because we believe that these segments will be performing very nicely. And in fact, the deal win will go also on the positive side. So in large cap, Infosys can be buy, but I think it is not the current level, maybe some fall. If some fall is there, then it is a better time to enter into this counter at around 1920, 1915 odd levels. Now, talking about mid-cap IT, I think in mid-cap IT, we would like to go with the persistent system. That counter is looking very good to us. Maybe, again, some dips, if some dip come, then it is a counter where one can enter into the stock at around 6,300 or 6,250 odd levels. So these two counters are looking good to us in the IT space.
Then let me go to Swati on the technical. Swati, these two companies that have been mentioned, Infosys and Persistent, what would be the stop losses that you would put if you were to buy today?
For the Infosys, as I said, even analyst has said not to buy at the current juncture the whole-fledged amount. Definitely, if you're getting any tips towards to 1900, one can add on because those are the supports provided by its 50 and 100 EMA moving averages. So I believe up to that levels, we might see witness some sort of a correction. So any dips towards to 1900 can be accumulated downside. A stop loss can be kept at around 1830, which are the previous swing supports levels. So by maintaining that stop loss, you can keep your long positions. And we are looking for a target of at least 2050 to 2100 levels in the Infosys. So those are the stop loss and targets for the Infosys. For the persistence, definitely this is not the right time to take a long position at the current market price because on the weekly chart we are witnessing a negative divergence, which gives us some sort of a cautious sign. And also the interesting fact that it has given the breakdown of the 20 days moving average, which is really a cautious sign on the technical front because after such kind of a huge momentum rally from almost 5,000 to 6,700, we cannot deny the profit bookings at the higher level. So if you're getting any dips towards to 6,000 to 5,700 level, that will be act as a very good risk reward ratio, will be very comfortable at that range. So buy on dips towards to 6,000 level. Downside, you can keep a stop loss of 5,700 rupees. And for the upside target, we can again think about 6,500 to 6,700 for in this particular stock.
Just want to point out, let's pull up the 1-year chart for the Nifty IT index, just give you some perspective. We hit a low towards the end of, or to the start of June, I believe, on the index. And you've actually seen quite the recovery from that point. We've got gains of about 25% to end the year. or very close to that point, if I'm not mistaken. And we've come off the high point, of course, but in that same time, the Nifty 50 has gains of less than 10%. So certainly a sector that has had a resurgence from the low point, and one to watch in this week as well. You'll find all of the live coverage of the earnings right here on NDTV Profit. Just a reminder.
Right. With that, now we have the next caller joining us. This next caller is Viral from Mumbai. Hi Viral, I hope I'm audible to you. Welcome to NDTV Profit.
Hello, good morning. Yes, you are.
Yeah, please state your query.
Okay, so I'm holding 2,000 shares of RIIL, Reliance Industrial Infra. So so my query is regarding this
Right.
stock.
So do you want to understand the long-term view for the stock, and if you can also mention as to when was the time that how long have you been holding the stock for?
I actually just bought this on the 2nd of January.
Okay.
So basically I bought.
Yeah.
Yes.
Any rationale behind buying the stock?
Yeah, so this. I basically bought it as a contra bet against Jai Corp. I was actually holding Jai Corp. I sold it all on 31st December. And I just bought a small quantity of this as a contra bet. So just wanted to ask, regarding this.
Yes, I remember this conversation, Viral. We've spoken about Jacob, right?
Right.
Why did you sell it on the 31st of December?
I sensed something was not correct.
Okay, you sensed something.
So I sold. I sensed it. They had given one NSE notification saying on that day itself.
Yeah.
So that day, the previous day. So I sold everything because I did the calculations and it was completely, this was completely like a very low price of the land. Still, nothing was clear, but I sensed something was not right, and at 340, I sold the entire stake I had.
Okay, I want to, just to illustrate the point, we've been speaking about JEP Corp yesterday and today, and also end of last week. Let's pull up the year-to-date chart. I'm talking about 2025. Just over the last few sessions, the kind of erosion that you've seen, and Viral has looked at the stock exchange notification and he has sensed something wrong. I do not have the ability to pull up the conversation that we had with Viral last month. I believe it was last month, right, Viral?
I think it was 2 weeks ago.
It was 2 weeks.
Yeah,
and we'd spoken about Jacob, and you'd said that the reason why you invested in Jacob was because of the SEZ and the prospects that it has there. And as a result of which you were holding on, but then you saw the notification and you sold. So kudos to you. You've actually avoided a 48% decline or thereabouts, a 40+% decline.
More than that, actually. More than that, because it's a reverse thing, right? So actually much more than that.
Yeah, certainly. So you want to know about Reliance Infrastructure. Help me understand. So when you say that it's a contra bet, you're looking at holding this for the long term?
I sold about 44,000 shares of Jai Corp, and I bought mostly the chemical sector, and RIIL I just took 2,000 shares just as a contra bet. It's purely a contra bet because it's a Reliance Industries is the stakeholder of the company, so it's much safer from that context. Right, because they hold majority of the stake of RIIL.
Yes.
So from a safety point of view, I took a contra bet. So I just wanted to know what does your team think about it.
I got it. It's not my team; it's our experts who are joining us.
Correct. Sorry.
I must correct that point. But ask the RIIL any perspective on this one. You've heard the context, of course. What do you have to say about this?
Yes, so it is RIIL, and its main work is to just look after, infrastructure activities mainly related to Reliance Industries. Now talking about this counter, fundamentals are not in a very good shape as of now, but really we want to see the results, because in the last quarterly results, what we have seen, there was no major capex which was announced by the management, first of all. Secondly, company is still posting losses, and in fact, the valuations are also on the very higher side. So, these 2-3 factors are such factors which are not letting the stock to move on the upwards. Although I really appreciate the way investor Mr. Viral has just sensed the things ahead of a time, and he was vigilant enough to keep a track on whatever activities or information going on in the company. But I think it's better to wait for some time, let the results come in, and I think then only we can decide, because right now the fundamentals are not looking very good, although I mean, whatever reason behind the buying this stock is just a contra call. But I think for this call also, one really need to see how the results pan out to be. So my idea here is to stay invested in the counter, and I really need not to tell Mr. Viral to look after the result, because he himself is so much vigilant. So definitely he will take care of that. But I think after results only we can say something about fundamentals, because right now issue is company is highly priced, stock prices are highly priced, as well as the losses are there, which was posted by the company in the last quarter. So that not signaling towards strong fundamentals.
That's a fair point. And all right, so hopefully that answers the question. Let's move on to another caller. We've got Shailaja from Hyderabad who's calling us. Shailaja, good morning and thanks so much for calling us. How can we help you?
Yeah, I got IPO listing of Carraro India. So right from then the price is going down. The listing price is 704 and now the price is around 638.
Right.
So I want to know, can I hold for some more time to get minimal profits, or else if the price goes down, just I want to know whether to hold or sell, because it's going down right from the listing day.
Yes, okay, that's a fair point. When you subscribed to the IPO though, what was the thinking? Did you buy it for listing gains or did you like the company?
Actually, I have listed for 2 to 3 companies. It's one of them, but I did not get the others. I got listed of the Sectoral.
Unlucky, Shailaja, unlucky, I must say that. Because if you had gotten the issue for today as well, you would have gotten 30%. All right, but let me take your question to Asta on the fundamentals. Asta, I mean, it works like this, right? If you throw darts in the dark, sometimes it hits, sometimes it doesn't. And Carraro India is unfortunately not hit. So would you hold though? What are the prospects on the fundamentals?
So basically this company is a Pune-based company, and basically they are a solution provider to OEMs. But what was the problem with the issue at that time also, because I have not subscribed it. So, I'm not given the subscribe rating because the valuations were quite high. We were not liking the valuation at which they were bringing the IPO. It was at around 40 price to earning multiple, which we found to be very, very stretched. And in fact, that is why we have seen even this IPO has not performed. And at that time, there were 8 to 10 IPOs that were opening within the span of 2-3 days. So we have not given this IPO at all a subscribe rating. So idea here is this IPO, now the stock. So this stock has potential to move more from lower side from here, because I think it can move till the level of 650 or 600 odd levels. So it's better to wait for a longer term, because I think when the results are around the corner, then I never advise to just exit from the counter. Maybe you can fetch some more losses, but at that time the conviction will be more high that yes, even the results are not supporting. So I think it's better to wait for the results to come in and then make exit into the counter and be ready that this counter can show more downside from here. This is my fundamental calculation is, and we are expecting this stock to fall till the level of 600 first of all. So let's wait for some more time, keep the patience in, and after the results, just review your query again.
Got it. All right. We have to slip into a very quick break, so do stay with us, ladies. I do want to point out, you're probably used to seeing the number on the bottom of your screen. There is a number here. No, there. There's a number here and a number there. So you can call the number up there if you want to speak to us. Do stay tuned. Lots more coming up on the other side.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes? that you saw being made.
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Hi, thanks so much for tuning in and welcome back if you were tuning in before the break. This is Ask Profit, of course. This is where we get all of your questions on stocks answered. The first question we're taking on this side is from Faniraj. He's writing in on WhatsApp, and he's bought Suzlon Energy at a price of 60.5. The stock is currently trading very close to that mark. So he's looking for the prospects of long-term gains in the stock, and he's wondering whether to hold on. Asta, on the fundamentals, would you suggest a hold?
Yes, suggest a hold with a price target of 68 to 70 because we can expect a strong CAGR growth in their top line in the coming quarters.
Okay. No, but also give us a sense of the prospects in the next year. Do you have a target on the stock? And are valuations more comfortable now than they were perhaps 3 months, 4 months back?
So valuations are, still on the higher side, but we are expecting, on the basis of the order wins, the top line to be bulky in the coming quarters. I think that will settle the valuation. But overall, we are positive on this counter with a price target of 68 to 70 at the initial levels.
Right. Chetan from Bangalore has got the next question. He's got Yes Bank that he's bought at a price of 31 rupees. So it's an elevated price that he's bought it at. The stock is currently trading at 19. He's got a long-term view on the stock. He's wondering what to do. Let me get you a technical view on this one. Swati, I'll come to you on this one. Swati, what should he do about this? Should he buy at this current price?
2024 was not a good year for this particular stock. We have seen a sharp correction from almost 30 to 19 levels. I believe the immediate support is will be at around 70 to 18 levels, which doesn't respect that level. More sell-off is likely to be continued, and which might take a counter close to 15 and 14 levels. So up to that level, we might witness some sort of a selling pressure. So I will not suggest to average it out at the current level. Let the stock find out a support nearby 14 to 15 levels on the downside. Then we can think about some sort of a reversal if any technical sign shows at that point of time. But at the current level, my view is cautious to bearish in this particular stock. Try to avoid buying up at the current market price. Upside can be seen only if the stock manages to keep the breakout of 22 levels on the closing basis. A consistent closing, at least for 2 to 3 trading sessions only, will see some sort of a revival in this particular counter, and which may take a stocks towards to 26 to 28 levels. So as of now, the view is cautious and not to add the long positions at the current market price. Wait for the more correction on the downside, and if the stocks find out a support nearby 15 to 16 levels, you can again review this particular counter, and then accordingly we can take a call.
All right. Senco Gold is the next counter that we're talking about, and Arun Kumar from Ghaziabad in Uttar Pradesh has got this question. He's bought at levels of 1,427. He's not provided us with a time frame that he wants to know about. It's just a hold or exit. He's in a loss right now. The stock is currently trading at 1,157 below his buy price. Asa, on the fundamentals, would you hold on? Would you double down on your investment? What's the prospect?
So prospects are looking okay right now. So my idea here is to stay invested or a hold rather than making more buying in this counter. Now, talking about this counter, growth outlook was good, but they missed the margins in the quarter 2 of FY25, and that's why I think that can be the result that it has not shown that much of a strong performance as other counterparts. But going ahead, I think this stock again will grow in a stronger way on the revenue part, and hence idea here is to stay invested in the counter.
All right, stay invested in Senco Gold. It's had a reasonable 12 months. You've just been unlucky on the downside, having bought at slightly elevated levels. Naveen from Visakhapatnam is calling us. Hi Naveen, thanks so much for calling. You've got Info Edge and you've bought it at a very good price. Can you tell me what you were thinking when you bought it?
Hi Alex, very good morning.
Good morning. Please go ahead.
Yeah, so I bought on 4,400 level. So it is in my core portfolio, like I was averaging it out. Like the main reason is 2 things. One is the core business Naukri, and the second thing, the investment that they were doing in the startup ecosystem, whether it can be Zomato or it can be PVB from Tech recently, which got it listed and gave good returns. So I'm betting on these 2 things, like the startup ecosystem. I was betting on more things. So that's the reason I'm holding it as of now. I'm currently sitting at around 100% returns. I just want to understand whether I can hold it more than 5 years or not.
Okay. Naveen, and please, you don't have to answer this, but I'm just curious. You decided to buy 5 shares in, when did you buy this?
So first share I bought it around 5,500 level, and then I was averaging it out. Like the least share I was bought around 3,500 or something. So the average price is 4,400, I can say.
So, but I'm curious, Naveen, why didn't you buy more at that time?
So, okay, I was doing SAP of 10,000 every month in my core portfolio.
Yes.
So I can't buy Info Edge every time, right?
Right.
Let's say I am buying multiple shares. So there is a link. There is a method I'm following. Like I don't want to keep more than 10% weightage to anything. And I remember I asked for LIC also 2 days back. Even Zomato also I have around 8% of portfolio, and it is giving around 180% returns currently.
Excellent.
So in that way.
Excellent. I'm so glad that you're following this method. And how old are you, Naveen?
I'm 29.
Excellent. And I wish you all the success. Let me get you a view on the fundamentals. Asta, very good way that he's using to accumulate shares over the long term. He's keeping prudent limits on the per stock exposure, but he's bought at a very attractive price of 4,400 rupees per share. What are the prospects? Hold or sell is a question.
I would recommend to hold this counter because, in fact, the Q3 update was also looking decent to us, in which we have seen that the billings have grown, in not only in the recruitment segment, even in the 99 acres and other segments also, the billing has grown. So I think if Q3 updates are attractive, then definitely my results can also be on the positive side. So there is no harm in continuing with the counter. I recommend to hold this counter. Initial price target can be set at around 9,000 rupees.
All right, so further upside of 500 rupees or thereabouts on the stock. So hopefully that answers your question. We've got a question on PCBL, Philips Carbon Black. And this is a question coming in from Hardik, who's writing in from Mysuru in Karnataka. The question's for you, Swati, on the technicals. He's bought at levels of 455. He's got 1,000 shares. And so he's incurring a small loss at this point. The stock is currently trading at 450. What are the prospects on the upside? The stock is buzzing in trade, up about 4% right now.
The overall view on the technical front is definitely positive. As of now, the stock is under the little bit profit bookings pressure, but we believe that up to 420 levels, we might see some sort of a correction, and from that level onwards, we will get to see some bounce back rally. On a higher side, 470 is acting as a crucial resistance level provided by its 20 days moving average. If it surpasses that level on the closing basis, definitely we can see the extension of this upside rally towards at least 520 to 530 levels. So the overall setup on the technical front is really positive. One can hold on the long positions. If possible, if you want to keep any kind of a stop losses in such kind of a volatile markets, 420 is acting as a crucial support level, so that can be kept as a stop loss. And for immediate target will be a 520 to 550 levels on the higher side.
Okay, all right. So that's the view on PCBL. Pradeep Kumar is calling us from Kerala. Pradeep, morning. Where in Kerala are you calling from, and what would you want to talk about?
Good morning. I'm from actually capital Trivandrum.
Okay. Go ahead, please.
I would like to know about Sula, the winery. I bought like 1 month back, but I thought the festival season coming, so a lot of people going to drink, so I'm going to be rich more. but
Pradeep, that's a good thinking. But do you think that people drink more wine than other things?
I believe, of course, in the festival season, so the people should, most of the people are. And another thing I know about the winery, this one is a 60% of, they are covering in India 60%, and they're second Asian largest winery or something like that. So I'm so comfortable with the people.
Okay. So, but you're planning to hold for the long term, right, Pradeep?
I don't really mind to keep long. If I have a particular profit, I will took that one. So that's always I do. I'm not a very good trader. I'm not taking 100% seriously like that.
Okay, so fair point. So would you say that you're comfortable holding more than a year then, Pradeep?
Yeah, maybe I can add more if, suggestion from the people. I can add more or...
No, but I'm saying, would you be comfortable with holding your investment for at least a year?
I think 6 months fine.
6 months is fine. Okay, so you don't have too much patience. You say you're not a trader, but you're certainly not a long-term investor either, Pradeep. Let me go across to Swati on the charts then, because Swati, the buy price is 433. He's not got as much patience as I would hope he had. But would you say that 6 months holding is a good idea?
Next, looking towards the chart pattern, definitely he can hold on for at least for 6 months. Why I'm saying that if we draw the extension, the theory on the technical front, the stock has already corrected more than 78 to 80%, whatever the rally we have seen from the year 2022, from 350 to 700 odd levels. Now the sharp correction has been already witnessed. We might witness some sort of a reversal. A time correction is going on. It will take a little bit time. We might see some consolidation phase, and then afterwards we can see some upside momentum on the northern side. As of now, 390 is acting as a crucial support level, which was the previous resistance level which we have faced in 2023. So as long as the 390 levels are hold, we can expect some bounce back rally, which might take a counter towards to 455 to at least 500 levels. So I will suggest to hold on your long positions to 390 can act your stop loss, and you can exit your long positions or book the profits at around 500 levels. So definitely you can hold on this particular counter.
Okay, as is the case for most good things, you should do it responsibly, and that goes for drinking as well, investing no doubt as well. Let's talk about Satyan's question, and Satyan's got a question on Skipper, which he's wondering whether to invest in at this current juncture for the long term. I'm not sure if we're going to be able to get a technical view on this. Fundamentally, what's the view? Technically, do we have a view, Swati? It's up about 100%, 117%. Would you buy this point?
Alex, frankly speaking, I will not take a long positions. Why I'm saying that because in the last 2 months, the counter has just given the formation of the head and shoulder pattern, and it's on the verge of giving the breakdown of that neckline. Whenever such kind of a pattern forms at a higher level, and if we witness a breakdown of that neckline, we are likely to see the more selling pressure on the profit bookings. So 510 is the immediate support level. If it's break that level, then we might witness a sharp correction of at least 100 points down the line, which might take a counter towards to 400 to 450 levels. Up to that level, we can witness a correction. So fresh long positions are not recommended in this particular counter at the current market price. If you're getting any dips towards to 440, 450, at that point of time, we can think about fresh longs, but not at the current market price.
All right, so we've got a next caller. Srinivas Reddy is calling us from Hyderabad. Srinivas, good morning to you, and how can we help you today?
Yes, sir. I got the shares of Dr. Reddy's of 500 units at the rate of 1373.
Okay.
So should I hold it for a long time? Because I am a long-term investor.
Okay.
How long that I can hold it for?
Okay. When did you buy this?
I got it for about 5 days back.
5 days back. Okay. And when you bought it, did you look at the fundamentals? Did you look at the prospects in the pharmaceutical space? And out of the various options, you chose Dr. Reddy's after looking at the company?
Yes, sir. Which I looked about the fundamentals. It was strong, consistent. It was improving.
Okay. So on the basis of that. And when you say long term, do you mean more than a year at least?
Yeah, more than a year, which I wanted to keep for about a year.
Okay, for about a year. Okay. Asta, on the fundamentals, is Dr. Reddy's Laboratories the best pick in the pharma space? And if you bought at levels of 1,373, do you hold on? Do you add more?
Yes, I would recommend to hold on this counter, and it is among one of the best pick in the pharmaceutical space. Now, talking about the fundamentals of this counter, fundamentals are looking to be attractive because company has a strong plan of 20 new launches in the coming year, and 50% of them they will be, launching in the complex category. So I think definitely it will help the company in showing very strong performance going ahead. We are positive on this counter. Recommending a hold as well as buy on dip strategy can also be applied at the level of 1320, 1310 odd levels to the price target of 1550 to 1570.
Okay. I believe our next caller has also got a question on the pharmaceutical space, and Hari from Chennai is calling us. Hari, I believe you bought Natco Pharma. What was the thinking?
Hi, Alex.
Hi.
Good morning. This is
Good
Hari
morning.
here.
Good morning.
Alex, I bought this Natco Pharma, I hold currently
60 shares,
60 or at around prices around 1,480.
Yes.
So normally what I will do is I used to buy on dips, I won't buy everything in a single lot. I started accumulating from 1,300 and even I bought around 1,590. I saw the fundamentals are it's really good. Plus apart from the generic drugs, they are also into the specialty drug as well. So I thought this is a good counter with fundamentals is also very good. So I just want to know, I am planning to hold it for next 2 to 3 years kind of.
Okay.
Now my question is whether I can start accumulating in these dips or what is the strategy around I need to play on this pharma bet? Yeah.
Okay. So just incidentally, I hope you heard the previous conversation about Dr. Reddy's Laboratories as well.
Exactly, yes.
Yeah. So I'm going to combine this with that. You spoke about, Asta, Dr. Reddy's Laboratories. Tell us about Natco Pharma as well. Slightly elevated levels, 1,480.6. Would you use these dips to add more? What are the prospects for Natco?
So I would recommend to hold rather than add more with a price target of 1,600 to 1650 at the current juncture. I know I'm giving big targets, but I think in the longer run, this stock can show that type of potential. Now, talking about the fundamentals of this counter, first of all, they have a partnership with the Mylan, we all know. And now some litigations were there, which the company has already settled. That is Mylan I'm talking about. Secondly, they are banking on some 6 to 7 niche product which they will be launching. In fact, I think that products will definitely fill the gap which G Revlimid, their main product, has formed. So I think over the next few quarters, the company's fundamentals looking to be decent, and they will show some strong launches. On the back of that, maybe financial performance get improvement from present point of time. So stay invested in this counter with a price target of 1600 to 1650, but be vigilant about the results because results tell the whole story.
Yeah, a considerable upside. This seems to be the best pick then, based on the upside that you've given. Asta, is that right?
Yes, but it is these are little risk for risk averse investor. So for risky investors, Netco Pharma has a good, very good, potential for upside momentum. Just see the risk appetite and then make entry. Yeah.
As is usually the case, unless it is an undiscovered stock, if you've got the gumption, is when you can possibly reap the rewards of taking a contrarian bet in certain cases, right? Not necessarily what I'm saying is related to Natco Pharma, of course. We've got a caller. We'll come to them in just a bit. Let's go to a WhatsApp question for a bit. Mishtan Food is the name of the counter that we're taking, and I am not certain of who is sending. Okay, Raghavendra Kulkarni, I'm guessing from Maharashtra, is asking this question. He says that he has some shares. I do not know what level he's bought at. The stock is currently trading. It's a penny stock. Any advice, Asta, that you can give in this case?
Sorry, I don't track this counter in a detail, and it's only 6 rupees or 7 rupees stock.
Yeah.
So we don't cover such penny stock.
I do not blame you. So, Swati, on the technicals, any advice that you can give?
Even I don't track this particular counter, but looking towards the chart structure, we already have seen a very sharp correction in this particular counter from 22, now 7. Now it is trading nearby the all-time low at around more than 6 levels. I will suggest if you're getting any upticks towards to 9 to 10 levels, you should definitely exit the long position from this particular one. I don't see much more future in this particular stock.
Okay. All right. We've got a caller, Ajita Nair, who's calling us from Pune. Ajita, hi. Thanks so much for calling. How can we help you today?
Hi. Good morning there. Good morning to all the panelists also and the lady there.
Yes.
My name is Ajita Nair. I'm calling from Pune.
Yes.
My question was on Sectoral India.
Okay.
It's a recently listed company.
Yes.
And I've been following it. I think it got listed somewhere around 30 odd rupees.
Mm-hmm.
And then it fell down to 20. I was hoping to buy, but as usual, the hope that it could fall further, I didn't buy.
Yes.
Now, from there on, it's gone up to 53.
Yes.
I am looking to buy that stock with a view of a year or two. My question is, can the panelists tell me whether it's a good buy? Should I buy it?
Yeah, okay, that's a fair question, and that is usually the case. If you wait too long, sometimes the opportunity is missed. Ajita, you're not alone. There are a lot of people that face this. Let's pull up the intraday chart on Sectoral, please, if we can, just to give. I want to make sure that yes, so it is at upper circuit. There are no sellers in the stock right now. So even if Ajita wants to go and buy, she's not going to be able to do so today. Asta, on the fundamentals, what are the reasons why the stock is up and about so much, and would you suggest entering when you can?
So I think now this company's business model is little different from the others one because they cater to the US health industry, and when this IPO came, it was at 30 rupees, at the higher end of the price band. And I have given the subscribe rating. Even I was believing some, listing gains also to be there. But on that day, it showed very volatile movement, and afterward 2-3 days continuous fall, and then it took a one-sided upward rally. So now at 53 rupees, rupees, this IPO is priced at a price to earning multiple of 70. So I think at price to earning multiple of 70, it becomes little expensive. So my idea here is please wait for some more time. Either let the results come in or let the stock fall till the level of 48 or 49 odd level and then make entry into this counter, because at this point of a time, I think from the risk reward perspective, it can be a risky counter just on the basis of valuation, because from 30 to 53, a big upside momentum we have already seen in this time.
That's a fair point. All right, it's time to hit the rapid fire segment. Asta, Swati, you know what that means? I'm going to toss as many questions as possible at you over the next 2 minutes, and hopefully you can answer quite a few of them. The first one that we'll take is from Jeet, who's writing from Kolkata. CDSL is the name of the counter. CDSL. Swati, this one's for you. 50 shares, bought at a level of 1607. He's in the green, so would you hold for the next 2 years?
Yes, for the next year, definitely it's a hold particular counter. Upside, I'm looking for a target of 2000. One can hold on by maintaining a strict stop loss of 1640 levels for a target of 2000.
Okay. JSW Energy, Balaji wants to know, he's bought at levels of 655 and he's got 100 shares. So he's losing a little bit of ground. Swati, 3 to 6 months he can hold. Would you hold or book a loss?
Yeah, at the current level, the stock is trading in oversold zone. Over a period of time, we might witness some sort of a bounce back rally. Downside, it has a good support at around 580. So by keeping that stop loss, you can hold on the long position. Upside, it can be seen up to 650 to 680 level. And that level, you can definitely exit your longs.
Okay. Vishaka wants to know one stock that you would recommend for the long term right now. Asta, tough question.
So I would like to go with L&T.
Larsen and Toubro is a buy. Techno Funda check. One is possible. Funda check on SKF India. Sunil G from Vadodara wants to know. He's bought at levels of 456. He's been holding for 15 years. Wow. Would you hold on? Asta?
Yes, I think one can hold this counter, SKF India, but price target can be set at around 4800 at the current point of time.
Okay, Dinesh from Gurgaon wants to know about IOC. He's holding 1700 shares, which he's bought at levels of 161. Should he buy more, hold or sell? On the technicals, what's the view? Swati?
Alex, not to buy at the current market price. If the stock see more correction up to 110 levels, they can definitely average it out, but not at the current market price. Upside rally can be seen up to 160 to 170 levels. So it's a hold from my end.
Okay. ITC, I believe, bought pre-demerger at 480 levels. Somnath Roy is asking, should you hold or sell? Asta, what's the view?
Undoubtedly hold.
Undoubtedly hold. All right, on that note, Asta, Swati, thanks so much for taking the time. Pleasure speaking with you as always, and thank you so much for answering all the questions you did today. That brings us to the end of this edition of Ask Profit. I'm sure that we've not been able to answer all of your questions. It's impossible to do so, but we will be back tomorrow to take more of them, and hopefully the questions we did answer over the course of the last 1 hour have been beneficial to you. Do stay tuned, lots more coming up over the course of the day, and this is NDTV Profit.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is not my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to...
Hello and welcome to KYC. Today our focus is on Rainbow Children's Medicare Limited. It's a hospital chain which deals with child care, childbirth and the like. In simplest of terms, established in 1999 in South India. Let's pull up some data with regard to the company. It was started as a small clinic and thereafter has forayed and has grown extremely sharply. In terms of The locations, etc., we'll come to, but let's first focus in on what it actually does. It operates a multi-speciality pediatric, obstetrics and gynecology hospital chain. The hospital chain focuses on all of the following care in terms of, largely in terms of childbirth. And it currently has a presence in 5 states, across 6 cities, has 19 hospitals and 1900 plus, to be absolutely specific, 1935 beds. And that's how it's stacking up at the end of Q2 FY25. In terms of the business itself, you're looking at a size of around 16,500 crore in terms of market cap. You're also seeing that it got listed in 2022. If you can have the 5-year chart of the company, you'll see it's given a very, very strong return. Since May of 2022, the stock has gone from 450 odd to 1620. So from the date of listing, it's given very strong gains to shareholders in the hospital space, and a healthy return in terms of return ratios as well that the company offers. But let's dive deeper into this one. Let's try and see and zoom in, because on every one of KYC shows, we try and rate each company on the basis of 8 performance parameters. The first one being the income statement, then it's the balance sheet, how healthy is the balance sheet, return ratios is the third, how cash flows have stacked up historically last 3 years, as well as what one can expect going forward is the fourth parameter. The fifth one is on shareholding, how much is the promoter holding, and sixth focuses on street cred, how the performance of the stock has been. This one, of course, has been very, very strong. We'll try and break those numbers down as well. Street coverage, how many analysts track it, how do analysts view the company? That's the 7th parameter, street coverage. And 8th one is the valuation picture. This company versus others, how do valuations stack up in relative terms? Is it a good investment to make at this point? So we'll try and break all of that down. Joining me for that is Puneet Javeri. Puneet, hopefully we'll break this down in a nice and healthy manner for viewers. Let's first start off with the income statement. And the income statement, smaller company, and therefore growth has been very good, reflecting on that income statement over the last 3 years odd. The revenue CAGR has been around 24%, strong revenue growth. It's doubled in the last maybe 3 years odd in terms of revenue. From 650 crore, the revenue has gone to 1300 crore in FY24, and it grows at a fairly healthy clip even in FY25. In fact, FY25's Q2 numbers were extremely strong. One of the quarters they clocked around a 450 crore rupee top line. So therefore, the growth, the revenue growth in that sense looks quite good. You've seen a 24% CAGR, 3-year CAGR on the top line. EBITDA also very similar kind of growth, 30% growth on EBITDA. So some amount of operational efficiency also kicking through. And your EBITDA margins as per the revised Ind AS is at 33%. Earlier was operating at around 27-28% as per earlier Ind AS, but currently at 33%. PAT CAGR as a result, on a low base of just about 39 crore in FY21, PAT has zoomed to 218 crore, and that's why you've seen that 76% CAGR in terms of profit after tax. Can that sustain, grow? What's the direction in which it will go is something we'll have to zoom in on better. But that is, of course, forward guidance, what one can expect going forward. The second one is with regard to the balance sheet, and I'm going to try to break this down into 3 metrics. One is the shareholders' equity. Healthy at this point, 1367 crore of shareholders' equity. A large component of that is premium. Some amount of that premium is attributable to the IPO itself, which happened 2.5 years ago. But a large component of the premium is also profitability, which continues to accrue. Mind you, 218 crore of profit in FY24, likely already sitting in that number of 1367 crore as of September 2024. So that's one metric. The other one is the gross debt. A large part of the gross debt, it's a debt-free company largely, but a large part of the gross debt is lease liabilities. Generally, land is leased, building is leased, and therefore some bit of this debt reflecting here is lease liabilities, or rather large part of it, 700 crore plus is lease liabilities. And therefore the gross debt is largely zero. We'll have to ask management as to what the capital allocation strategy is going forward, what the growth strategy is, and how they intend to fund growth. That will be an interesting conversation, and we'll have the management with us shortly. The third piece on the balance sheet is the cash and bank balances. They've got investments which are quite sizable in that sense, but the cash bank balance is just about 26 crore odd, which is also healthy for a company of this size. Decently healthy cash and bank balance sitting in. One more thing I want to just highlight as part of top line and balance sheet is that there's a 50-50 split between the revenue which comes in from insurers and revenue which comes directly from customers, which is uninsured treatment that the hospital chain is currently servicing. And therefore it's kind of a 50-50 split where 50% is coming straight from insurers. So some amount of visibility even in terms of cash flow there. Now, coming straight to cash flow, because that's the important metric. Cash flow from operations has grown again very healthy clip, largely in line with that EBITDA number, 30% growth. But you're looking at net cash flow, which is negative. Fair point there, because what you will see in fast growing businesses is all the cash flow that comes in gets invested fairly quickly. And therefore the important number to track here is the cash flow from operations, which is growing healthily in line with EBITDA. And the second metric is going to be return ratios, because once that cash is invested, what's the kind of return that the company is generating on that? And Puneet's going to break that down for us.
Well, definitely, because the return ratios, while as you already said, it's maintained at a very strong clip. The ROE is around 19%, so it's been very steady over the last few years as well. I think post that FY21 blip, and that was guaranteed accrued to the pandemic, it was a one-time effect. When you look at the return on capital employed ratio as well, that's also very strong at about 18.2%. That's another key positive for this company as well. And for the industry as a whole, as a hospital chain, it is expected to maintain a decent clip. Because of the other peers also investing capital very quickly, as you rightly said, Harsh. But it's maintained at a good 18.2%. Let me move on quickly to the shareholding as well, because that's another aspect to look at. It's been steady at around 49.8% for the promoters, while we have seen strong participation from FIIs, specifically around 25% of the shareholding is with the FIIs. There has been decent interest in terms of DIs as well as from the public as well, public investors as well in terms of this company. Finally, when you look at the street cred as well, as you rightly said, Harsh, from May 22, the stocks been almost up about 2.5 times or 254% since listing in May 2022. It's given, when you look at the returns CAGR on a yearly basis, about 54%. So it's done very well for us investors who participated in the IPO and henceforth as well. So definitely a key aspect. Of course, you rightly mentioned that the company is a very high growing company. So the investments have been higher, and that's the reason for the negligible dividend yield of about 0.19%. But I think the reason we've given it, of course, a thumbs up is, of course, it's opening newer hospitals as well and requires that kind of capital. So definitely on that, the dividend yield will be accepted by the investors because it's a high growth company. But Harsh, what about the street cred as well? What is the analyst currently thinking on the street according to for this company specifically?
Yeah, absolutely, Puneet. So interesting point made there that dividends generally, I'll just cap that point off. Dividends generally are lower for fast growing companies. Also, the important metric to track when dividends are low is the return ratios. And return ratios here are higher teens.
Yeah.
And therefore, they're deploying cash at a far faster rate than your average company, or rather the average returns offered by companies in the listed space. And therefore, that dividend number is not so bad. Let's look at though the street coverage. There are 11 analysts which track this one. 9 of them have a buy rating on it, but the upside is what the key is, just about 2%. And therefore, while 80+% analysts have a buy call, the upside is absolutely muted. Therefore, the next 12 months, analysts don't expect much, even though they're quite constructive on the business per se in the longer term. But Puneet, let's talk about valuations here, because likely that's the reason why analysts are not so bullish on this one?
And definitely, because over the last 6 to 7 years, we've seen number of very nice hospitals get and list in the market as well. So when you compare not just on valuation but also on the occupancy, on the ARPOB, of course, is average revenue per operating bed, as well as the kind of capacity and bed capacity that they hold in the current hospital is another key metric to track. When you look at the ARPOB for a company like Rainbow is the highest among the 5 that we've taken in this particular comparison, and that's also because of the niche that they operate in the pediatric space. That's of course giving them a premium compared to others in terms of the average revenue per operating bed. And essentially, when you look at the bed capacity as well, while it is currently around 1900 and it's lowest among the 5 that we've compared it with, it's interesting that the company is looking to increase the capacity by almost 50% over the next 3 to 4 years and going to almost 2900 installed beds at that particular time. Currently, the occupancy would be slightly something that is a slight worry because of it's fallen by around 7.5% to come in at 47%. So it was around the 55% range mark in FY23, and as of FY24 end, they've come in at roughly around 47%. So that occupancy is one of the key things. But of course, it's bear in mind that this is a niche business of constructed around the pediatric care as well as the gynecology that Harsh spoke about. So that's one of the key things as well. When you finally compare it to the valuation, there we'll see a stark difference and a premium to someone like a Rainbow based on the other peers as well. So you see KIMS is another hospital that's gotten that kind of premium. They're also operating other hospitals and entering key states like Maharashtra while increasing the presence in the south. Yatharth is another one which is present in the western. But when you look at the other peers as well, comparing to an Aster DM or a Shelby, it is kind of asking for that premium because of the higher ARPOB or the average revenue per operating bed, while also having a clear path to growth expansion over the next 3 years. So while the valuation has been at a premium compared to the other peers, it seems that the street is quite happy with the company's niche focus as well as higher margins as well.
But what stands out for me, Puneet, as part of that is the ARPOB. I mean, the ARPOB is at 56,000 rupees when others have a range of around 30 to 43,000. So it's nearly 25% higher than everyone else. Whether that can sustain or not is one question, but that is possibly one of the reasons why you're seeing the kind of valuation picture that you're seeing on Rainbow versus others. Not looking as expensive when you're looking at that ARPOB number, which is generally the right metric to look at. Also, occupancy is slightly lower, which is understandable because the space is niche. But let's sum all of this up. Let's look at each of these metrics. Income statement, such strong growth, right? And therefore is a positive. Balance sheet is healthy at this point. Very little debt in that sense. Return ratios are very strong, high teens. You're looking at cash flow, which has grown largely in line with your EBITDA. Shareholding 50% owned by promoters and therefore continues to be quite well held. FIIs, good interest being seen over quarters. If you look at the FII trend, very good interest in that sense. Street cred, well, it's been a very good wealth compounder, 26% in the last 12 months. And multi-bagger in the last 2.5 years. Street coverage is, flattish, and that's largely because of the fact that the upside here does not seem all that lucrative with just a 2% upside, and the valuation picture is negative largely because you're seeing that it's one of the most expensive hospital chains in that sense. So 6.5 on 8 is what Rainbow Children gets as part of what we have analyzed today. But let's quickly look at SWOT, Puneet. Strengths, weaknesses, opportunities, threats. I'll start with strengths. One, it's well recognized, right? It's a profitable company and it's in a very niche market. So what you're seeing is a company which is high margin, high growth in a niche market. Always difficult to replicate as a business, and that's one of the key strengths that it has. Pediatrics, not too many listed companies, and not too many companies only altogether, and therefore that is one of the key strengths of Rainbow.
But on the weakness side, of course, the valuation is one of them, but can't complain too much on valuations. It is getting rewarded for the kind of business they've built, and the falling occupancy is something that we'll quiz management also about, because from FY23 to 24 there has been a drop to 47% as well. But on the opportunity side, there is quite a bit that we should also
it provides a range of services, right, Puneet? You have a customer come in you can provide him with far more services, which currently it does not provide because it focuses on childcare. And therefore, you have a larger window of opportunity available for it to grow in terms of its service offering. Second is the scope for expansion. Currently focused on very limited geographies. We spoke about 5 states, but just about 6 cities. And therefore, the scope for expansion is very, very large in a high return kind of a business. And therefore, you have free cash flow coming in, which you can always utilize for the purpose of growth and expansion.
Well, then the other part is, of course, the competitive intensity that's been increasing around the city because certain, multi-specialty hospitals are getting into this space, and they're also entering the southern market as well, which is a big growth driver for the company. While the company's entry into the North Indian market has been slightly delayed, it's expected to start construction in March of 2025. So that's been one of the key things. But we will also be speaking about this to the management as well, Harsh, because the North Indian market is something that's, a very big growth driver going forward as well.
Well, yes, absolutely. So let's bring on board the management. Let's not delay this. Vikas Maheshwari, who's the CFO at Rainbow Hospital, talking to us live. Welcome, Mr. Maheshwari. It's good having you here. And it'll be great getting your perspective. So we've tried to break down your company, of course. So the attempt here is to try and understand what the growth could be over the next 3 years. What's your sense and where will the growth come from? Existing hospitals versus new hospitals? Just break it up for us.
Yeah, thank you. Thanks for inviting us and wish you a happy new year to you.
Wishing you a very, very happy new year, sir.
Yes. Thank you very much. So as far as the growth is concerned, it will be on the 3 legs. One is the existing units, which we have the matured units. We keep adding the doctors, we keep adding the specialties. So the growth will come from there. 1/4 of our units are new units, which has to grow and mature. Which in our language, the mature and non-mature is less than 5 years. So we feel that another leg of the growth will come from there as they keep on growing for the capacity which we have added. And the third growth will come from the new units which we have planned. In the next 3.5 years time, we are thinking of adding 1,000 beds. We have already laid out the plan for roughly close to 800 beds in our geographies. Out of that, in the 4 years, 3.5 years, you will see these capacities keeps coming up. So the growth will come from there. Broadly, on all these 3 legs or the growth drivers which we have just laid out, we believe that we should be able to grow our company based on the capex plan which we have listed at around 15 to 18% growth or mid-teen to high teens growth over a period of 3 to 4 years time.
Funding plan, Mr. Maheshwari.
So we have a very healthy balance sheet. I was looking at your presentations. So we have a very large investments also, which is invested into the debt funds, etc. So that the cash is 25 crores, but close to roughly 575 crore rupees we have invested into the debt funds. And the company is generating very healthy cash flow of around 350 crore rupees every year, and it will keep on growing as the company grows. So as far as the capex is concerned, it will be funded internally through the existing cash balance of 600 crores rupees plus our internal accruals going forward. And with this, whatever the capex plans we laid out, we believe that we will always remain a cash surplus company.
Mr. Maheshwari, good morning and thank you so much for joining us today. It's Puneet this side. I just want to ask your expansion into the North Indian market. I think you are opening 2 hospitals in Gurgaon. Wanted to understand because you've been focused on the south and steadily deepening your presence in cities like Hyderabad, but the North Indian market is of course very difficult to operate in because of the kind of competitive intensity there is there, while the company is also taken its time to go there. Just wanted to understand because just looking at some stats, the North Indian market does account for 60% of India's annual childbirth. So wanted to understand what's been the company strategy because these all will come only in FY28. So what would lead the growth in the next 3 years, as well as your thoughts on the North Indian market as well and your entry into the same?
So let me complete this in a different way. The growth from the south market, we are adding capacity in our existing market, which is Bangalore. 2 hospitals are opening this calendar year. We are opening 1 hospital at Rajmundry, which will also get opened first half of this hospital. So the growth will come from there. At the same time, we are expanding our footprint in Tamil Nadu, which is Coimbatore. We are putting up some hospital, which will get operationalized next 18 to 24 months time. And then the bigger one, which is the North India, which will come. But in the interim period, obviously, we keep looking at opportunities where we can put up the hospital where the healthcare requirement is there. So as and when we identify, we'll keep on adding. So that will drive the growth in the interim period where the biggest capex or the biggest capacity of 400 beds, which is coming in the Gurgaon. What we believe is that the Gurgaon is going to be the capital for the healthcare for the whole North India. It is an advantage north now because the government focus is also too much is on the North India, putting up the facility in terms of the infrastructures, road conditions, connectivity, etc. is very is much larger improving. The most of the capex or the infrastructures earlier was developed in the South India. Now the type of infrastructures, road, etc. is getting built up, and the connectivity across all the North Indian states is much larger. Say for example, Gurgaon to Jaipur or Lucknow or Kanpur, it is less than 5-6 hours, right? And in case of emergency, the people can drive down, reach out, or they can take the flight, medical ambulances, and then land out at Delhi. This is one part because we believe that whatever our peer group is also doing, they are putting up the large facilities in Gurgaon. We believe that the Gurgaon is going to be the hub, which was earlier the Delhi or other micro market locations. But I think Gurgaon will become a much larger hub, as in South India. If you come, there are the 4 or 5 large cities like Chennai, Hyderabad, Bangalore, Vizag, and obviously Coimbatore in the Kerala, 2 cities, which has developed as a healthcare hub. I think the Gurgaon is moving towards that. And in the next 5-6 years, we'll look at Gurgaon as a hub where the whole North India will flock for the healthcare. At the same time, in the pediatric space in the North India, there is nothing actually. So we believe we have a very high hope, and based on the discussion which we had and the internal assessment we have done, we have a high conviction of putting up that capex. And that capex, for that we have already procured the land, and few approvals have come, few approvals are expected, which we believe that it should be coming by February end, and the March we will do the groundbreaking. From there, it should take 2 years time to build that hospital. So we are putting up 2 hospitals. There one will be the larger multi-specialty, super specialty hospital of 300 plus beds. Another will be 100 plus beds.
And what about your ARPOB, sir? Because it's sharply higher than some of the other competitors. Is that number sustainable, 56,000 rupees odd? And what should one make of your return ratios? Would you continue to maintain a healthy return ratio, late teens kind of number? Is that the aspiration?
Yeah, so first is ARPOB. We believe that ARPOB we will be able to maintain and keep it growing inflation adjusted. Right now we have at around 55,000 rupees of the ARPOB. I think we will be definitely able to maintain that and keep it growing as a inflation adjusted. This is one. Second, as far as what was your second question on
return ratios, sir? You're clocking very healthy ratios. Is that sustainable?
Yeah, we are very financially disciplined company. Any project which we take up, we ensure that the return ratios are at 20% of the northward in terms of ROC. So any project which doesn't yield the returns below 20% of the ROC, we generally don't take it up. And what also helps us is that we are out of our 19 hospital, only 1 hospital is our own. The rest is all on the leased model. So that also helps us to maintain a very healthy balance sheet and return ratios.
Very a quick last question, hopefully a 30-second answer. I wanted to understand your acquisition that you're looking to do in the Northeast as well as the Western markets. You did speak about it at the end of the quarter too, that you are still in very early phases. Anything that specifically we should look at in terms of both of these, because Western markets still very difficult to get into. What's your strategy for both these markets?
So for the Northeast, obviously, once we have seen the data, the healthcare is very much required on those areas. And as far as the acquisition is concerned, our strategy is very clear, is that we want to acquire the hospital who has followed the same principles and on the clinical side excellence which Rainbow has followed. Because in case of pediatrics or the mother care, what is very important is that you take care end to end, and the patient satisfaction should be up to mark. And on that space, very limited opportunities are available to acquire. But one or two opportunities which has come on our table is where the succession issues are there. They have built a good hospital, good system, processes, and the outcomes, clinical outcome is good. We are looking at that one. It is obviously is a little early to speak about whether that will get closed or not. But we are pursuing one or two opportunities, and hopefully get closed in 3 to 4 months' time.
Okay, great. Mr. Maheshwari, thank you so much for joining us today. It's been good chatting with you. It's been great breaking down Rainbow Medicare.
Thank you very much.
Right, with that, it's out of time on this edition of KYC. From Puneet, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw?
Hello and welcome. My name is Anashri Vakharia and you're watching Markets at 12, a brand new show here at NDTV Profit. Let's begin with a quick outlook on what's happening with the markets right now. So in terms of where the benchmark indices are headed, if you can pull up the Nifty 50 chart, we'll see some bit of gains, 0.52% gains in the last half hour or so. The markets have remained range bound basically. Yeah, if you can see 0.52% gains. Let's see what is contributing to these gains that we are looking at in terms of today's Nifty 50 stocks. So we have Reliance, ICICI Bank, ONGC being the top contributors. ONGC up about around 4 to 5% after this upgrade came in from CLSA, wherein now it is their high conviction outperform rating, seeing about more than a 40% of an upside here. While on the downside, we have TCS, HCL Tech and Infosys, the IT pack, which is taking a downtick in trade today. Tech Mahindra, another one, seeing some bit of downside pressure. Now, most of these companies are going to be reporting their numbers in the week later on, so definitely all eyes would be there. In terms of where the other stocks are doing, we also have names like BPCL, Eicher, Wipro seeing about 1 to 0.68% of cuts in the trade. Tata Motors, Tata Consumers on the other side, they're clocking in about 2% of gains. We have IndusInd Bank, RIL, Hindalco, all seeing about 1 to 2% of gains. Now, this is as far as the benchmark indices go. Let's pull up the sectoral indices also. Let's see what is pulling up the sectors. We have the likes of, if you look at all the sectors, Nifty Media, Nifty Digital, Nifty IT. Nifty IT we talked about, that's down in trade. Otherwise, we are all seeing some decent amount of gains in this. Nifty Metals up around 1.5% and Nifty Pharma also seeing about 1.32% of a gains. This is as far as where the sectoral indices are headed. Coming to the mid cap and the small cap indices, they both are outperforming the benchmark indices, seeing about 0.75 to 1% of gains in trade today. The top gainers in the sector, if we see, we have the likes of Biocon, FSCT, UPL, Oil India, Ajanta Pharma. A lot of these names buzzing on the back of brokerage notes that we are seeing 8% to 3% of gains on this side. While what is leading to the drag also, we can pull out a stock like Linde India, LIC Housing, Sun TV, seeing about 1 to 2% of losses in trade today. Now, coming to the small cap 250 picture, if we can capture that as well, ITI, it's seeing about 10% of losses. Now, this is after a significant run-up that has taken place. The stock was up around 11% in trade yesterday. KEC International, the stock was buzzing on the back of an order win yesterday. Today, seeing some profit correction around 5% down. PVR Inox, another name added to the list. While on the other side, we have Intellect Design, First Source, EPL, and Just Dial seeing about 5 to 8% of gains. But moving up, shifting focus, Adani Group is in focus now. Adani Group has partnered with Thailand's Indorama Resources to strengthen its petrochemical presence with investment of 35,000 crore rupees. The petrochemicals business will be under Adani Enterprises. Hiral joins us to tell us more about this deal.
Absolutely. So Adani Enterprises is the one that is in focus today, and this is on the back of the foray that the group is making into petchem. They've partnered with Indorama Resources for the petrochemical sector, and they have set up an equal JV, which is named Vellore Petrochemicals. Now, VPL is incorporated with the objective to set refinery, petrochemical as well as chemical businesses. Now, overall, this partnership with Indorama will actually involve almost an investment of around 35,000 crore rupees, and this is in the Mudra-based PVC manufacturing facility, which will be powered by renewable energy. To be noted that petchem will be under Adani Enterprises, and in 2021, Adani Group had floated a subsidiary as well, which was Adani Petrochemicals, and this was mainly to actually go ahead and set up refineries and petrochemical complexes. A little bit about Indorama Ventures. It is one of the largest petrochemical producers globally, and the company is based out of Thailand, and it's one of the world's largest producers of integrated polyester products and fibers. They are also one of the key players in the chemical sector. Their manufacturing footprint spans across almost 117 locations in 31 countries, and their combined PET and packaging solutions serve customers in diverse growth markets. They have almost 26,000 employees, and a revenue of almost $15.6 billion is what they achieved in FY23. Overall, in terms of Adani Petrochemicals, they are looking to invest more than $4 billion in the petrochemical complex. And if you talk about their PVC capacity as well, that is expected to be constructed in a phased manner. The first phase will be comprising of 1 million tons PVC plant, and this will be by 2026. And the second phase of equal capacity is expected to be commissioned by early 2027. So a foray in terms of petrochemicals, one of the largest sectors in the offing, and that's one of the reasons why you have Adani Enterprises, which is a buzz.
Definitely big development coming for Adani Enterprises. Stock remains in focus here. Now the next stock in focus is ONGC. In fact, it's the top Nifty gainer this morning. This is after CLSA has upgraded the oil and gas major to a high conviction outperform rating. Mika joins us with more on this.
So CLSA has done its upgraded ONGC from an outperform rating to a high conviction outperform rating. The brokerage has also hiked the target price for the upstream company to 360 versus 330 rupees earlier, and this puts a potential upside of 41.2%. Now in terms of the view on ONGC's business, well, the recent production ramp up at their KG98 block kind of raises confidence for the company's ability to meet its peak production targets, what CLSA is saying. They're also saying that the increased gas price realization, this isn't regarding of the ONGC's new wells getting a premium pricing in terms of the fixed pricing. This the results of this will be visible in Q3, and also the removal of windfall taxes will allow ONGC to have higher crude realizations, about the $75 per barrel mark that the windfall taxes were previously capping the realizations on. CLSA has also raised the FY25 and FY27 EPS estimates by 2 to 8% because of these factors, and it's also noted that ONGC is currently trading at a material discount to its peer average, and this comes despite multiple growth triggers for the company.
In fact, there are other developments also in the oil and gas sectors that we should be watching out for. BPCL has given an in-principle approval for an IPO of Maharashtra Natural Gas Limited, also known as MNGL. Mika, can you share more on this as well?
We actually have BPCL, IGL and GAIL India in focus. Now this is the company that has gotten the in-principle approval is Maharashtra Natural Gas Limited, which is a joint venture between these three companies, and the approval is for roughly around 1,000 crore IPO. Now in terms of the stake percentage in Maharashtra Natural Gas, Indraprastha Gas has 50% stake in the joint venture, Bharat Petroleum at 22.5% and GAIL India at 22.5%, and the Maharashtra state government holds a balance of 5%. In terms of what it does, well, it is the authorized city gas distributor for the city of Pune, and as per city research, there is value unlocking for the stocks, currently listed stocks. The listing of the joint venture will help unlock value for IGL and Maharashtra National Gas. Contribution in city's target for IGL stands at 45 rupees per share, which is a significant number, and the potential listing could also unlock value in GAIL's unlisted city gas distribution investment as per city.
Well, thanks for that, Mika. That was the overall view on the oil and gas sector. A lot of developments there. But quickly addressing some of the key earnings which have just come out right now. One, MobiWix Systems is out with its earning. We are seeing a total income growth of 42%. And this is at 294 crore. This is the consolidated figures that we are seeing. 42% of a growth YOY in terms of where the total income is. Net loss has also narrowed down to 3.6 crore versus a profit of 5.2 crore, which was there earlier. Total income, again, do note that this total income numbers that you are seeing, it's 15% downtick that we are looking at, and net loss of 3.6 crore is what we are seeing. But shifting focus from here, India's car industries has carried over nearly 2 months of unsold stock into the new year, underscoring the demand headwinds in the world's largest, third largest automotive industry. Tushar brings us the details on this one.
While retail auto sales rose by nearly 10% in 2024 according to FADA data, what stood out, however, was the fact that India's car industry is entering the new year, that is 2025, with unsold stock of about 2 months. So while car sales, that is dispatches to dealerships, stood at about 42.86 lakh units, according to the company numbers declared earlier this month, vehicle registrations as measured by the government's Vahan website stood at 40.73 lakh units or so. Now that indicates a gap of 2 lakh, but that should not be seen as a like-to-like comparison, so to speak. But FADA has said that the inventory level at dealerships at this point of time is about 55 to 60 days. While car sales, retail car sales rose about 5.18% in all of 2024. In the month of December, it actually declined by about 2%. The picture was similar in the two-wheeler space, which recorded actually a jump of 11% in yearly sales, but the monthly sales were actually down by about 17.6%. Four-wheeler sales were up 5.18% year on year in 2024, but down 22%. Three-wheeler sales were up 10.5% for the entire year, but actually were down in about 4.5% in the month of December alone. So essentially, what this picture actually shows that while the industry has grown year on year, but for the month of December, there has been some lag due to the seasonality factor that comes into effect at this time of the year.
Adding more details to this, we also spoke to FADA CS Vigneshwar on the state of the current inventory levels and why it's a cause for concern. Do listen into this slice of conversation as well.
I think we've been having a great run in terms of the sales over the last few years. In fact, this year was slightly below expectations, but still, given the headwinds, given the start-stop scenarios which happened throughout the calendar year, finishing off with a healthy 9.1% overall industry growth, I think is excellent. We've also been having green shoots after a long time in the two-wheeler segment, which has finally shown a growth of nearly 10.7%, because the previous couple of years were a little bit disappointing there. So it's excellent news, and we also see the rural markets participate more strongly, which is a good thing. However, as you rightly mentioned, that having some issues in terms of stocking in the passenger vehicle segment, and we've been having this for the last 7-8 months. We've been also working with the OEMs and also sounding it off to them, saying that we need to optimize stock here. Yes, the stock has certainly come down in the last 4 months, but still we are way above the optimal figure of 21 days.
Well, that was the FADA data that was in watch today. Now let's shift our focus to Quadrant Future Tech, whose IPO opens today. My colleague Sajid Mangat spoke to the company's management as they discussed production capacities and the road ahead. Do listen into this slice of conversation.
Coming to the production capacity of a company, we already had a fully automatic EMS line, a redundant line, so that is capable of doing this stuff in terms of 1200 locomotives which you talked about comfortably without increasing any kind of machines or equipment in the company. So that anyway existed in the company, and that is what was also assessed by railways. Coming to the other kind of strengths, as you said, or the capabilities, and you mentioned about raising the top line from 150 crore to this particular figure which you talked about. We foresaw this thing coming. As I said, very, very ambitious plans of railways, Ministry of Railways, on deployment of the safety critical systems on the field, that to a very vast networks. So we saw that coming. So that is how, looking at the kind of volumes which were being talked about, it was very essential for us to have this IPO in place, so that it further strengthened our existing strength to execute this order in the timely manner.
Give us a sense of the kind of execution timeline. Means it's 12 months, which you have, stated in the RHP. But is it back-ended in revenue recognition, or how does it work? Railway order means you have to do the execution first, and then the revenue gets recognized. Just to get an idea of how the railway orders work.
Yeah, this particular order is very special because railways did it differently. They draw a deadline of 12 months so that when the order is received, so immediately after that the clock starts and you have to execute the complete order in 12 months. So probably we have about 11 months left now, and we are fully geared up in the sense that we are hopeful of receiving the final approval shortly along with other suppliers, and then start the manufacturing part of it. And as such, the purchasing has already started, and hopefully we will start our production in the month of March, and then subsequently start supplies to complete that order before time.
You mentioned that the order was for 10,000 units and you got 1,200 units from Chittaranjan Loco Works. What is the kind of opportunity which is there in Kavach? I mean, 10,000 is just a starting point, if I may say. What could be the potential which is available here for you?
When we say the potential of Kavach, obviously we know about the vast network of Indian Railways. So the Kavach system has to be deployed over the entire network of track and stations and locomotives, EMUs, and all kind of trains. So there is a huge network, and obviously you see new trains being built, new locomotives being built every year, new stations coming up, new tracks being laid. So this is going to be an ongoing journey. And moreover, safety critical systems or signaling system like this, they keep upgrading from time to time. You can refer to different regions or developed regions of the world like Europe, wherein they started with ETCS, started with level 1, level 2, they are talking about level 3. So same is the case here. When you have good ambitions to increase the speed of the trains, so obviously you need to increase the speed of, or you need to enhance the safety, and you need to enhance the software and hardware engineering that are associated with it. So it remains an ongoing journey. And as I said, that the network is very, very vast. So the potential is quite immense and huge for this system.
Well, that was the management of Quadrant Future Tech, one IPO that you should definitely be watching out for coming up in the Kavach space. But shifting focus, another management in focus, another company in focus is TCX System. This is after the company has received an order worth about 483 crores from its customer Elta Systems Israel. To talk more about this development and the outlook forward, we are joined in by Mr. H.S. Raghavendra Rao, the CMD of the company. Hello, Mr. Rao. Welcome to the show.
Namaste. Thank you.
So firstly, we'll talk about the recent order win on cards, a 483 crore of an export order that you've received from your customer, existing customer, I believe, Elta Systems. Can you talk more about this? It's a significant one considering your order book size.
Firstly, this what we received, this 56 million, roughly about 483 crores. It is the one of the milestone of DCX. Earlier stages, we used to do the subsystems. Like the full system, it will be integrated, and after we supply the subsystem. Now what we received is a complete system to be built and tested and export. This is the biggest the opportunity what we get is customer has trusted us and proven all the old record, our quality and deliverability and the supply chain and efficient management. So now we got this full system integration. This is a very proud moment for DCX. That means every stage we are growing up the ladder for the cable to PCB, PCB to system integration. Now we are going for the full system integration. This is a very, very team is very, very really is a very good development in DCX today. That's what I like to put it to you.
Absolutely,
And this
definitely watching out for this one. But can you also talk about what is the kind of execution for this order in focus that is currently there? And you said that you're moving up the higher value chain. Can you, are you seeing more opportunity in terms of that, in terms of the recent orders that you're seeing?
Yeah, definitely. This order book, what we have received is 483 crores to be executed within a 12 months. Of course, this product got a lot of demand, and just we received the last week, and already we are started other licensing activity. You know, defense required a lot of export, import license, and hopefully we'll going to complete this within 12 months. That is our gut feeling. And it is very prestigious product and is required a lot of demand for a worldwide. ELTA is not only for Israel or India, they are supplying to worldwide of this type of product. So there is a lot of demand for this product. The supply chain also has been improved now, and we are competent to deliver within 12 months. What is the commitment day? And upcoming program, of course, is a DCX is a full turnkey solution which we provide. From start to finish, from cable, PCB, subsystem. Now we are doing the master system integration, and all the three area got opportunity. And I'm seeing upcoming days after proving this full system integration, what we received now, there are big chances to go further up to complete the master system integration. That is our goal. There are opportunities are big for as well as the export as well as the Indian market too. And we are fully geared up, and opportunities are big for this high-end system to build in India.
Fair enough, Mr. Rao. You're looking at a 12-month execution period. In fact, I was currently looking at your order book. In the last 3 quarters, we have seen a significant pickup in terms of where the order book is. 801 crore was the figure in Q4 of FY24. From there on, Q2, 2,164 crore, and now a 3,000 plus figure that we are looking at. I want to understand from which segments in particular are we seeing more of these orders coming in? Is it from the domestic side? Is it from the international side, or a product type which is supporting these kind of new orders? And what usually is the execution period timeline for the total order book that is currently there?
See, presently we have about 3,600 crores order. It has been mixed with the domestic and international. So the export about our 70% and balance 30-35% for domestic market. The overall order what we received about 60-70% is a 12 months delivery time. The recent domestic order take about 2 years. Overall, we can say about the total order book, we have fulled another 2.5 years revenue for the present order book, what we are having in the today. So to overall 2.5 years, we need to execute this program. And 60-70% within a 12 months period, we can able to complete about nearly about 2,200 crore or 2,400 crore. We are able to complete in the next 12 months.
Yes, so 2,400, 2,600 crore till the next year. But I want to understand, in the next 2 to 3 years, if we see now, there are a lot of discussions about Q4 being a crucial period for the defense sector in general. There's a lot of orders that are going to be bunched up in this quarter, so high order expectations. What is your sense on the kind of order book that we can see from this 3,600 crore plus figure in the next 2 to 3 years? And what is the kind of incremental revenue growth that you expect in these next 2 years as well?
See, normally you rightly said that our last quarter is very, very important because of the licensing, material availability. It is going well. And I'm in the, you can see my last 4 years, 5 years record. Last quarter was the highest. Let us take example about last year. We done about 1,424 crore. About 700 crore we done on the first 3 quarters. The last quarter is only about, we done about 50%, more than 50% of the overall 9 months revenue. It is normally like that only, and this tendency will be continue in DCX2, this order book. Presently, and we still have many things to come. This all working with not offside, off-shelf available equipment or the component. It has to be run through many process. And hopefully DCX is in the well within the target, and we have an internal target to achieve our revenue, increasing our EBITDA and those things. And definitely I will come back to you with this thing. This all normally I won't give the guidance number. It's not a company policy, because I am working with a very, very sensitive area for the defense. Some of the thing, sometime I'm not able to get the on-time material or license, many issue. I don't want to give you the guidance number to finally what I am execute. There is an internal target for us to achieve, but I don't want to give the guidance number. So finally, I should not achieve. I should not be disappoint our investors. And also, I'm not allowed to give many things because of the national security or outside NDA matters. So I'm not allowed to discuss more on the revenue pattern, material availability. So that's what. But company is in the focus. We are well within our plan, and we're going to do well. That's what I can able to mention here.
Absolutely, Mr. Rao, that is fair to understand. I just want to understand that no need for the numbers and all that, but considering H1, we had seen some bit of downtake in terms of where the revenue was. This was because of some of the challenges which persisted, the Israel conflict as well. How is H2 shaping up? There's a lot of optimism about the defense industry in general. Your outlook on the overall sector, not just for the company specific, and some of the key developments that you want to specify on. Yeah.
Okay, generally I can talk, and present situation for the MOD taking, especially our MOD taking everything on the Make in India program, Atmanirbhar Bharat. And last, what I see in last 4 years, it is a big successful for India. Many things is happening. Many companies are coming for India, whether joint venture or technology transfer or product to be manufactured in India, because Indian defense market is huge. They don't want to lose the business in India. But our government has put a lot of condition to make self-sufficient Bharat. So that's what Atmanirbhar Bharat. These are, I'm seeing very, very big team, big companies are coming to India. Like our companies are most benefited for this, because we are already in the platform and we set for the defense manufacturing. So I'm seeing huge potential in this business. Upcoming days are very good. And not only that, and India got a very good skilled manpower, and the labor is compared to those countries are cheap. And those, let us take example. No, I'm not only doing for my Indian companies production for Make in India program. I'm doing 70% of my production utilized for export, because the line is set, the price is competitive, they will get a quality. So overall situation in the global and the situation in the everywhere, and India is a well positioned to capture this opportunity. That's what I wanted to underline this.
Right, absolutely. It is the most important area for focus. But thank you so much, Mr. Rao, for joining and sharing your perspective on the company and the strategy forward. Well, that's all the time we have on this edition of Markets at 12. Do stay tuned to NDTV Profit for more news and updates coming on the other side.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Hello and welcome to Profit Buzzers. This is Hiral Datia. Let's quickly take a look at how markets are doing at this hour. Let's pull up Nifty 50 on the screens. Clearly, if you see, we are seeing gains of almost 0.5% coming in there. We are above the 23,700 mark as we speak. A little over 100 points is the kind of gains that we are picking up today. Let's pull up Bank Nifty, and after that a heat map with regards to the sectors. Bank Nifty in fact is nearly at the day's highest levels with gains of 1%, inching towards the 50,400 mark. In fact, we did hit 54.15 in terms of the day's highest levels, but some cool off has also happened. What's weak? Nifty IT has been trading under pressure today. In fact, the after tomorrow you'll have the IT earnings, which is TCS, that will start trickling in. So ahead of earnings, we are seeing some bit of pressure with regards to where IT goes. Oil and gas is up 1.5%. Healthcare is on an uptick as well. In fact, healthcare and hospitals, all of them are seeing some bit of an uptick, and this is on the back of the HMPV virus. So some moves on that front. Metal index is doing pretty well. Energy is seeing gains of nearly 1%. So across more positives versus negatives, it's mainly IT and digital which is trading in the negative. Let's quickly pull up Nifty 50 components and see what's happening on that front, because clearly the advanced decline ratio is crucial. But you have ICICI Bank, RIL, HDFC Bank, ONGC. These are the ones which are contributing to the gains. Whereas on the losing end, you have TCS, Infosys, HCL Tech, Tech Mahindra, all the top four coming in with regards to where IT majors are concerned. Let's pull up the broader markets also very quickly of the mid-cap and the small-cap index, and let's see what's happening on that front. You have the mid-cap index, which is clearly outperforming with gains of around 0.9% coming in there, and you have the small-cap index as well, which is in focus with gains of 1.2% in today's session. In terms of stocks from the broader markets, you have the likes of your Spandana Spurti, which is up almost 11 to 12% in trade as we speak. Kirloskar Brothers is up around 9 to 10%. Intellect Design is seeing some smart moves in today's day of trade. Overall, apart from that, you have Equinox India Developers. That stock is locked in upper circuit, and this is on the NCLAT order with regards to where Indiabulls real estate goes. So Equinox is one stock that is in focus as well. You have UPL, which is up almost 9 to 10% in trade. So these are a few of the movers, but apart from that, ITI has now started to see profit booking in today's session after the kind of run-up that we've already seen. J Corp continues to see profit booking over the last 3 consecutive sessions, and this is on the back of the story that Sajid Mangat, my colleague, got for us as well. In fact, let's pull up a 5-day chart of J Corp and see what that counter is doing, and the kind of losses that have built in terms of where J Corp goes. But apart from that, you have, there you go. 42% is the kind of cuts that we've seen in the last 5 days. You have KC International, Naukri, Zomato as well, which is trading under pressure. But let's just quickly pull up a GM Breweries on the screens. The company has just reported numbers as we were into a break. And that stock right now is seeing gains as we speak. The revenues are up around 5.7% at 166 odd crores. 0.4% uptick. You did see a slight dip that did come in as the numbers were announced. Net profit, if you go to see, is down almost 3.1% at 21 odd crores. If you see in terms of the EBITDA, that number is at around 29.7 crores, which is up around 18%. And the margins have also improved for a GM Breweries to a 17.9% versus a 16%. So now I think you will see some bit of a recovery. In fact, Alcobev companies have been doing pretty well lately, and this was because the third quarter is usually filled with festivities. So that's with regards to where GM Breweries go. And that's a snapshot of how the earnings have panned out. But moving on, let's now take a look at Biocon Biologics. It's actually been a year since they became a global biosimilar company. Earlier in the day, we did catch up with Shreyas Tambe, who's the MD and CEO of Biocon Biologics. The stock is up 7.5%. Let's hear out what he has to say on the company's growth outlook. We will hear a slice of that conversation.
It's been a great year overall. I would say, stepping back, not just the last quarter which you referred to, which was an amazing way to end the year. We couldn't have had a better way to end the calendar year that we did, with the kind of approvals and the recognition of all the effort that our teams have put in to work with global regulatory agencies and setting us up in a very nice way to get to the next calendar year. So I think the end of the year was good. But having said that, the year itself, Tamanna, has been a very, very eventful year for us.
Now tell us why. What do you think has been the biggest challenge, and what has been the biggest achievement in your view?
I think the way I would see it is that these are two coins. These are two sides of the same coin, whether it's the challenge and the opportunity. And we've had quite a few of those at Biocon and Biocon Biologics in particular. The year that went by was another eventful year. It's really transformed us into a truly global, multinational, multicultural, global company, which is amongst the top 5 biosimilars companies now in the world. We used to be known for our innovation, which we continue to be focused on, which is a science and operations company, or development and manufacturing, as they would say, to now having got through the acquisition that we did in November of 22, a very strong commercial engine. So we are now a fully integrated player, one of the top 5, as I said, and in over 120 countries, where through our own self-led teams as well as our partner-led teams, we are in a better position to reach out to more patients and serve them with these high-quality products that we are developing and manufacturing at Biocon Biologics.
Let's talk specifically about the 2 approvals that have come in, one of Yesentech and Yesafili. What are the launch plans? What is the kind of timeline for this? What can you add, Mr. Tambe, in terms of the market size and revenue addition that you expect from these 2?
Yeah, and I must first compliment you for the way you pronounce them, because that's the exact way to call them out. The year is to look forward to the Affili and Intech. These are the 2 products that we will be looking to launch in the coming year, and we have been able to navigate the IP landscape. So you will see us bringing these two products which are focused on debilitating diseases, one in immunology and the other one in ophthalmology. So the Yesintech product launches in the US in February of this year. It also has a global launch plan because we also will bring it to patients in Europe and other parts of the world, in a staggered manner. And we'll also bring Yesafili, which is the ophthalmology product for certain very debilitating conditions for patients where the injection is an intravitreal injection, so it's injected into the eye. And these are products that we are very proud of, and we'll bring those to different countries as we navigate the IP landscape. The first one will be, of course, Malaysia and Turkey, and we'll bring them into Canada shortly. So a lot of interest and a lot of excitement about these products in the months to come.
What are the broad timelines that you can share with us, Mr. Tambe? And I'll reiterate my question on revenue contributions that you're expecting in year one.
Yeah, as I said, the timeline it starts right away in this financial year for Intech, which is starting in February of 2025, which is in this quarter. So you will see that starting to make a difference right away. And you will see, Affili, which will start probably in the first half of next fiscal year. So that's how we have phased these launches. But in addition to these two new launches, Tamanna, there are several other products that we're launching as well. The year that went by saw 60 product launches in different countries for products that we had sold in the US and Europe before, but we launched them in 60 different countries. So it's a very busy time at Biocon Biologics.
Okay.
So that's the first part of the question. The second part was you asked about the revenue contribution. We've refrained from giving specific product related revenue contributions, but I think what is very, very important to note is how we've grown the business. If you just look at last year, we've had a 58% revenue growth over the previous year and a 64% growth in EBITDA. So it's not just been a sales increase, it's been a very profitable sales increase. That's when you call it growth. A 25% EBITDA margin with that kind of a growth where you're over $1 billion in revenue, I think bodes very well as we get into fiscal 26.
What are the kind of launches that you're looking at in 2025? Mr. Tambe, you talked about 60 launches in 2024. What is that number looking like in 2025? And what are the landmark approvals that you're perhaps watching out for?
Let me just give you a overall sense of what this is. So when we say 60 launches, these are products that you would have got global approval for, and you would bring it to patients across the world. And those would be in different countries. So every country launch is a unique launch because it's an important milestone for that country and patients in that country. So for us, we look at every launch as we bring product to patients in different countries is a very important milestone. So just to get that clear, and we'll have several of those coming up in fiscal 26, which is the year that will come up next quarter. Having said that, let me give you a broader sense as well in terms of new products that we are getting approval for, which were never approved so far. There are 3 new products, 2 of which we've just talked about, and there's another product that we will bring in addition to this. There are 5 new products that we will bring to the US. So if you look at it, in the next 2 years in the US, we have 3 or 4 products today. We will bring another 5. So that will be 9 products in the United States. The 3 products out of the 4 that we've launched, 2 of them are in oncology. Both of those products in oncology have over a fifth of the market, which means it's a very, very sizable share that we have that shows the trust that patients, payers, physicians have shown in Biocon Biologics and the products and the patient reach that we've got. Even our insulin product has a very strong market share, and we've continued to hold on to that. We will be bringing more products to Europe. We already have 8 products, and we'll bring another 3. So you will see us cross that 10 double-digit numbers in Europe as well. And we'll bring these products also to several emerging markets because we've always been a company which has believed in broadening access and bringing products to patients who are really in need of these. And you will see us bringing these products to the 80 countries and emerging markets that we are present in.
Okay, let's talk a bit about the last 1 year from the perspective of financials, Mr. Tambe. And your EBITDA has improved, has gotten more robust. Revenues perhaps slightly tweaked downwards, but margins looking healthy at about 32% in the second quarter of this financial year. If I were to look at this from an FY perspective, what do you see margins closing in on in this financial year? Are you looking at the 30 to 32% range being margins being protected there?
Yeah, I think this is a very important question. I think it is important to get your viewers to see what kind of a company that we've been over the years. Even when our base has changed from being a $200 million in revenues to now being over $1 billion in revenues, which is that $8,000-$10,000 range, and you already in that 10,000 crore range. So you are in a very, very different baseline. But we've always guided to the sense that we would be in the mid-20s in our EBITDA, and we've always performed to that. We've also said that our research pipeline is our lifeline, which has always differentiated us. We are one of the few players globally that has that kind of a strong research pipeline, product pipeline, which continues to be very rich and differentiates us globally. We've continued to invest and guided that we would be that 7 to 9%, given that the base has now increased. So despite that investment and to fund that investment, we've grown the business, and we are seeing a very strong EBITDA after investing in R&D in the mid-20s. In the coming fiscal year, we expect these things to continue. We expect a growth as well. Given that the current market shares of the product are holding well, and new product launches are slated, right in the beginning of this calendar year. So we should benefit in several geographies from these launches through the year. We will continue to look for profitable growth in the mid-20s on an EBITDA look-forward basis.
And just coming back to the question and the point on margins, is this the range that we expect to be maintained?
Yes, we would be very much focused on that kind of a range, because we believe that growth is important, and it's growth only when it's profitable. And that's been our history. I mean, it's not something that we're talking about today. If you look at us historically, we've always been a company that's been very focused on profitable growth and very conservative when it comes to leveraging our balance sheet. It was only when we did this transformational acquisition that we really had debt. Otherwise, over the years, we've also never had debt on our books.
Yeah. No, so both things that I want to come to on your R&D pipeline and on your debt. But since you've just spoken about debt, I'll come to you on that. How will the debt refinancing, which you've undertaken in the last calendar year, help you with business growth? And if you can add what the finance costs will be for this newly added debt, what are you penciling in?
I think very important for your viewers to look at this in the right context. We've, as I said, we've been a very conservative company financially over the years. We've never really leveraged our balance sheet ever to do this. We've always been cash positive. Given that this was a transformational opportunity, we just talked about it at the beginning of the show, where we moved from being a two-country company to being present in over 120 countries. The kind of growth that we've seen amongst the top 5 players. When we did that acquisition, we had a debt of $1.2 billion for the first time when we actually did that kind of a transformation. Now, having done that, we wanted to make sure that we had a strategy which first consolidated the business, preserved value in the acquisition, then consolidated the business, and then accelerate. Now, we've completed the first year anniversary as we talk today. We are celebrating the 1-year anniversary of having completed the acquisition and run it as Biocon Biologics. So it's a very important year for us that went by, and And we're very proud of what we've done over the course of the year, several milestones that we just talked about. So that preserve part of it, we're very comfortable. We've been able to retain the confidence of our customers. The current year that we are in is the consolidate phase. And one of that consolidation was what you asked, was fiscal consolidation. How do you make sure that we are able to focus on growth on the business rather than focusing on the debt and the repayment of the debt? So one of the things we did was we came up with a bond issuance, which is now listed on the Singapore Stock Exchange to the extent of $800 million. And we're very proud to see that there's been a lot of investor interest in the Biocon Biologics story. The bond issuance was oversubscribed threefold, and we couldn't issue enough bonds to everyone who had asked and subscribed for it. So we're very happy to see that kind of interest. It bodes well for the equity listing, which we have said we will do at the right time. And it has allowed us to then now focus on the business because it gives us 5 years to then look at the debt in a different way. And the cost that you asked in terms of how we've refinanced it is not higher than what it was for the syndicated bank loan. And that's why we feel that what we've been able to achieve is a good 5-year moratorium. And apart from that, we've not increased the interest repayment costs. So that's been a big win. And most importantly, it shows that the street's very comforted and confident in the Biocon Biologics story. That helps us as we go towards the unlocking of value that we've talked about in the past.
And when will that be, Mr. Tambe? Calendar year 2025, first half, second half, what is on that horizon? And I think that's the big one really for unlocking shareholder wealth this year.
Absolutely, and I think these questions are very valid, and you've probably asked these of me in the past as well. I've in the past as well said that we are first focused on making sure that we put the building blocks in place. We wanted to make sure that the financing was taken care of, so we were not strapped on the debt repayment side. I think we're very comfortable there. We were also very focused on making sure that business continuity was taken care of. Now that's also showing the right trend with over 20-25% in most major markets in terms of our market share. So that tells you about customer confidence. And the third important thing that we wanted to check was the US FDA approvals that would enable and unlock opportunities for the new products that we just talked about in new markets. And I would say we've been able to check all these boxes. And as we move past these key must-haves, I would say, we can start discussing, what's the right time to look at this unlocking of value.
Have you initiated the regulatory process, or that hasn't started yet?
Not yet. We will of course keep you informed on those developments as and when they happen.
Okay.
But keep tuned to how that's developing.
All right, we'll hope to hear from you first when that does happen. Let me come to your R&D pipeline, because that's an important component of this. Give us a picture of what is the R&D pipeline right now looking like? Any timelines on that you can share? And what is the R&D spend? Are you going to keep it in the range that you've mentioned? Are you looking at a scale up?
Yeah, and R&D, as I said, is a very important part of our business itself. We wouldn't call R&D as spend. We've always called it as investment. That's what's differentiated us. That's what kept us ahead of the curve. And that is what we believe will be a key differentiator even as we go forward. We have a very robust research pipeline. We have over 20 products, either commercial or under development or closer to approval. We talked about some of these products getting to market in the next 2 years or less. So 5 products in the US is a great, exciting opportunity for our commercial teams. 3 new products in the next 10-12 months in other geographies. And we're looking to be focused on diabetes, oncology, immunology. And now we're bringing a new therapy area, a product there, which we talked about, Yesafili, in the ophthalmology space. So we haven't spread ourselves too thin, and we aren't looking to be in a mass play. So we are focused on debilitating diseases, and the investments that you asked me about, we are in that 7 to 9% of our revenues. Given that our revenue base continues to grow, I think we've got sufficient headroom to invest in the rich portfolio of products that we are developing. And we'll continue to bring them to patients across the world. Some we will develop in-house, and given the strong commercial presence that we have in several countries, we'll be open to bringing products in as well, given that we have a large and a strong commercial presence in many countries now.
You talked about the US opportunity, and in that context, wanted to just understand that the recent VAI classification in the Bangalore facility, how does that open up more US potential for you?
Let me just step back a little bit, Tamanna, on this to give you a sense that we've had an exceptional track record with global regulatory agencies. So we've been very proud of our track record with the European regulators, with the Japanese regulators, or even regulators in emerging markets, whether it was the Anvisa in Brazil or COFEPRIS in Mexico, the Indian regulators. We've had a exceptional, stellar record all along. Given that we've went past the pandemic, I think we've had a delay in approvals from the US FDA, both in India and in Malaysia. This was something that was important for us to address. We needed to work closely with the agency to demonstrate the kind of quality systems we have, the kind of products we make, the kind of the competence and the people we have. And that's what we've done over the course of the last few years. And what you just asked me is this was an important milestone for us, because any regulatory inspection is not just about that product. It opens up the opportunity because it indicates the confidence of regulators of that country to show that here is a supplier, here is a partner that can give and make these products, life-saving products, in a very reliable manner. And that's what we really wanted to partner with all these key regulators globally. And we're very proud that our teams have been able to successfully demonstrate that. We continue to work with them because we still have to work on Malaysia.
I was actually just going to come to you on the Malaysia update, because Bangalore in the clear. Is there anything that we can add in terms of what's happening with Malaysia? I know the CAPA has been filed, but since then?
See, these are all ongoing process. I know you are trying to say that Bangalore's is done, and Bangalore is done for today, and it's an ongoing, continuous process. So we stay focused, even in India and even in Bangalore, on our plans. And in Malaysia, we work with the agency, and we're looking forward to hearing from them on the response to the actions that we've proposed. And we're hoping that they will see a merit in what we have said. We are confident in what we have proposed, and we believe the agency would be convinced with how we've approached this.
That's an interesting outlook coming in with regards to where Biocon biologics go. In fact, the entire pharma pack that is buzzing in trade, the stock is well seeing gains upwards of 6%. With that, it's a time for a quick break. On the other side, we'll bring you a special chat with Dr. Vineet Samdani, pediatrician, Breach Candy Hospital, and Dr. Ramasubramanian, consultant, infectious diseases at Apollo Hospitals. Please stay tuned.
This is not my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers.
Welcome back. You're watching Profit Buzzers, but now let's talk about a topic that's actually causing a stir. The human metapneumovirus, or HMPV as it's called, with cases on the rise in Asia and some detected in India. Should we be bracing for another health crisis, or is this hype overshadowing the facts? This is going to be critical to discuss as well. To join, we have two of our guests who will be coming in. We have Dr. Ramasubramanian, who's the consultant infectious diseases at Apollo Hospitals, who's joining in. And with him, we will be joined by Dr. Vineet Samdani, pediatrician at Breach Candy Hospital as well. But first, let me get in Dr. Ramasubramanian. Dr. Ramasubramanian, good afternoon and welcome to the show. How are you looking at HMPV? How dangerous is it? And what are you picking up on it firstly?
Good afternoon. And at the outset, I would like to say that there is a huge, hue and cry going on about nothing. The human metapneumovirus has been around for over 60 to 80 years amongst us. It was identified and named as a HMPV only probably about 25 years ago, but it is believed to have been circulating for several decades before that. It's a virus which is akin to the normal cold virus, which causes a reasonably innocuous disease in most people who are healthy. Probably it may cause a little more severe disease requiring hospitalization, maybe in young kids, in the elderly, and patients whose immune system is compromised. But otherwise, this is a very, very mild infection in most scenarios. In fact, in adults, it doesn't even cause fever. So this is just an unnecessary, I would say, cue about something which is very, very innocuous and trivial, which has been around for a long time.
Why the hype? I mean, why has it suddenly come to everyone's notice right now?
I think I should ask you that question. It's the media which is creating the hype, and I don't know. Especially, I think China looks like a very, very, exciting place where things have gone wrong in the past, so people tend to associate it with this. But speaking to several colleagues in China, there is nothing untoward happening. What they see is the normal prevalence of this infection, which happens every winter. Usually influenza overshadows it by several times. You may have other viruses like the respiratory syncytial virus, the rhinovirus, this virus. All of them can sometimes cause combined infection and cause problems, but nothing untoward this year at all.
Okay. So what are the symptoms and signs of severity that should be taken care, if at all it impacts?
Usually this virus can cause a little bit of a nasal congestion and blocked nose, a little bit of a feverish feeling. In fact, adults, as I said, don't even usually have fever. But what you need to watch out for any viral infections, because you cannot differentiate this from the influenza, from the RSV, from the rhinovirus, or even the COVID. So if a person starts getting a little breathless, if the person has difficulty breathing, if he's running high fever, this definitely warrants checkout and probably hospitalization if the oxygen level is low. If the person is immunocompromised, an elderly patient with several comorbidities, including diabetes, heart disease, lung disease, or kidney disease, then probably you need to definitely have it checked out with the doctor.
Okay. How is HMPV different from RSV? Because RSV was also doing rounds, in between. So firstly, how is it different? And taking into consideration that this virus was prevalent since very long, is there already a vaccine or something that is in place?
Like RSV, this is also a respiratory virus. The transmission is similar to COVID through aerosols. So somebody who has the infection coughs or sneezes through the aerosols, this virus can spread and contaminate the surroundings, and somebody touching it and taking the hand near the face can get the infection. Very similar to flu or COVID. Because this is a very mild infection, both investigative modalities to identify the virus has not been very, very robustly done in India. Only when in the last few years we have come up with the respiratory viral panel, which includes a host of about 7 or 8 viruses, this is being picked up. And even last year, even in our hospital, we had probably over 50 or 100 cases, where we picked this up. So this is nothing new. And because this is a reasonably innocuous virus, there is no vaccine available, only preventive measures, which include hand hygiene, distancing, and probably you need to cover for flu, because if a person gets flu and this and another virus combined, it can sometimes cause in the elderly serious infection. But RSV, the only way different is a lot of people who developed wheezing, especially the elderly or children, you need to suspect RSV. In a non-wheezer, if they develop some wheeze, we think of RSV. This metapneumovirus you can get attacks of worsening asthma in people who are asthmatic, but otherwise it doesn't typically cause wheezing in the elderly.
Right. So would it be right to say that HMPV can cause outbreaks, but it's not an epidemic or a pandemic?
No, it is typically associated with the winter season. So in countries where they have cold winters, this is seen more often in the winter. So you definitely get an increased number of cases in winter. But other than this, it is not something I would worry about, at least definitely not at this point.
Right. Thank you so much, Mr. Ramasubramaniam, for joining us and clarifying this for us. In fact, let me also now welcome in Dr. Vineet Samdani, pediatrician at Breach Candy. Dr. Samdani, firstly, welcome to the show. How are you looking at HMPV? Because doctors are of the opinion that this is not something that we should be worrying about, but yes, precautions need to be taken.
Hi, Hiral. Thank you for having me on the show. But exactly. So HMPV has been there for a long time. The first case detection documented was in 2001 in Netherlands. So this is predominantly in the winter season, and the presentations are cold, cough, fever, and if little wheeze. But otherwise, I don't see a concern. This is a normal winter virus, and this will pass by for sure. The only other thing that I see with HMPVs are they are usually co-associated with some other viral infections that may be there. Otherwise, I do not see a concern or a panic or anything for us to worry.
So the cases which have been detected so far, Dr. Samdani, in terms of India, the key is it is children below the age of 5 who are mainly at risk. What is it that you would actually advise in terms of precautions?
So precaution is going to be a distance of 6 feet, wear a mask. That's the preventive precautions of COVID that we continue. But this is a normal ongoing virus. I think the minute the kid goes to school, there is obviously a chance of one getting a viral infection. This is no alarming symptom of HMPV for us to be worried. It's not going to be the 2019 variety of COVID where we need to panic. So hand washing, sneezing, put your hands over, while coughing, prevent droplet infections. And the droplets are obviously, these are large ones. These are not minute that's going to be easily transmitted. So I'm not worried about this virus at all.
So is it going to be the usual mucolites and levocets of the world that is going to do the trick for all these children in terms of treatment, and no majors that would be required then?
Perfect. Hiral, you perfectly said it. It's symptomatic treatment. Yeah, Crocin for the paracetamol for the fever. A cough syrup if required. And if it's cold, an anti-allergic and symptomatic, a very small percentage may give us issues of wheezing, where we would need to address depending on the clinical symptom and the X-ray. Otherwise, I don't think there should be any other concern.
So very lastly, this could be an outbreak, but not a pandemic or an epidemic. Would it be right to say that?
So history says every 100 years you have a pandemic.
So we're still far away from the next one then.
Correct. So there is no panic. I think it's just an ongoing viral infection that will keep coming and going seasonally. Nothing to worry at all. It's a winter break viral infection.
Right. So this is an interesting conversation. Thank you, Dr. Samnani, so much for joining us on the show and sharing your views. But clearly, HMPV, a regular virus, nothing that one should be worrying about as well. In fact, with the HMPV virus headlining most news outlets, ministers have also been trying to assure the public of safety and the need to not panic. Exactly what the doctors are indicating. In fact, Health Minister JP Nadda issues a statement saying that the ministry is closely monitoring the situation and that there is no need to worry. Let's listen in.
चीन में जो HMPV वायरस के मामले पर हाल ही में आई रिपोर्ट्स पर स्वास्थ्य मंत्रालय ने इंडियन काउंसिल फॉर मेडिकल रिसर्च के साथ और नेशनल सेंटर फॉर डिजीज कंट्रोल के साथ और वर्ल्ड हेल्थ ऑर्गेनाइजेशन के साथ चीन सहित पड़ोसी देशों में स्थिति पर कड़ी निगरानी रखे हुए है। WHO ने भी स्थिति का संज्ञान लिया है और जल्द ही वो भी अपनी रिपोर्ट साझा करेंगे हमसे। ICMR इंडियन काउंसिल फॉर मेडिकल रिसर्च और इंटीग्रेटेड डिजीज सर्विलेंस प्रोग्राम IDSP के साथ उपलब्ध सांस संबंधित वायरस के देशव्यापी डेटा को भी समीक्षा की जा रही है।
Right, so that's the bite coming in from JP Nadda as well. So nothing to worry, but you have all the pharma stocks which are up and about in trade. Let's just quickly pull up the pharma index and see what that is doing, because yesterday there was a bit of an impact with regards to aviation counters that were trading under pressure. Pharma stocks are doing well in today's session. Not sure how the impact is. It's more sentimental. 1% up move with regards to Nifty Pharma. And let's just quickly pull up the components of the pharma pack and see what's happening, because it's even the hospitals which are up and on an uptrend. You have Biocon, Ajanta Pharma, Zydus, there's a separate news. JB Chemicals, Laurus Laboratories, all up in trade. Rainbow Hospitals is also doing pretty well. So pathology companies are also the ones that are in focus. But moving on, you have Adani Group that is in focus. Specifically, you have Adani Enterprises, which has partnered with Thailand's Indorama Resources. Now, what is this? This is mainly to strengthen its petrochemical presence. They're looking at an investment of around 35,000 crore rupees. And the petrochemical business will be under Adani Enterprises. Let's just quickly pull the stock on the screens and see what the counter is doing in trade, because overall with this, the Adani Group has floated a subsidiary which is Adani Petrochemicals in 2021, and their aim is to set up refineries and petrochemical complexes. In terms of Indorama Ventures, it is one of the largest petrochemical producers, and with that, it's one of the world's largest producer of integrated polyester products and fibers. Their combined PET and packaging solutions has recorded a FY23 revenue of almost $15.6 billion, and they have an employee count of almost 26,000. Moving on to in terms of Adani Petrochemicals, they're planning to invest more than $4 billion in the petrochemical complex industry. And in terms of PVC capacity, They've said they will be constructing it in a phased manner. The first phase will comprise of 1 MTPVC plant in 2026 and a similar will be commissioned by early 2027. That's the reason why we're seeing an uptick with regards to Adani Enterprises. Let me welcome in Rohan Mehta, I beg your pardon, from Turtle Wealth, and Sneha Seth, Senior Analyst at Angel One, to get their view. Rohan, firstly, your view with regards to Adani Enterprises.
Yeah, it's still a tricky and jittery thing for, coming to any point that, what should be going ahead. There are a lot of amalgamations and thought which are happening. So as a investor or as a fund manager, we are still out of it. Let us see what things are happening around and then we would put a nose to it. But as of now, it's no man territory. So we are just out of it.
Right. Moving on, Sneha, what are charts indicating?
If you look at the chart structure for Adani Entertainment, I believe on the weekly chart, it has been taking support near the 200 is simple moving average last 2 times. And now at present, it is consolidating around that zone only. So if someone is holding a long position, I believe the base or the support would be around 2,350. So unless and until it is trading above 2,350, there isn't any sign of worry. But in case for an upside, I believe this counter should head at least towards 2,750. If any move beyond this, that would be very interesting for this counter. But as of now, the chart structure looks decent. Nothing to worry as such.
Well, chart structure looks decent. 2750 is the level that Sneha is looking at on the upside for Adani Enterprises. Now, the another development, in the oil and gas sector is that BPCL has given an in-principle approval for an IPO of Maharashtra Natural Gas Limited, or MNGL. Also, it's Mihika also bringing us a detailed report of the other shareholders as well. Mihika, what about this particular IPO and what are some things that we should look at?
We actually have BPCL, IGL and GAIL India in focus. Now, this is the company that has gotten the in-principle approval is Maharashtra Natural Gas Limited, which is a joint venture between these 3 companies. And the approval is for roughly around 1,000 crore IPO. Now, in terms of the stake percentage in Maharashtra Natural Gas, Indraprastha Gas has 50% stake in the joint venture, Bharat Petroleum at 22.5% and GAIL India at 22.5%. And the Maharashtra state government holds a balance of 5%. In terms of what it does, well, it is the authorized city gas distributor for the city of Pune. And as per city research, there is value unlocking for the stocks, currently listed stocks. The listing of the joint venture will help unlock value for IGL and Maharashtra National Gas. Contribution in cities target for IGL stands at 45 rupees per share, which is a significant number. And the potential listing could also unlock value in GAIL's unlisted city gas distribution investment as per city.
Well, thanks for that, Mihika. Rohan, let me come across to you for, all these stocks, BPCL, IGL, another one. It's been a tough time for IGL in 2024. GAIL is another one. Any kind of view that you have on these stocks and also in general in the oil and gas space? We have seen ONGC being one of the big winners in the last month. What's your outlook on all these 3 stocks as well as the space as a whole?
Yeah, I think so. It's a very selective territory to talk with onto the OMCs. We are still not very bullish onto it. There are certain problems which are coming in and out of the organization. It's purely a value for sure, but still it's not showing the great trajectory. ONGC still looks a great value to buy, and GAIL is sluggish. So ONGC would be a buy rating, but another would be just wait for the time and then take a decision on the quarter numbers.
Sneha, let me come across to you as well, because we've seen interesting moves in stocks like ONGC. But any of these plays, BPCL, GAIL or IGL, any stock that you like on charts?
See, as far as charts are concerned, I believe ONGC looks quite good. If you see the last 3 sessions development, we have seen decent, base formation around 235 to 34 odd zone. And from there, this counter has headed at least towards now trading around 265. If you look at the chart structure, there is a resistance place around 268 zone. If this counter manages to surpass this zone, I believe we may see an up move at least towards 285 to 86 zone. So if someone wants to go ahead and long, can go ahead with a strict stop loss of around 258.
The 258 with regards to ONGC in terms of stop loss. In fact, you have CLSA also, which has come out with their report on ONGC. They have a high conviction outperform on the counter. They have a target price of 360. What they are saying is that the recent production ramp up that they've seen with regards to where KG98 goes, and that is what has raised their confidence as well. In fact, the increased gas price realization, that will start showing results from the third quarter. So this quarter is going to be interesting with regards to where ONGC goes. And the windfall tax removal which has happened, that will allow ONGC to earn higher crude realizations. Their FY25 to 27 EPS estimates is increased by 2 to 8%. And in comparison to peers, the stock is trading at a discount. So that's with regards to the upgrade coming in on ONGC. The stock is seeing gains of almost 4.5%, Puneet.
Yes, definitely. And apart from that, we have seen, some other stocks also which have been buzzing in trade today. One of them is, of course, Zomato as well. And it's been in the news ever since, the Swiggy has listed in the market as well. Today, Jefferies has actually downgraded Zomato to a hold rating from a buy recommendation earlier. And essentially, it's it's a big downgrade coming in because the stock has seen positive reaction all through ever since the listing also of Swiggy. But Jefferies have effectively said that they're expecting a kind of a year of consolidation for something like a Zomato. They're also seeing that valuations are not excessively expensive in context of the strong execution capability. But they've cut Blinkit estimates going forward in FY26 and 27. That's where the negativity is coming from as well. Blinkit also, they are expecting that might face some profitability issues, and hence they've cut the target multiple for the quick commerce business of Blinkit to 6x currently. But Rohan, we have seen the space buzzing ever since listing of Swiggy. Aggregators have been doing well at the expense of QSR, but that trade seems to have reversed now. What's your outlook on Zomato, Swiggy, both of them, as well as anything that you like in the QSR space as well?
So specifically, if you're talking for Zomato, at trailing at 400 times, we are not very comfortable with the valuation. Though it's a great business, there's no doubt about it. But the only problem is that it's extremely highly competitive, and most of the valuation came from Blinkit, which is also very competitive side. So that's the reason we are very not great businesses, but not comfortable with the valuation. And in QSR, honestly, we are not liking anything much. It's a purely a highly competitive business, and it's very hard to come to a future projection for it. So I'm not very bullish on the counters.
Not very bullish. Sneha, do you have any kind of outlook on these stocks, Zomato, Swiggy specifically, but also the QSR space? Anything on the charts that you like?
Present, I believe nothing that I'm liking as of now. Zomato, one observation is that there is a good support around 240 odd zone. So in case if someone is holding a long position, they can keep a fixed stop loss around 240 and keep holding. If this counter corrects below 240, I believe the recent base will be breached, and in that case stock can head towards 200 zone. So if someone who's holding a position, if the stock goes below 240, one should think of exiting it or booking their profits.
Well, Sneha and Rohan, thank you so much on that note. We'll leave it there and look forward to our next conversation. But thank you so much for joining us today. But also let's look at market very quickly, because we are seeing some stocks that are hitting 52-week highs as well. One of them is Amber Enterprises. Let's put that stock up. Today's move, of course, crossing above the 8,000 rupee mark. It's at almost 5.3% up today. Let's also look at the 6-month chart of something like an Amber Enterprises. Very interesting stock in the EMS space, because ever since there have been media reports coming out that it might actually remove the electronics business specifically, and it might list that business. You see that 80%, almost an 80% move in something like an Amber Enterprise being one of them. Let's also pull up EPAC Durable as well. It's comfortably above the 600 rupee mark. Again, a stock that's hit a 52-week high. Let's also pull up, the 6-month chart of EPAC Durables as well. It's been a strong front runner, almost up 150% in the last 6 months on the back of, room air conditioners doing very well. And finally, just one of PG Electroplast as well. All these three counters on the room air conditioner space have been doing very well. Today, just some pressure of almost flattish move for PG Electroplast. But again, a counter that's done very well over the last 6 months. The company's also raised QIPs at roughly about 700 rupees. So those who had participated have done very well in a very short period of time as well. Just one other stock that I want to pull up is Minda Corporation, another stock that's been doing very well in trade today, almost up at about 4% in trade. It's done very well here. All these EMS as well as the auto plays as a whole in general as well.
Absolutely. So the entire auto pack that is in focus in today's session. Apart from that, let me just pull up a few of the other names that we have been looking at. Actionable is one such stock that is in focus, and this is on the back of the parent coming out with a clarification that yes, they will be looking in terms of sale of a unit with regards to Actionable. Let's just pull up that one on the screens and see what Actionable is doing in trade. We're still stuck with a Minda Corp, but Actionable is a stock that I have been discussing about right now, which is the board consideration. But apart from that, on the back of order wins, there you go. You see a spike of almost 7 to 8% coming in there. Nuvoco is another counter that is in focus on the back of the acquisitions. So from the cement space, you have Nesco, Zaggle, Dynamic Services, Ashoka Buildcon and Gensol. All of these counters that are buzzing in trade, and this is with regards to where order wins are concerned. So that's with regards to where the show goes. These are the buzzers that we've been speaking about as well, but completely out of time. But that it's a wrap on this edition of Profit Buzzers. Please stay tuned on to NDTV Profit. Up next will be Top Trades, a new show, a revamp that we've been looking at from here on. But lots to watch out for. Please stay tuned to NDTV Profit.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right?
Yeah.
But we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the...
Hello and welcome to NDTV Profit. You're watching Top Trades. I'm here, your host Hiral, and with me is Mahima. Mahima, good afternoon. Clearly, if you see in terms of markets, an interesting day of trade where you're seeing absolute profit booking that's happening with regards to IT majors ahead of the earnings season that kicks in with a TCS day after tomorrow. But let's just quickly pull up Nifty 50 on the screens. We're seeing gains of 0.5%. We're above the 23,700 mark as we speak, and almost 300-point uptick coming in on the Sensex as well. Let's pull up Bank Nifty on the screens and see what's happening in terms of Bank Nifty. There was some bit of outperformance there. There you go, almost near the day's highest levels. We've hit a high of 50,415, and that's where we are hovering at currently. And with this, let's just pull up the sectoral heat map as well. And post the sectoral heat map, we'll look at the broader markets. But if we can just have the sectors, there you go. Oil and gas continues the upward trend. Contributor is ONGC over there. Metal pack is up in trade. Energy, healthcare continues the upward journey. Auto is also in the positive. IT is the one which has been trading under pressure with cuts of around 0.6 to 0.7% coming in. And with all of this, let's pull up the broader markets because that's going to be interesting. They're clearly outperforming the benchmark indices in trade. You have the mid cap 150, which is seeing gains of 1.2%, whereas the small cap 250 is also up and about in trade. In terms of individual counters, let's look at which are the stocks which are seeing gains. If you see in terms of Nifty 50 as well, if we can just get the heat map to understand that better. ONGC, the top gainer on the back of the CLSA note. Tata Motors continues the uptrend. SBI Life, IndusInd Bank, as well as Hindalco. HCL Tech losing, TCS losing, Eicher Motors, BPCL, and Tech Mahindra. On the back of Class 8 trucks, let's just quickly pull up Bharat Forge as well as Aramco Forgings and see what these counters are doing in trade, because you had the Class 8 truck orders that were reported. 0.3% higher in terms of Bharat Forge as well as Aramco Forgings is another one that would see an impact. AkzoNobel is another. There you go. RK Forgings is up almost 1.7%. AkzoNobel is one stock that we will be tracking, and we will be getting more details as well as in today's session. There is a spike that's come in on this counter. Spandana Spurti, Kirloskar Brothers, Paras Defense, 10% uptake. In fact, we did speak to the management as well. We will try getting you a slice of that conversation. Intellect Design is up in trade. ITI is seeing profit booking. KC, Naukri, Jcorp, and Zomato on the back of the brokerage note is down 3.5%. So clearly, in terms of markets, you have the broader markets which are outperforming the benchmark indices, but pressure coming in slightly on IT.
Right, absolutely. And, in terms of what's happening with respect to markets, let's take a quick shift and let's cut across to Microsoft CEO Satya Nadella's address as a part of his Microsoft AI tour.
Sampling step more efficient. I think I've lost the mic. Just give me a hand mic. Just give it to me. No problem. So it's about being able to scale with even inference time that I think is going to really take this to the next level. So we're very, very excited about it. I mean, O1 and Think Hard, like to me, Copilot Think Harder has become the thing that I go to all the time. And that shows not just for sampling for additional pre-training, but to be able to use it during inference time to think harder and get you better results. So I think that these are capabilities that are just going to increase ultimately three things. One is this multimodal capability that we now have as the interface to all software, right? I recently set up, I guess there's this, I don't know what they call it, the action button, I think, on the iPhone. It's now set up to Copilot for me, and now I can sort of confidently speak in Hyderabadi Urdu to it, and it's beautiful. It understands me. It's like speaking to my high school buddies. And the fundamental idea that you can now have that familiar, simple interface with all of computing, I think is going to change every software category. Then you couple it with these planning and reasoning capabilities, right? So whenever you go to GitHub Copilot Workspace, right, that thing is invoking that ability to think about planning and executing that plan as a multi-step process, right? It's the beginnings of what is truly agentic behavior. And then the other side of it is to be able to stitch these things that are outside the system or outside of the model. Memory, context, tools use, and entitlements. So in fact, if anything, in the next 12 months, every developer is going to be really focused on how do I take my model and make it aware of the tools it can use, just beyond even function calling. How can I make sure it has the right understanding of its entitlements? How do I make sure it has memory and long-term memory? And that, to me, I think is what's going to truly help us create this rich tapestry of agents, right? When we think about agents, you stitch the multimodal capability, planning and reasoning, and memory and tools use in particular, plus entitlements. You can start building personal agents, team agents, enterprise-wide and cross-enterprise agents. So that agentic world is what we are looking forward to sort of all building. Of course, at Microsoft, for us, it's never, quite frankly, about any of these technologies on their own. It's a means to the end, which is about empowering every person and every organization on the planet to achieve more. That's what, that sense of empowerment that this platform can provide, I think, is going to be the next level, and that's what we're really, really focused on. And to that end, we're building three platforms: Copilot, Copilot and AI Stack, as well as Copilot devices. And so what I want to do is just kind of give you the broad contours of what these three platforms all entail. The best way to conceptualize Copilot is it's the UI for AI.
Right, that was Satya Nadella addressing the keynote speech at Microsoft's AI tour. But shifting focus to the grand spiritual festival, the Mahakumbh Mela is all set to take place in Prayagraj this time around, and it is celebrated every 12 years, which draws millions of pilgrims from across the world. Uttar Pradesh government has made biggest arrangements to make this Kumbh a successful one. Anushi joins in with a breakdown of what went behind organizing the festival and what stocks will get impacted by this. Anushi, over to you.
So it's one of the biggest festivals that we'll be watching forward in 2025, Mahakumbh 2025, all eyes over there. It's the world's largest public gathering in terms of where the spirituality lies as we speak. Religious pilgrimage that is celebrated 4 times over a course of 12 years. This is for Kumbh Mela. What makes this more special is the Mahakumbh 2025, which happens once in every 12 years. So something all eyes, all devotees would be here in Uttar Pradesh, and that's where our focus would be. Now, this is expected to take place in Prayagraj starting from January 13 onwards, which will go on for the next 45 days and end at Feb 26, 2025 on the occasion of Mahashivratri. So what next can we expect from this? How will this contribute to Uttar Pradesh government, the economy and all? The government is expected to spend about 7,500 crores. This is as per the reports. A lot of arrangements being made, which we will discuss later on. If we are to see the tourist influx expected from this in 2013, we saw about 12 crore of devotees in this. 2019, this number almost doubled, 24 crore. And 2025, the expectations is of 40 crore of devotees, which are expected to be a part of this Mahakumbh Mela 2025. Now, how this would result in the benefit for the company? This is expected to generate revenue of around 25,000 crore for the economy. This entails not just on the business side, but even in terms of employment generation and other festivities that are going to be made. Now, what should we be focusing on the stock specific side? Firstly, all the tourism stocks in focus. This includes Thomas Cook, Ease My Trip, Yatra, RateGain and Genesis International. This is on the occasion of the mapping that is going to be taking place. Next slide, we have the hospitality stocks in focus. Here, IHCL is the player emerging. So, Prayagraj is the destination wherein this Kumbh Mela is going to be held. But the adjacent markets, Ayodhya and Varanasi, are on the drivable distance. So, these are supposed to be benefiting out of it. And so, Taj Ganges, which is owned by the Benares Hotels and IHCL as an arm, can be a beneficiary of this move as we speak. The next bracket or the segment and focus that could be benefited from this is the food delivery apps that includes your Zomato, Swiggy and IRCTC. Even the railway and the aviation sectors are something that we should be watching forward for. We have the names of IRCTC joining the list again, RVNL in focus, and Indigo is another stock in aviation side. If you look at the rates also from Mumbai to Allahabad on those, we are looking at ticket prices faring above the 20,000 levels on January 12th, the day before this event is expected to start. So a lot of focus has been drawn here. If you look at the arrangements that are being made in terms of where this is, even the security stocks, they are going to be installing more than 23,000 of CCTV cameras to ensure that there is safety maintained. SIS and Allied Digital is something that we should be focusing on. So overall, all these segments are in focus on the back of this Mahakumbh 2025 that we are looking at, and something that we should be looking forward to from Jan onwards.
Right, Anushi, thank you so much for breaking that down for us. With that, let's welcome in Narendra Solanki, the Head of Fundamental Research Investment Services at Anand Rathi Shares and Stock Brokers. Narendra, a very good morning, good afternoon and welcome to NDTV Profit. Anushi has elaborately put down as to, how Mahakumbh will take place and what stocks will, likely get impacted on the back of this. But, your view with respect to, how and which stocks will the Mahakumbh be benefited through?
Yeah, good afternoon. Definitely, it's a very big event and a lot of connected industry, especially in the FMCG, travels, tourism, hotels, etc. Stocks could stand benefit because of that much of mobilization of resources is happening. So rate gain also, we like rate gain, even hospitality sectors, we like chalet hotels and a lot of other stocks. Plus, even other consumption stocks, if you talk about especially FMCG, rural focused stocks. So ITC is one of the stocks which you can look forward to it. So, and even HUL, which is also a very large FMCG player. So all these stocks we we are positive on, and we can look at it.
Right, so that's with regards to FMCG names, beneficiaries of Mahakumbh 2025. But moving on, India's car industry has actually carried over nearly 2 months of unsold stock into the new year. And that's one of the reasons why we're seeing GST, which has been increased on used cars as well. Now, underscoring the demand headwinds in the world's third largest automotive industry, we also spoke to FADA's CS Vigneshwar on the state of the current inventory levels and why it is a cause of concern. First, let's listen into that conversation.
See, I think we've been having a great run in terms of the sales over the last few years. In fact, this year was slightly below expectations, but still, given the headwinds, given the start-stop scenarios which happened throughout the calendar year, finishing off with a healthy 9.1% overall industry growth, I think is excellent. We've also been having green shoots after a long time in the two-wheeler segment, which has finally shown a growth of nearly 10.7%, because the previous couple of years were a little bit disappointing there. So it's excellent news, and we also see the rural markets participate more strongly, which is a good thing. However, as you rightly mentioned, that having some issues in terms of stocking in the passenger vehicle segment, and we've been having this for the last 7-8 months. We've been also working with the OEMs and also sounding it off to them, saying that we need to optimize stock here. Yes, the stock has certainly come down in the last 4 months, but still we are way above the optimal figure of 21 days.
Right, so that's with regards to the inventory. Narendra, what is your view, the kind of inventory that automobile players are sitting on, and the December auto sales numbers also trickled in? If you have to look at two-wheelers, CVs and passenger vehicles, what would your top picks be?
Yeah, as far as the summer sales numbers were concerned, it was good, especially on the front of, if you see the two-wheelers number, which have picked up pace, and even the tractor sales were very good. So it shows an indication that rural economy is still in a good shape, and it's not concerning as far as comparison with urban economy is concerned. Passenger vehicles, there has been a lot of new competition and is heated up, and new launches have also been there. So passenger vehicles still remains a cause of concern for overall auto sector, not only from the overall numbers perspective, but even the competitive intensity is concerned. So we are right now more positive on two-wheelers and tractors segment. The stocks like M&M, TVS Motors, Bajaj Auto. So we are more positive on this in comparison with their passenger vehicle peers.
So that's the view coming in on the entire auto sales pack, the retail auto sales pack. Let's shift our focus to Quadrant Future Tech, whose IPO opens today. My colleague Sajid Mangat spoke to the company's management as they discussed production capacities and the road ahead. Listen in to a slice of that conversation.
Coming to the production capacity of a company, we already had a fully automatic EMS line, a redundant line, so that is capable of doing this stuff in terms of 1200 locomotives which you talked about comfortably without increasing any kind of machines or equipment in the company. So that anyway existed in the company, and that is what was also assessed by railways. Coming to the other kind of strengths, as you said, or the capabilities, and you mentioned about raising the top line from 150 crore to this particular figure which you talked about. We foresaw this thing coming. As I said, very, very ambitious plans of railways, Ministry of Railways, on deployment of the safety critical systems on the field, that to a very vast networks. So we saw that coming. So that is how, looking at the kind of volumes which were being talked about, it was very essential for us to have this IPO in place, so that it further strengthened our existing strength to execute this order in the timely manner.
Give us a sense of the kind of execution timeline. Means it's 12 months, which you have, stated in the RHP. But is it back-ended in revenue recognition, or how does it work? Railway order means you have to do the execution first, and then the revenue gets recognized. Just to get an idea of how the railway orders work.
Yeah, this particular order is very special because railways did it differently. They draw a deadline of 12 months so that when the order is received, so immediately after that the clock starts and you have to execute the complete order in 12 months. So probably we have about 11 months left now, and we are fully geared up in the sense that we are hopeful of receiving the final approval shortly along with other suppliers, and then start the manufacturing part of it. And as such, the purchasing has already started, and hopefully we will start our production in the month of March, and then subsequently start supplies to complete that order before time.
Mm-hmm. You mentioned that the order was for 10,000 units and you got 1,200 units from Chittaranjan Loco Works. What is the kind of opportunity which is there in Kavach? I mean, 10,000 is just a starting point, if I may say. What could be the potential which is available here for you?
When we say the potential of Kavach, obviously we know about the vast network of Indian Railways, so the Kavach system has to be deployed over the entire network of track and stations and locomotives, EMUs, and all kind of trains. So there is a huge network, and obviously you see new trains being built, new locomotives being built every year, new stations coming up, new tracks being laid. So this is going to be an ongoing journey. And moreover, safety critical systems or signaling system like this, they keep upgrading from time to time. You can refer to different regions or developed regions of the world like Europe, wherein they started with ETCS, started with level 1, level 2, they are talking about level 3. So same is the case here. When you have good ambitions to increase the speed of the trains, so obviously you need to increase the speed of, or you need to enhance the safety, and you need to enhance the software and hardware engineering that are associated with it. So it remains an ongoing journey. And as I said, that the network is very, very vast. So the potential is quite immense and huge for this system.
That was the management of Quadrant Future Tech. The IPO opens today and ends on 9th of Jan. It's a fresh issue of 290 crores, and it's in a very exciting space, of developing train control system under the Indian Railway Kavach project. Narendra, I'll come to you on this one. Have you studied this particular company? And if not this particular company, it's in a very interesting space. If you can give us some perspective on that.
Yeah, definitely. Railways is one of those infrastructure segment which is having a very large runway in terms of, if you look execution orders, everything is very huge, and these are very small companies, so they have very big and large room to grow. However, coming to this specific company, we had a avoid rating for this IPO. One is because this is a very new segment in which the company is entering, and slowly we have to see how things ramp up and shape up from here. Generally, for initial starts, these kind of orders have very low margins, so we will have to see how the execution takes place, and then how the company grows and builds up on future orders. Plus, on valuation basis also, it's a very richly priced. So hence, we have a avoid rating on this.
All right, so that's the view coming in on Quadrant Future Tech IPO. Moving on to a company which is in focus today, that is Actionable. And it's in focus today because Actionable NV, which is the holding company of Actionable, is considering the sale of powder coating business and international R&D operations. The sale will be from an indirect arm, and the company is also exploring potential acquisition of decorative paints intellectual property owned by the Actionable NV. Now, in terms of, very recently we had spoken to the management also, and the management had said that they will evaluate acquiring of Actionable depending on what options Actionable management comes up with. In terms of the strategic focus, they're emphasizing on customer retention and increasing share of wallet from existing customers. They're targeting growth of electric vehicle coating, leveraging existing world-class solutions and ongoing innovation pipeline with a focus of sustainability and high-end technology. Now, in terms of the recent product launches, they include Deluxe VT Eterna and Interpon 3000. In terms of the distribution and retail strategy, the current distribution network is approximately 23,500 outlets, and they target to reach 25,000 outlets very soon. And they're focusing on increasing productivity of the tinting machines and focus on ensuring dealer retention amidst the competitive intensity which is taking place in the entire painting industry. And lastly, in terms of strategic expansion, they're planning to enter construction chemical segment in the near future. Narendra, I'll come to you on this one. Do you have a view as to what's happening in Actionable and how can one play with the stock right now?
No, we don't have any view on this particular stock. We are not covering.
All right, no problem, Narendra. Paints is another exciting space to watch out for. But with that, Narendra, thank you so much for joining in and giving us those insights. And with that, we're completely out of time on this edition of Profit Top Trades. Stay tuned to NDTV Profit for more news and updates on the other side.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Good afternoon and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, and it's a decentish day of trade, 1/3% higher on the index after what we saw yesterday. Definitely a bit of a relief that we've seen. We are currently around the 23,700 levels. If you can have the intraday chart, and supported by the Bank Nifty as well. There you go. It's that sort of chart which really doesn't show concern, but rather shows a decent range in which the Nifty has traded in. And it's around 150 odd point range which the Nifty has traded in through the day today. We're off the lows for sure, but also off the highs. That's how it's reflecting intraday. Now let's look at the heat map before we go to the Nifty Bank, because the Nifty Bank somewhere supporting the index. ONGC on the back of a positive note is up 4.5%, in fact flying away in trade now. SBI Life is doing well for itself as well. You have Tata Motors on a day on which auto otherwise is weak. You have Reliance doing well, 1.5% odd higher. So the heavyweight also contributing a bit. And you have banks which are somewhere steadily doing decently well, anything between 0.5% to 1% or so in terms of their gains. But what's not doing well is IT. Some IT names at the bottom of that list. HCL Tech, TCS, Tech Mahindra. You also have some auto names. Hero Moto is there, Maruti is there, Eicher is also there. You have ITC down around 0.25% after what was an adjustment which happened yesterday. So we're seeing further pressure on the stock after that adjustment. But outside of that, you also have an M&M sulking in trade, a Wipro also doing badly. So it's largely auto and IT if I were to catch the trend here. But let's pull up the sectoral heat map as well. Zoom in. It's likely what we're going to see. IT down around 1%. Auto also flat, slight negative bias coming through.
Private banks doing well, 0.5% thereabouts, very similar to the Nifty Bank, the PSU Bank also in that kind of a range. The Pharma Index also doing well for itself. The FMCG Index is flat, slight positive bias. Metals doing well, oil and gas doing well on the back of ONGC, which is spiking in trade. Now, let's look at the broader markets. First at the breadth, the advanced decline. And the breadth seems to be good in that sense. 1% higher on the Nifty mid-cap, but the breadth seems to be quite good. 3:1 in favor of the advances. And it's again a relief after what we saw yesterday. The breadth was just so poor in trade yesterday. After that, there's a bit of a bounce back that markets have staged in trade today. So that's how the breadth's looking. 1% on the Nifty mid-cap again. And well off the day's lows. And the Nifty small cap too, doing fairly well for itself, at 1.3 odd % higher. So the Nifty small cap also staging a bit of a rebound after what we saw yesterday. So a bit of a relief coming in both of these pockets. Of course, you'll have your eye out on GDP estimates. That will hold the key on how markets move tomorrow. And that's a big macro which we'll look out for. Last off, let's look at the BSE 500 top gainers, top losers before I bring in Kush. There you go. Those are some names which are buzzing in trade as we speak. ITI down 10, Zomato down 4 on the back of a note of a downgrade. Info Edge down 4 after that update that it came out with. So those are some big buzzers. Biocon also up 7 after that positive Jeffries note. But let me go across to Kush. Kush, what do you make of the market? It's been such a tough week already. It's already been tiring to see how the week has gone by. Yesterday we saw pressure. Today we are seeing a bit of a reversal. What should you expect now?
Hi Harsh, it's just Tuesday.
Absolutely. Exactly what I meant to say. There's already so much has happened.
I feel you. No, but Harsh, see, I mean, we spoke of the 23,500, 24,900 range, right, for a while. We got a breakout on the upside, and hence, things started to look a little rosy, a little positive. If you just for a minute take out the ferocity with which the markets fell yesterday, if you just take that out and look at it from a purely objective standpoint, I think we are back in that range, which is 23,500 on the downside and 23,900 on the upside. So for me, I will take heart from the fact that as long as 23,500 is being held, there is a possibility that the Nifty might remain sideways and give us these volatile moves rather, depending on the news flow that comes out. And we know January historically has been a very volatile month with a negative bias, and we can already see a lot of events lined up, starting with the earnings season, US President-elect Trump, he is taking charge at office. So a lot of these factors playing out. I will take a sideways move, and I will again, go back and take that view, which is 23,500, 23,900 range. Whichever side the index breaks out will be your play again. Up until then, the index is a no trade zone. I am not focusing too much on the OI setup. Now, while the 23,800 call and 23,700 put have a fairly decent base, but that's been proven false time and again, where a good option base has been negated. So I'm not going by that just yet. I will resort to that technical view, which is 23,500 and 23,900. As long as that range is protected, a sideways move on Nifty is expected, and we'll take that. It'll not be such a bad deal, even if Nifty consolidates in this band.
And what do you make of the Nifty Bank, therefore, Kush? Are you slightly more constructive there?
Sadly not. I'm a little more cautious on the Bank Nifty, and the reason for that is that Bank Nifty is also below its 200-day moving average. It was trying to hold that fort for a very long time. Good part of last week of December, early January, the first few days of January, but it's given way to that. And while Nifty is still above its November lows, Bank Nifty is already gone below that. So there is a bit of a caution, on the Bank Nifty. Yesterday we did quickly mention that as long as the 200-day moving average is held, you could perhaps consider staying long in Bank Nifty, but below that, the structure looks weak. That seems to be playing out. So I'm a little more cautious, a little more circumspect on Bank Nifty. And I will again go out and say that if yesterday's low, which is closer to 49,750, that is broken, I think there is a short trade also to be made on Bank Nifty, but that is conditional. So a little more, circumspect on the Bank Nifty. Nifty, as long as it continues to move sideways, we'll take that, but no trade on the Nifty just yet.
Okay, also joining us, Dharmesh Kant. Dharmesh, let me pose the question quickly to you. What's your sense at this point? Yesterday's correction, was that an opportunity in your view to buy?
I think in the long term, all corrections are an opportunity to buy, but in the short to medium term, the market will remain volatile and tentative. So that's will be the texture of the market for next 30, 40 days. And I think once the budget is through and RBI policy is through, till that time, 20 days of earnings season will be through. Thereafter, things will improve for as far as volatility is concerned. But to answer your question in a very short way, for long term, if you are doing the cherry picking right, it's a very right market.
What do you pick at this point, Kush? Your picks?
Well, for all the talk of caution and range bound markets, my picks today are both on the long side. So Innova CapTab, this stock actually has done rather well. We've discussed this in the recent past as well as a buying candidate, has done rather well. Even in a market like this, the stock holding its ground yesterday too on the back of good volumes, it was up. So Innova CapTab remains, a buy from our side. 1270 is the target now. 1205 is where you place that stop loss. One more stock which has done phenomenally well is Arihant Superstructure. If you see in the last month and a half, it's gone from 325 odd levels up until 535, closer to the levels that it's trading today. Closing slightly overheated territories, but despite that, if you see the volumes are very healthy, and hence a long call on Arihant Superstructures as well. 565, 590 are your targets. 515 is where you place the stop loss.
Okay, joining us also is Aditya Agarwala, Head of Research and Investments at Invest4Edu. Aditya, your picks for this afternoon and what you make of markets at this point.
Hi, Harsh. Good afternoon. Good afternoon to everybody. So, if I talk about markets per se, I don't think so. We are still out of the woods. There could be a short covering rally, which can extend for another trading session. Maybe tomorrow as well, we can have another bout of short covering rally. But having said that, markets will remain choppy and volatile. So you will have these short covering rallies and then the sharp corrections as well. So you just have to be a little nimble-footed, and if you're buying maybe on corrections, exit at pullbacks. And on the flip side, if you're looking to build a portfolio from now onwards, it's actually not a bad idea to start nibbling into a lot of these stocks which have corrected significantly. Maybe stagger your investment in tranches, and that will be a good idea to start your investment journey. Talking of stock-specific ideas, I've got a couple of buy recommendations, Harsh. The first one is JK Cement stock has broken out into a fresh all-time high territory, broken out from a downward sloping trend line. At current levels, there'll be a buyer in the stock for a target of 5,000 with a stop loss on the upside at 4,750. Chambal Fertilizer is the second recommendation from my side. Looks very strong on the chart setup again for a target of 540 on the upside with a stop loss at 480 on the downside. I'll be a buyer in the stock.
Wow, 5% move on Chambal already, still bullish. Dharmesh, if you were to pick a couple of sector stocks as part of this correction of sorts, possibly, if I can put it, what would it be? Or if the index were to correct further, what is it that would interest you at this point?
I mean, two factors will, write this decision. One is the sustainability of the earnings, and other is the quality of the earnings. I think their themes which are working out too is obvious. One is the defense space. They have been piling on the order book. A consistent flow of order inflows are there, and there the topics remain HAL, BEL, and DCX system on which we have a coverage as well. Then the second space is railway space. I think a lot of spending needs to be done there, and there the topic remains IRCON, that is Incon International. It has corrected quite a bit. And from here, I think it's a good price to get entry into. 5-7% correction can still happen depending on the market volatility. But the upside which we are looking forward to is 310-20. And the third space, where it's a very wide space, anything to do with engineering, research and development. So we have focused on the technology space from auto ancillary angle. And there I think, Tata Technology gives you a very good opportunity to buy into. So EV is going into a gestation period for 6-7 months, where there's a transition for long mileage kind of a thing from say 300-400 kilometers to 500 to 600 range, and 10 launches are due in next 6 months. And all these EV new technologies are being developed by Tata Technology. So there are going to have a very good FY26 and FY27 as far as numbers are concerned. So that looks very interesting to me. Even KPIT technology, or for example, Tata Elxsi looks very attractive. So anything to do with this is a good space. Fourth being EMS, but EMS is expensive, as we all know. But that space will continue to be expensive for next 2-3 years, and most of business are being shifted to India. That is what is our observation, and the order flows will continue to kick in. But just for the valuation, comfort zone is not there, so we are not recommending EMS space officially.
Some real buzzers in all of those spaces, and brings me very, very well to the stock of the day. Top stock of the day, Paras Defense today within the Defense Pack. Stock is locked in upper circuit at the moment on the back of positive news. Anushi joins us to tell us all that's happening. Anushi.
Right, a very interesting development that has taken place for Paras Defense. That is why we are looking at the stock being locked in a 10% of an upper circuit. So what has happened essentially that it has got a license. Now, it's got a license, received license for making, enhancing and redefining LMG capacity of around 600 per year. That is what we are seeing. They've got the license to make light machine guns now. So from a component-based company, it can now make this products that is there. So this is a huge development that is what we are looking for Paras Defense. In fact, we also spoke to the management today, and what they had emphasized was certain interesting points. First is, now this will help them to move up in the value chain as we go the order quantum. Now as they're now shifting focus from making components to making the whole product, the order quantum also will increase since focus is on the product now. So the company did give an example. If suppose it's a 5 crore order, then they can see about 20 crore of a order now being in the similar range. Other than that, if you are seeing the order and all that, there is also, the company will now be able to manufacture these light machine guns. If you look at the order book of the company and see how it has done over the last 3 years, 215 crore was the order book size that it had, and we have seen about a 3x growth to 630 crore in FY24. In fact, if you look at the current order book, that stands roughly around 850 crore as well. So we've seen a significant pickup in terms of how the order book of the company has been growing, and this is in line with the kind of guidance that the company has put out, in which FY25 to 26 they expect a revenue growth of 20 to 30%. And this will be at a better profitability also. So with as they're moving above in the value chain that they aim for, the margins are expected to improve from these levels as we go forward as well. Other than that, it is also aiming to become the global leaders in the optics and the optronic systems over the next 3 years. If you see in the drone size also, the drone segment also, it aims to become one of the top 5 drone companies of India's, and in the anti-drone side, they aim to become #1. So a lot of factors that we are seeing looking up for Paras Defense. Obviously, for a lot of defense plays, Q4 is something that we should be watching out for. A lot of orders being bunched up in the quarter. So definitely one sector and one stock that we should continue to focus on forward.
In fact, Anushi, you referred to our conversation earlier today with Amit Mahajan. First off, thanks so much for that, for all of the information you've put together. But Amit Mahajan, director at Paras Defense, spoke about how this new development will aid their margins as well as their order wins. Listen in to what he had to say.
Order size will increase. The value that we deliver to our customers will increase, and definitely such a large portion of this particular gun, including the mechanical, because Paras has today mechanical manufacturing, electronics manufacturing, optical manufacturing, all of that in-house. So we will be definitely doing much better when it comes to margins, because the components required for the complete solution will also be manufactured in-house.
Dharmesh, how do you view this development? The stock trades at 13 times trailing 12 months revenue. 13 times revenue. Now, Anushi described very healthy order book of around 820 crore, but top line is currently sitting at just about 300 odd crore, trailing 12 months. How do you view the stock, as well as you gave us a couple of names that you are constructive on. Would this in any case feature in case it corrects, if that is something that you would consider?
We have seen the company, closely, and one of the main concern was the valuation gap, and these are thematic plays which is happening. But see, the general theme is, as being pointed out, it's from component to product maker, and that's the general theme for the entire defense space. Even in Hindustan Aeronautics, they were earlier, servicing an overall kind of a company which used to do. Now they are actually making fighter aircraft. So that's the transition which has happened for the entire space. And there, I think HAL, BEL offers quite a good value buy. So they are not expensive. At the same time, cash flow generation is very high. And the margins are also increasing. And with more integration of products into their portfolio and exports coming to the play. The valuation part plays out there quite well, other than the likes of, say, Paras Defense or Data Patterns, and there are quite others in the same fray. So one has to be very selective. Then again, we leave it to the judgment of, to each his own kind of a judgment. But the space is rocking. So Paras Defense, we have had a look at it, but we have not, covered it.
Okay, Kush, would this feature on your list? 10% today, of course, locked in upper circuit, but outside of that?
So, Harsh, interestingly, this would feature on my list if it actually moved a little higher, and of course can't happen today. But, once you see the stock go past 1090, that's where, there'll be a breakout of, a channel that the stock has been, also a downward sloping trend line. Now, this breakout was somewhat impending, because if you track the the volumes of the stock somewhere close to mid-November, there was a big spike on the back of good volumes, and then it just went consolidating sideways. So for me, there will be a buying opportunity on this one on the upside, which is 1090. Once that level is taken out, I think for targets of 1200 and higher is where a buying opportunity will arise. So let's see if tomorrow again there is an upper circuit in the stock, or maybe at least it's positive enough and crosses the 1090 mark. That's when you go out and buy, at least from a near-term perspective.
Aditya Agarwala, any views with regard to the defense pack in general outside of Paras, if at all?
I'm quite constructive, Harsh. After a year of underperformance, always last year everybody was too gung-ho on the entire defense and the railway pack. Somehow they underperformed, and I think now it's time to look at both the sectors, the defense and the railway. Talking of defense first, I think Paras Defense also ticks all the checklists and can be bought for more or an investment horizon, not from a trading view. I would say maybe look for a target of 1400 to about 1500 on the upside. Can add a couple of names to that. Musgao Dock is also something which I think offers an excellent risk to reward at current levels. Should be added in the portfolio, maybe with a stop loss just around 2100 or slightly below that. Look for a target of 2800 or excess of that. Add a BDL to that, I think. So BDL is also something which is looking very interesting to me. After a decent correction, consolidation, stock is now inching higher, making higher highs and higher lows. So that is the first sign of a trend reversal in the stock. So I think BDL also at current levels can be bought for a target of 1500 with a stop loss just below 1100. So I think all these stocks within the defense sectors do offer an excellent risk to reward, and quite a few of them do take all the checklists and can be bought more from an investment horizon, not from a trading view.
Fair point. Okay, we'll switch focus. Adani Group has partnered with Thailand's Indorama Resources to strengthen its petrochemical presence. With an investment of 35,000 crore in the new JV, the petrochemical business will be under Adani Enterprises. Hiral's here to tell us more about this particular deal. Hiral.
Adani Enterprises is the one that is in focus today, and this is on the back of the foray that the group is making into petchem. They've partnered with Indorama Resources for the petrochemical sector, and they have set up an equal JV, which is named Vellore Petrochemicals. Now, VPL is incorporated with the objective to set refinery, petrochemical as well as chemical businesses. Overall, this partnership with Indorama will actually involve almost an investment of around 35,000 crore rupees, and this is in the Mudra-based PVC manufacturing facility, which will be powered by renewable energy. To be noted that petchem will be under Adani Enterprises, and in 2021, Adani Group had floated a subsidiary as well, which was Adani Petrochemicals, and this was mainly to actually go ahead and set up refineries and petrochemical complexes. A little bit about Indorama Ventures. It is one of the largest petrochemical producers globally, and the company is based out of Thailand. And it's one of the world's largest producers of integrated polyester products and fibers. They are also one of the key players in the chemical sector. Their manufacturing footprint spans across almost 117 locations in 31 countries, and their combined PET and packaging solutions serve customers in diverse growth markets. They have almost 26,000 employees, and a revenue of almost $15.6 billion is what they achieved in FY23. Overall, in terms of Adani Petrochemicals, they are looking to invest more than $4 billion in the petrochemical complex. And if you talk about their PVC capacity as well, that is expected to be constructed in a phased manner. The first phase will be comprising of 1 million tons PVC plant, and this will be by 2026. And the second phase of equal capacity is expected to be commissioned by early 2027. So a foray in terms of petrochemicals, one of the largest sectors in the offing, and that's one of the reasons why you have Adani Enterprises, which is a buzz.
Okay, so interesting development here, and you can see Adani Enterprises, of course, gaining 2% odd on the back of that, but outside of that, you can see the entire Adani Group abuzz in trade today, all stocks trading in the green. Dharmesh, let me come to you on this one. This new foray, what does it mean for the market, the petchem market? That's one. What players do you believe are going to be most impacted by this development? And second, how do you view this from Adani Enterprises standpoint?
Yeah, it's quite interesting to see this kind of a foray at such a big investment. Because see, gradually the world is moving away from petchem, entire petrochemical space. And at this juncture, I am sure a lot of calibration must have gone into it before taking a call on this kind of a development. But I mean, it's a saturated world with you have to eat into others' market share, and the market per se is gradually shrinking over the period of time. So interesting development, and with that I will reserve my comments.
Okay, all right. So that's the view coming in with regard to Adani Enterprises as well as the petchem business in general. Let's quickly switch focus though. Let's actually slip into a very short break. On the other side, of course, we'll take you through more stocks as well as sectors which are in focus. Plenty of buzzers to talk about today. It's a packed show. Stay tuned to NDTV Profit.
On my face. Chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? Yeah. But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum.
Well, thanks for staying with India Market Close and you know, just pull up what Europe is doing as well and just trying to show what the rest of the world is up to while we are trying to figure out our own pieces. And it's a quiet day of trade across the European bourses. Nothing too dramatic happening there. Crude prices as well as the 10-year yields, US 10-year yields, if we can pull them up, just to give you a sense of what the global roundup is looking like, and then get the Nifty 50 weight, rather the point contributors. So this is what US futures are doing, okay, marginally in the green. US 10-year yield if we can, and then get the Nifty 50. We should try and get the Nifty 50 movers by weightage. And Reliance, ICICI Bank, ONGC. So clearly upstream oil has had a good day today, shown by Reliance and ONGC. Some gains for Tata Motors as well. What's not done well? IT. Sulking heavily. Now I'm sure we spoke about IT with our experts, but clearly this is something that stands out. And at this point of time, the BSE 500 winners and losers, if we can very quickly pull them up and just see that. Equinox has had a massive move. Aegis, Biocon, Amber are some of the others, but the one that's lost out is Zomato, Harsh, and very interesting that it's trading now at the lowest point of the day. Started off about a couple of percentage points lower and has quickly sunk to the current levels.
Yes, Raj, plenty of movers today, in fact, in trade. It's been that kind of a day, more on the positive than the negative, and glad you've pointed some on the negative side, because you know, we can probably quiz our guests as well. Zomato is currently sitting at a near 2.5 month low currently. Let's go across, actually, take a view from Kush. Kush, Zomato, what's the sense like?
Well, a bit of caution. I mean, from a medium to a long-term perspective, nothing changes. But from a near-term perspective, you know, a couple of things have happened technically, which is, you know, we are seeing a few negative divergences, you know, play out. So the stock's already correcting. Also, what's happened is that ever since it entered the FNO space, you know, the 300 level, which was technically anywhere resistance, also started to prove a resistance from a derivative standpoint, where the call option writing sort of started to weigh in on, you know, the stock. So for now, I will, you know, monitor views of level, or rather levels of 240, 245. If those are breached, I think a further downside can open up. But if that is held, then this downturn might just turn out to be a buying opportunity. The stocks anyway had a very good run. So some profit booking, some consolidation was par for the course. So 240 is the level to watch for. If that is held, then this might just turn out to be a near-term buying opportunity.
Aditya, I well aware that we didn't take your views with regard to the index. So why don't you give us some of your views and levels that you're looking out at?
So Harsh, I believe there could be some more bouts of short covering rally in the market. I don't rule that out. Could be closer to 23,900 to about 24,000 is where I think markets will again face resistance, and can from there on again can slide down all the way down to 23,500, 23,400. Markets could continue to oscillate between this zone and slightly with a more negative bias this time around. The bank nifty is something which is terribly looking weak to me. On the downside, yesterday's low was a key support area for the bank nifty. Now that happens to be multiple supports around those areas now. So 49,700, 49,500 is one support zone for me, where I believe one should clearly watch out for. If bank nifty breaks those levels and sustains below that for some more time, I think banking stocks could come under serious selling pressure, and that could lead to maybe selling pressure in Nifty as well. More than the broader markets, more than the headline indices, Harsh, it is the broader markets which worry me a bit, which is the mid cap and the small cap end of the space, because I think a lot of correction is still due in that space, and then you will see going ahead the broader markets correcting further from here on.
Okay. More bearish than bullish, both Kush as well as Aditya today. Neeraj, just want to put that out. And you also have a big macro number which is going to come out immediately post-market today. We're going to have the advanced GDP estimates. You think that that could well dent sentiment overall in the market, at least the little bit of buoyancy that we're seeing today?
Yeah, well, very likely, I think, for the next couple of statements that come in, right, or at least this one, because we know what the kind of growth was and the expectations were so high. But Harsha, somehow the growth numbers even now, even by the corporates that have released the pre-quarterly estimates, don't quite look very healthy. So in some sense, maybe we have to pencil in lower growth and lower nominal GDP as well, because not that inflation is running away either, right? So in some sense, lower nominal GDP, and therefore maybe, just maybe, the street will be disappointed if there will be some very high expectations.
Dharmesh, if I can come to you with regard to a view, one is of course on the growth front. What's your sense? We've seen a slew of houses come out, research houses come out and give us their views with regard to what the growth estimate could be. But 6.5% for FY25, 6.6 odd percent, seems to be something that pretty much all of them are sticking to. Do you believe that earnings this time around are going to disappoint Q3, Q4, or do you expect to see a bit of a bounce back? What's your view?
Sure, as far as earnings is concerned, definitely there will be a disappointment. And Q3 sequentially can be a bit better than Q2. But overall, the problem is Q4, because last year Q4 was splendid. So there, I think the real challenge lies there. Around 290 was the Q4 EPS for Nifty last quarter. So to top that up would be a very difficult task for the market, and that will pull the entire yearly average down to around 6-7% kind of an earnings growth. And just to give you one pointer, I mean, we have seen the business update by all the financials and particularly the private sector banks. If you look at it, so the credit growth, barring HDFC Bank, is around 230,000 odd crores on year-on-year basis. And HDFC Bank gave out only 3% kind of a growth. The book size of HDFC Bank is 24,50,000 odd crores. So if normally they do 13-14%. So 10% itself is 250,000 odd crores. So the business which they did not take up for whatever reasons or has been taken up by the others. So the average growth is missing from the system totally. What the point I'm trying to make is the growth is actually not there.
Is it so, Dharmesh, great point, but is that a conscious effort not only on the part of HDFC but on the part of all banks? Because one, you're seeing some bit of pressure on the deposit side of things, your loan to deposit ratios have compressed, and you're seeing asset quality issues. So is it on the lending side, is it correct to look at the lenders at this point and judge them on the basis of the growth metric to determine that system growth is not there, GDP growth is not there?
So definitely one is to look on the lender and the growth which they are taking. But definitely one point which is there is that's the concern point of the market. I mean, the business which say consciously was not taken up by the good lenders, and they have landed up with the quality of earnings and the quality of lending may be at risk. And we have seen for a small finance bank, the collection ratio has fallen down to 88%. It was 90 to 93%. And that is being observed across the NBFC space. So there is a problem. That is definitely a problem. And that is where the market is concerned. And that's the reason why we are not seeing sharp pullbacks and sustainable pullbacks in the market.
Aditya, what's the sense on the bank Nifty? I know you're not too constructive on the Nifty. Not sure if I got your view on the bank Nifty.
Not really, Harsh. Bank Nifty, in fact, looks weaker than Nifty to me at the current juncture. In fact, like I mentioned, 49,700 happens to be a key support area for the Bank Nifty. If that is broken, I think you can see further declines in the Bank Nifty. The only space within the Bank Nifty which I think can slightly outperform or maybe hold its ground is the PSU lot, which has been underperforming for some time already. And if PSUs just hold ground, maybe that could be one lot to look at in the event of a correction in the Bank Nifty. And just to add to the point that I was making earlier, Harsh, so both the Nifty and the Bank Nifty are trading below their 200-day simple moving averages. If you plot a simple moving average on a mid cap or a small cap, you will notice both the indices are still trading above the 200-day moving average. So usually it doesn't happen that the Nifty and the Bank Nifty trade below their moving averages, 200-day simple moving average, and the broader markets trade above that. So there'll come a point of time when they will also correct and start trade below their moving averages.
Interesting. Now, if I can ask Kush, what's happening with Nifty IT today? You're seeing a bit of a tough day of trade on IT. Would you at all trade this week any of the IT names, especially the larger caps where the pressure is visible?
So, Harsh, ahead of the earnings season, I mean, it's just a couple of days left. I think it's not a good idea to perhaps take a trading bet. Plus, if you see, some of the big names like TCS and Infosys have remained under pressure for some time. So, they have not really featured on my buying list at least for a while now. Nifty IT is actually seen consolidating. Near the 50-day moving average. If you see from a very clearly, there's a range play at work here. The bias although remains negative. However, I still remain constructive on some select names, the large ones being, HCL, or the large one being HCL Tech. Other than that, Persistent and Coforge. But one stock that stands out for me, and I think this is the second time around that we discussed it as a call, which is FSL, First Source Limited. Earlier we had put out the second target of 395. That was hit. We revised that, and we put out a second target of 410. Yesterday was a profit booking day along with the rest of the markets, but today it's back, in the green and moving higher. So this is one stock that I will have on my radar. So broadly, not IT, per se as a sector, but selectively in stock. Yes, these are a few names: HCL Tech, Persistent, Coforge, FSL. Some of these names definitely, worth a watch.
Fair point. Dharmesh, if I can come to you with regard to IT, opportunity to buy, would you say? And, last couple of earnings, any sort of or hint of positive commentary has led to these stocks seeing decent rallies thereafter. Do you expect that this time around, and what would it be that would lead to that?
Harsha, we are, totally neutral on the IT space, and I must say that I have entirely missed the IT rally for the last year, being cautious on the space. So number front, they have not played out. So the call was right, but price-wise, we missed out the entire rally. We would like to see how the commentary is there this time around by most of the IT companies, especially the top four. And more than that, it will depend after 20th of January how the things shape up for the next 15-20 days. So we have seen H1B visas and all these problems coming up, and let's see how it's pan out. To my mind, it's still not a fair call to take a long position on IT at current juncture. Valuations are already high, so there's no comfort out there.
Okay. Well, Dharmesh, thanks a lot for joining in today, of course, and giving us your thoughts. Really appreciate your time. Let's get across to Neelkan Mishra.
देकर मैं समय कम है उस पर नहीं जाता हूं, लेकिन सबसे पहले नीलकंठ जी, मैं जो आपसे जानना चाहूंगा, हम लगातार पिछले कुछ हफ्तों से अखबारों में, टीवी चैनल्स पे, सोशल मीडिया पे बहुत बड़ा कैंपेन देख रहे हैं कि जब महाकुंभ होगा प्रयागराज में 13 जनवरी से, तो अगले 45 दिनों के लिए सबकी निगाहें भारत पर होंगी, प्रयाग पे होंगी, और हमारी अर्थव्यवस्था के लिए, खासकर उत्तर प्रदेश की अर्थव्यवस्था के लिए ये बहुत बड़ा एक मौका है, आने वाला है। एक अर्थशास्त्री होने के नाते मैं ये आपसे पूछना चाहता हूँ, ओपनिंग कमेंट के तौर पर, आप इसको कितनी बड़ी अपॉर्चुनिटी देखते हैं ग्लोबल लेवल पर, इकोनॉमिक पॉइंट ऑफ व्यू से भारत को और खासकर यूपी को एक अलग दर्जा दिलाने के लिए कितना सफल होगा ये आयोजन?
नहीं, ये आयोजन बहुत ही महत्वपूर्ण है। पहले मैं आपको शुक्रिया अदा करना चाहता हूँ मुझे यहाँ बुलाने के लिए, बहुत ही बड़ा इवेंट है। देखिए, अगर जैसे अनुमान है कि 40 करोड़ लोग डुबकी लगाने जाएंगे, अगर हम उसको यूनिक विजिटर्स में कन्वर्ट करें, अब उसके भी कोई एक्यूरेट एस्टिमेट्स होते नहीं हैं। मान लीजिए कि मेरा अनुमान है कि 5 से 6 करोड़ होने चाहिए, मान लीजिए आप 10 करोड़ ले लेते हैं। आप ये मान लें कि अगर उसमें हर आदमी 10,000 रुपये खर्च करेगा, कुछ लोग अगर जो शहरों में जो आपके चैनल देख रहे हैं, वो अगर प्रयागराज जाने के लिए फ़्लाइट लेते हैं, उनको लगेगा कि खर्च तो ज़्यादा होता है, वहाँ टेंट बड़े बुक करेंगे, ज़्यादा खर्च होता है, बट ज़्यादातर लोग जो जाएंगे वो आसपास के इलाकों से जाएंगे, वो ट्रेन लेके जाएंगे। जैसे माननीय रेल मंत्री का अनुमान है कि करीब 1-1.5 करोड़ लोग हर दिन ट्रेन लेके जाएंगे, तो उनका पर हेड खर्चा जो है वो कम होने वाला है। तो मान लीजिए कि आपको 1 लाख करोड़ अगर 10,000 रुपये पर पर्सन, हाँ, अगर पर पर्सन करते हैं तो 1 लाख करोड़ रुपए का खर्च होता है। जो हमारी अर्थव्यवस्था है करीब उसको मैं ट्रिलियंस में बोलूं तो 330 ट्रिलियन की है। 1 लाख करोड़ 1 ट्रिलियन होता है, यानी कि 0.3% ऑफ जीडीपी, जो कि काफ़ी बड़ा नंबर है। इसमें से इसका इम्पैक्ट जो लोकल अर्थव्यवस्था पे है, जैसे आप मान लें कि ये तो पूरे देश की अर्थव्यवस्था हुई कि अगर जो प्रयागराज में रहने वाले लोग हैं, केवल 17 लाख लोगों की आबादी है, तो उनकी इनकम्स पे, जो वहाँ के दिहाड़ी के वर्कर्स हैं, जो वहाँ केटरिंग सर्विस चलाते हैं, जो वहाँ ट्रांसपोर्टेशन सर्विस चलाते हैं, तो उन लोगों पे इसका इम्पैक्ट बहुत ही सब्सटैंशियल होगा। तो वाइल फॉर द ओवरऑल कंट्री इट मे बी अ फ्यू टेंस ऑफ बेसिस पॉइंट्स, आई थिंक द इम्पैक्ट ऑन द लोकल इकोनॉमी वो बहुत बड़ा होने वाला है।
बार बार इस बात को कहा जा रहा है, हम सब जानते भी हैं, सुबह से इस कार्यक्रम में सुन रहे हैं, लगातार पढ़ भी रहे हैं कि ये धार्मिक, सांस्कृतिक, पारंपरिक चीज़ों का तो मेला है ही, ये दुनिया का सबसे बड़ा मेला। अर्थव्यवस्था के हिसाब से भी, इकोनॉमी के हिसाब से भी ये बहुत बड़ा मेला है। इतना दिव्य, इतना भव्य शायद कहीं नहीं हुआ होगा। 45-50 दिन के लिए पूरा शहर बसा दिया जाएगा प्रयागराज के अंदर में, जिसमें जैसा कि आपने कहा करीब 40 से 45 करोड़ लोग आएंगे, डुबकियां लगाएंगे। आपके हिसाब से मानो तो 10 करोड़ के आसपास लोग आएंगे। इतनी बड़ी चुनौती जो तैयारी की गई है, मेरा सवाल उसके आगे का है, 50 दिन के बाद क्या 50 दिन में इलाहाबाद में रहने वाला या प्रयागराज में रहने वाला जो एक कारीगर है, जो इन दिनों में काम करेगा, जो उसके बिजनेस में फायदा होगा, वो 50 दिन के बाद क्या कर सकता है कि ये जो उसकी साइकिल बनी इन 50 दिनों में वो आगे कंटिन्यू करे, ताकि उसका भी भला हो और देश की जो अर्थव्यवस्था का जो पहिया है वो और तेजी से दौड़े।
नहीं, इससे भी ज्यादा उस पे हम आएंगे, उससे भी पहले इसका एक लास्टिंग इम्पैक्ट तो जरूर होगा कि 12 साल पहले का उत्तर प्रदेश और अभी का उत्तर प्रदेश बहुत बदल चुका है। तो जब लोग वहां जाके खुद देखते हैं, जब वहां के रेलवे स्टेशन को देखेंगे, वहां के एयरपोर्ट को देखेंगे, वहां की सड़कों को देखेंगे, वहां की लॉ एंड ऑर्डर को देखेंगे, तो खुद से फील होने के बाद लोगों को ये समझ में जरूर आएगा कि उत्तर प्रदेश बदल रहा है कि नहीं बदल रहा है। एक होता है अखबार में पढ़ना, टीवी पे सुनना, दूसरा होता है खुद जाके देखना। तो अगर इतने सारे लोग वो जाके खुद विजिट करेंगे तो ये एक तरह से कह लीजिए उत्तर प्रदेश के लिए एक एडवर्टाइजिंग मोमेंट है कि लोग खुद से आके उत्तर प्रदेश को महसूस करेंगे, और अगर उनका अनुभव अच्छा होता है तो वो फिर आएंगे, अगली बार आएंगे, वो और जगह भी जाएंगे। तो इसका लास्टिंग इम्पैक्ट वहां पे काफी ज्यादा होगा। जो लोकल लोग हैं, मेरे हिसाब से इसका ये आप देखें कि अगर किसी की इनकम, जैसे हमारी आपकी जो तनख्वाह आती है तो वो हर महीने बराबर होती है। जो लोग टूरिज्म में काम करते हैं उनको सीजनैलिटी की आदत होती है कि वो 1-2 महीने में जोर से कमाई होगी, बाकी समय ठंडा रहेगा। तो उनको खुद भी कि कैसे ये छोटे दिनों की कमाई को पूरे साल तक खींच सकते हैं, वो एक अच्छा मतलब उनको आदत होती है। इस तरह की कमाई को मेरे हिसाब से अगर प्रूडेंटली कोई इन्वेस्ट करता है, जैसे मान लीजिए किसी ट्रांसपोर्ट वाले को अगर उसका भाड़ा बढ़ा हुआ है, उसको ज़्यादा ट्रिप्स कर पा रहा है, उसकी गाड़ी का उपयोग अच्छा हो रहा है, तो उसको बजायते ये कि वो उसको खर्च कर डाले इमीडिएटली, कि वो उसको फिर री इन्वेस्ट करे, उसको वो नई गाड़ियाँ खरीदे, अपने बिजनेस को ग्रो करे। वैसे ही कोई अगर दिहाड़ी का मजदूर है, उसको उपयोग करके वो कहीं उसको बचा के कहीं सेविंग्स पूल में रखे, जिसको कि जब वो जो रेनी डे फंड होता है किसी बच्चे की पढ़ाई में लगाए। तो अगर उसको ठीक से, और इन्वेस्टमेंट केवल फाइनेंशियल इन्वेस्टमेंट नहीं होता, इन्वेस्टमेंट कुड बी इन योर हेल्थ, आपके घर में हो सकता है, आपके बच्चों की पढ़ाई में हो सकता है, वो सबसे बड़ा इन्वेस्टमेंट है। तो उसको अगर वो प्रूडेंटली उस तरह से खर्च करे तो उसका लॉन्ग टर्म इम्पैक्ट जो है काफी सब्सटैंशियल हो सकता है।
इनफैक्ट धर्म और उसके साथ साथ चलता है अर्थ, सारी दुनिया में यही होता है। कम से कम भारत में सदियों से हम देखते आ रहे हैं, जहां मंदिर बनेंगे, जहां भी पूजा घर बनेंगे, वहां आसपास एक छोटी मोटी इकोनॉमी अपने आप डेवलप हो जाती है। फूल वाले, प्रसाद वाले, कलावा वाले, टीका लगाने वाले, अपने आप चीजें डेवलप होती रहती है, और ये रोजगार के साधन भी है। ये अनऑर्गेनाइज सेक्टर है बहुत ज्यादा। तो आपको क्या लगता है कि इस तरह के जो लोग हैं, जो इस तरह से काम करते हैं, जो मंदिर के और पूजा घरों के आसपास की अर्थव्यवस्था को बढ़ावा देते हैं, इनको किस हद तक ऑर्गेनाइज सेक्टर में लाया जा सकता है, या क्या कोशिश की जा सकती है?
नहीं, बट ये इसमें कोई नई बात नहीं है। इनफैक्ट आप देखें ये जो बिजनेस ऑफ लेंडिंग है, या जो उधार देने का भी जो काम है, ये कहते हैं कि ये बेबीलोनियन टाइम्स में, मतलब 5000 साल पहले भी टेम्पल की प्रीस्टेसेस होती थी, वो उधार देती थी। तो इनफैक्ट जो टेम्पल्स हैं, जो मंदिर हैं, उनके आसपास अर्थव्यवस्था ही उसी के आसपास चलती थी। एक कम्युनल सेंटर होता था, कम्युनिटी का सेंटर होता था।
Okay, so that's of course Nilkant Mishra speaking to Sumit Avasthi of NDTV India at the NDTV Mahakumbh. But while we are at it, I also want to quickly address flashes at the bottom of our screen. We've got Delhi elections announced, single phase elections, 5th of February, counting to happen on the 8th of February. Also, while I'm at it, we're joined by Lancelot Dacuna, CIO, ValueX Wealth Connect LLP. Welcome, Lancelot. Good afternoon. Lancelot, what should you make about these couple of moves in the market? Have you been buying on every correction, 1%, 2% lower on the Nifty? Have you been a buyer at this point?
Well, I think, things have been more stock specific rather than index as a benchmark. And, there have been very good corrections in many of the companies. First we saw corrections in the, the FMCG companies. We've seen correction in certain now banks. And so all these are making valuations attractive. And since the longer term business outlook, still continues to be positive, while the short term you may see some hiccups in terms of, slowdown in 1 or 2 quarters, and while rural consumption may take a while to catch up. And, the longer term outlook looks much better. And since with this correction, valuations are becoming reasonable, then that does make it an opportunity to buy and add, but it's very stock specific rather than, purely looking at the Nifty and then deciding to buy a whole lot of stocks, even though they may be expensive.
Also want to quickly ask you, Lancelot, what you make of Paytm and something like a MobiKwik. You had MobiKwik's numbers which came out earlier today. Looked like an okayish set. Of course, sequentially were poorer. Q2 was much stronger. Q1 was much stronger, I beg your pardon. But versus a Paytm, how does MobiKwik stack up, and would you be interested in any of these as businesses?
So I think, while MobiKwik's numbers were definitely better than what it was in the past, and we maybe given the expectation that things will do a lot better going forward. But if you look at these two businesses, the payment businesses, there's a lot of competition coming in from banks and from people who are connected with using UPI as their base. So I think purely from a payments play, it's not going to make a lot of sense unless one diversifies into other earning streams, because payment is not really going to generate you revenues. It is the ability to sell, allied products and to earn commissions or interest. So could be financial products. That is where finally business will grow and, companies will be in profit at that time. So I think one has to be a little cautious that and to see whether these companies can evolve into companies that use payments as an entry point, but actually are able to generate higher revenues from the other products in the space, and that then becomes a dominant. They have a dominant position in the share of those products. So I think that is where we need to watch these companies. At this point of time, it's a little premature in terms of just buying it purely for its payment business. So I would probably say that it's you just need to understand and watch and see how it's going before one can make a investment at this point in time.
Good moves there for Paytm, but the big news on your screen, breaking news, of course, that the Delhi election is on Feb 5th, counting of votes for the elections on Feb 8th as well. And the perfect person to put this into perspective, Tamanna, how important is this?
So from a national perspective, Delhi is not the big one.
Not the big one.
Because it's a union territory effectively. It doesn't impact numbers in the Lok Sabha at all, but it's the prestige one.
It's the prestige battle, this time more than ever for the BJP, because they haven't been able to shake off the Aam Aadmi Party from Delhi in the last two elections. However, the facade of the Aam Aadmi Party may have crumbled in terms of their national aspirations. They've held on to Delhi, they've held on to Delhi well. They didn't do too well in Delhi in the Lok Sabha elections. Arvind Kejriwal went to jail. There's the liquor scam hanging over his head. Atishi is now the caretaker chief minister. Amongst all of this, this is possibly the best shot the BJP has had in Delhi for a while. So from that perspective, this election is important. From a market and investor perspective, everyone always looks at this, that are you continuing as the leading national party to win the next election or not? So I suppose if you put it in that context, then Delhi becomes the prestige battle.
So if adverse for BJP in terms of an election outcome, not too much from a market's perspective, you reckon?
No. A Delhi, a loss for the BJP in Delhi would not be adverse, but a win would have a huge upside, because that's what is unlikely.
Well, so keep that in mind as well as you think of the Delhi elections. Now, you know, the other aspect for today's market is the kind of buckling down that IT is done, right? And therefore, that's a bucket that you want to keep an eye out for. But before we talk about IT, you've spoken about Delhi. Let's try and talk about the top three things or top three stocks that stand out at the broader end of the spectrum as well, or maybe across the market. Puneet Johnson with a sharp list there. Puneet, what's on your radar?
Oh, well, thanks for that. So NCC is the first one. Now, you know, the exchanges have sought clarification from the company in terms of, you know, the current order win, and they've come out and, you know, confirmed that finally of a 501 crore order win that the company has seen. They've got this from, you know, for construction of 8 stations of the Bengaluru suburban rail projects. The order is expected to be executed over the next 24 months. So this is one of many orders apparently from the Bangalore suburban metro rail. So watch out for this stock, and it's buzzing, of course, in trade today as well. We'll see what the company has to say in its post, you know, Q3 exchange numbers as well. Something to watch out for in terms of future order wins as well. The other one's Nesco. Now it has, you know, got a very big order from the National Highway Logistics Management Company. This is order which is, you know, consists of 3 project sites, which has a period of lease of almost 30 years. That's where the positivity is coming in terms of this news flow. It has to be completed within the next 3 months and has the potential to generate revenue of about 350 crores starting year 4, while the cost of this will only be about 75 crores each per site. So another one on the positive trend today. And the finally one is Ashoka Buildcon. Now this counter has been, you know, going from strength to strength over the last 3 months. Ever since they announced the sale of, you know, one of their, you know, major assets to Macquarie as well. And that's apart from that, they've also got a concession pact from the NHAI for orders of about 1,391 crores. This is expected to be executed over 910 days of almost 3 years. But this adds to the continuous order inflow that they're seeing. And why this is important is that NHAI has only given orders for about, you know, 600 odd kilometers, while the target for FY25 is about 5,000 kilometers. So it puts a lot of pressure in the last 3 months for all these orders to come in. And one of the major beneficiaries will be Ashoka Buildcon. So these are the 3 stocks today buzzing on the positive news flow. Watch out for these going forward as well.
We certainly will. You know, 5% up for Ashoka Buildcon. We spoke about this in the morning. It was down 8% yesterday. Can this order win make it recover? So a good move there. In fact, all of these names, at least Nesco and Ashoka Buildcon, were stocks that we did mark on the open show today as well. So interesting moves into some of these as well. Actually, Kush, come in. I would normally have thought that some of these construction names, you know, so for example, alcohol beverages is a sector which is, even during the recent correction, has not buckled down. I would have thought the same would be true for construction. It's not turned out that way. They have been volatile, but they are bouncing back on every order win. What about Ashoka Buildcon in particular? Maybe not the most liquid name, but how do the charts look?
Actually, I'm glad that, you know, the 2 stocks that even you've highlighted in the morning were Nesco and Ashoka Buildcon, because NCC doesn't really make the cut. What you're seeing today, if I didn't share the news, I would just perhaps count it as, you know, a dead cat bounce and, you know, move along. So this is not the stock that you'd want to dabble in. So NCC is out of the question. Yes, Ashoka Buildcon and Nesco, you know, both of them have had, you know, a good run. We've seen some sharp round of profit booking, but that is on the back of very low volume. So both of these stocks I will keep on my radar. If I were to pick one, then it would be Nesco. But even in Ashoka Buildcon, I mean, the stocks had a good run. There were some negative divergences cropping up, and hence the correction along with the markets that you saw yesterday. Now, as long as 275 is held, I think the upside of 320 and perhaps a 340 are also on the cards for Ashoka Buildcon. So this dip that we saw yesterday might just turn out to be buying opportunity. I'm not phased by the 5% up move. I think higher levels are on the cards for Ashoka Buildcon. And as I said, I would prefer Nesco over Ashoka Buildcon as well, because it's trading above some of the key averages. The recovery on this one has started quite early, and it's sustaining above some of the key support zones. So for something like a Nesco, I think on the upside you're looking at targets of 1075, 1110 also, and the stop loss on this one comes in close to the 1000 level, where there is a support zone and some convergence of some of the averages. So Nesco and Ashoka Buildcon are the two stocks that you need to keep on your radar.
Okay. Let's get to this portion of the closing show, which is very, very cool. We give you a bulls versus bear scenario on one stock which is in the spotlight today is Kotak Bank. Bernstein has spoken about what they think could be a deposit problem at the bank. Harsh joins in with the bull and bear case.
Well, Kotak is the third most profitable bank in the country, private sector. 22,000 crore is the profit after tax that Kotak clocks, trailing 12 months. And therefore, the deposit franchise of the bank is of key importance, because it will determine where margins go and therefore where profitability goes. Kotak has been building its deposit growth, or rather deposit franchise, since quite a while now. And it's generally what supports banks in terms of their growth. Now, what's the bull case here? The cost of funds for Kotak is lower than some of its private banking peers. There's no doubt on that count. But what you would actually want to look at is whether Kotak has gained market share versus its peers, not versus PSU banks or versus the larger market, but versus its private banking peers. And that's not happened. And that's where the bear case comes into the picture. Can Kotak take deposits from other private sector banks, its competitors, its direct competitors, is something that has not happened. But cost of funds has definitely improved over the last decade or so. So your cost of funds on deposits has come down as its deposit franchise has improved. But why could this be so? Outside of the fact that it's come down, the lower cost of funds is largely because of the slower growth in term deposits. The slower growth in term deposits means that the higher cost of funds which is absorbed by term deposits, you're taking in lower term deposits, which is largely the reason why your number is looking favorable. In terms of the bull case again, now the focus areas that Kotak has in mind, and we arrive at this on the basis of the fact that how many branches is Kotak sitting on, and a lot of them are in urban areas where 75% of the deposit market actually is. But that limits its presence in rural. It not just does that, it prevents Kotak from granular deposits which come actually from rural, and therefore it is susceptible to more chunky deposits which Kotak takes from the urban markets where 75% of the deposits are. So again, that's a little bit of a bear case. Now, in terms of the bull case again, the urban focus gives superior branch productivity to Kotak versus other banks. But when you're comparing Kotak urban branches versus other banks' urban branches, the productivity is far lower, and that's where the bear case comes into play. So whether Kotak can sustain the kind of deposit franchise it has built or attempted to build to become a very, very large and serious contender in the Indian banking system is called into question by some of these factors which are reflecting in the bear case. And Bernstein's view is that that is not happening. They believe that Kotak is not firing on all cylinders where deposit franchise is concerned.
That's Kotak anyway has had a tough couple of days with some top level exits, so that has been weighing on it as well. Aditya, I just want to get your take on Kotak Mahindra Bank and how do you see it?
So Tamanna, this is one stock which has done nothing for itself post-COVID. At least some of the stocks have shot up, some of the stocks have corrected, but this is one stock, if you woke up even after COVID, the stock is still languishing there. I think it's high time stock should outperform now, because risk to reward is in favor. Looking at the chart setup, still looks like there's an up move which is coming in the stock. So I would just add in my portfolio, keep it, and hope that it breaks out about that 1900 mark, which has been marking as a major hurdle for the stock. Of 1900, maybe 2200, 2400, something that we can see on the stock. But yeah, I would want to add the stock and allocate some portion of my money in the stock and keep it in my portfolio purely from an investment perspective, for nothing from a trading view at all.
Kush, you were smiling when we were talking about Kotak, and Aditya was saying it's languishing.
Usually Aditya and I have very similar readings and very similar views. This is perhaps one of the rare ones, where we differ. And the reason I was smiling is that Aditya used the word hope. And a couple of times I've said it on the channel that hope is a very bad strategy. So for me, Kotak is a very clear wait for that level which Aditya mentioned, 1900 to be taken out before I actually
You're cracking up. So you're cracking up. What are you saying on Kotak? You like Kotak on the charts?
No, I don't. Hope is a very bad strategy. Don't add until 1900 is taken out.
Oh, okay. No, but then you kind of similar. Even Aditya is not too excited about Kotak. Maybe there's some hope there, if at all. We'll come back to what the other buzzers are in the day. But one thing that Satya Nadella said today, and by the way, Microsoft CEO Satya Nadella is in India, in Bengaluru today. Tomorrow he will be in Delhi. In his keynote session, he confirmed that the company, that is Microsoft, will be investing $3 billion to empower India with cloud and artificial intelligence. Listen in.
We always conceptualized and built Azure as the world's computer. We continue to be super committed to it because one of the fundamental realizations is AI doesn't sit on its own, right? It requires the entire compute stack. And so we are building that out at a worldwide level. We have 60 plus regions. We have 300 plus data centers around the world. In India, we're excited about all the, the regions we have, right? We have Central India, South India, West India, and then we also have the capacity that we built up with Geo. So we have a lot of regional expansion happening. And I'm really, really excited today to announce the single largest expansion we've ever done in India by putting $3 billion additional dollars to expand our Azure capacity.
From my face. Chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
From my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would...
Welcome back. You're watching India Market Close. Markets in a fine mood, but maybe this next story will be even more cheering. It's a huge NDTV Profit exclusive. The new tax regime for individual taxpayers could be modified in the upcoming budget. The Finmin might even consider tinkering in the personal income tax slabs. My colleague Shrimi Chaudhary joins in with more details on that exclusive story. Yes, Shrimi.
Yeah, hi Tamanna. So, since the pre-budget consultation has been concluded, the Finance Ministry is in full swing to discuss a lot of measures how to boost demand and provide incentives and benefits to common man. And one of the discussion has been that whether there will be any changes in the current, tax regime, particularly for individuals. So what we are picking up from our sources is that new tax regime, remember it has been introduced in 2020, they are looking to further modify it in the upcoming budget. In fact, they are looking at the possibility of whether the tax rate could be, reduced for income up to rupees 10 lakh. In fact, they are saying that this will have an impact on both lower income group people, also the higher income slab people. So if there is a change in the rates, there will be, impact on across the individual income. Remember that being introduced in 2020, the new tax regime did not gain traction. But since last year, when there was a tweaking in the July budget, the data suggests that 72% already moved to new tax regime. The new tax regime, as you know, it's restrict exemption and offer few deduction only. There are also a talk on whether there is a change in the standard deduction. However, these discussions are underway and government will form its decision close to the budget.
No, absolutely. Of course, the final decision will be taken closer to the budget, but this is under advisement. It is being mulled, and I think that's very, very important. Thank you so much for that, Shrimi Chaudhary, Delhi Bureau Chief, breaking that story right from North Block coming in. And why it's also important is because look at it this way. Right now, the big question, the big narrative about the budget just round the corner is essentially, in less than 3 weeks is enough going to be done to boost consumption, to boost the economy. Just quick view from Lancelot Dikuna. I mean, we're not yet in budget territory, but just talking about what you would like to see and whether any kind of relief on consumption, any kind of relief on which can boost discretionary expenditure would be something that would be cheered. And would you see an impact, say, on an FMCG kind of play?
I think, definitely the government has been, looking at the GDP slowdown that we had, in the last quarter. And if you look at that, one of the components of that slowdown has been that personal expenditure, personal consumption expenditure has dropped. So that definitely will be a factor. And if there can be certain tweaks done in the tax regime to ensure that people who pay taxes are left with, say, slightly higher or significantly higher surpluses, then that could spur consumption and thereby give a boost to the economy. So it definitely is definitely a big positive for the market as well as for the economy. And I think the other factor will be to build the trust that the ease of payment of taxes, and it becomes more acceptable to people. If they are paying lower taxes, then they will disclose more income, and the entire collection cycle also will improve, and the government will get higher tax revenues through better compliance. So I think it's a positive sign. If it does happen, it's something to be seen. But if it does happen, it will be positive both for the markets as well as for the economy.
Okay. What else? I'm trying to figure out stocks which have had some strong moves in the session. So Ganesh Housing is now at 1300. That stock is up 4%. So while real estate may be doing whatever it is doing, Ganesh is up and about. Thirumalai Chemicals, a bit of a spike. Apar Industries, big move there. Liberty has shown a bit of a spike as well. So there are stocks that are really flying around in trade, Apar in particular. And then Garuda Constructions is at 143. Now Garuda is the stock in which Utpal Sheth recently bought some stake at about 128, 129. The stock is really zooming in trade. So do keep an eye out for some of these for sure. And I'm just wondering if Aditya, do you have any thoughts here on any of these that have spiked up in the last few minutes of trade?
Liberty Shoe definitely stands out for me, and I think there could be some more rally in the stock, though it's been a little volatile of late, but I think on the upside, it has the potential to test levels of at least 560, which happens to be multiple resistances. So I think at current levels, I could definitely look at adding the stock and look for a target of 860 on the upside. I can add one more name to that, Neeraj, that's Kelton Tech Solutions. If you take a look at the way the stock has shot up in trade today, it's a massive move on the upside. I think it's on the verge of a breakout from, again, a hurdle of 177. Above 177, I think the stock is easily testing levels of about 200 on the upside.
Is that your BTST of sorts, Aditya?
Can add that too in the list. The two stocks that I've picked up for BTST are BDL for a target of 1350 on the upside with a stop loss at 1100 on the downside. The second one is Varroc Engineering for a target of 680 with a stop loss at 590 on the downside.
Okay, well, 3 or 4 ideas, so keep an eye out for all of these. Okay, thanks Aditya, thanks for joining in today, giving us your thoughts. And the next stock on our radar is ONGC. It's emerged as a key nifty gainer today after the CLSA note, which followed a Jefferies high conviction note as well. Mihika brings us this report. Mihika.
So CLSA has done its upgraded ONGC from an outperform rating to a high conviction outperform rating. The brokerage has also hiked the target price for the upstream company to 360 versus 330 rupees earlier, and this puts a potential upside of 41.2%. Now in terms of the view on ONGC's business, well, the recent production ramp up at their KG98 block kind of raises confidence for the company's ability to meet its peak production targets, what CLSA is saying. They're also saying that the increase gas price realization. This isn't regarding of the ONGC's new wells getting a premium pricing in terms of the fixed pricing. This the results of this will be visible in Q3, and also the removal of windfall taxes will allow ONGC to have higher crude realizations above the $75 per barrel mark that the windfall taxes were previously capping the realizations on. CLSA has also raised the FY25 and FY27 EPS estimates by 2 to 8% because of these factors, and it's also noted that ONGC is currently trading at a material discount to its peer average, and this comes despite multiple growth triggers for the company.
Thanks a lot for that, Mihika. So, well, watch out for ONGC. A lot of fundamental views out there on this one. Within this bucket, Lancelot, ONGC upstream, HPCL downstream, of course, but marketing margins might be very strong in Q3, or an IGL which has had a corporate development with a listing of MNGL. Do you like anything?
I think BPCL, HPCL both offer, some decent value. There's also a lot of expansion. I think BPCL announced that, they are putting up 53,000 crore refinery in Eastern India, and that should, you know, do well for the company. I think there is a great growth coming in because the consumption is growing, and people are increasing their consumption with so many vehicles. Although green energy is becoming more and more relevant, but at the same time, there's a huge part of the country that is left unserved at the moment, and a lot of these companies will start to move towards serving those customers, and that's where you can see probably the growth coming in. And in terms of valuations, these oil marketing companies have corrected quite a bit, especially since the tax that was there that have been removed from them. So I think there is an opportunity to look at the commodity prices, and if you see crude cooling off a bit, then these companies would again be able to improve their operating margins as well as the distribution as far as retail marketing of oil companies is concerned. So I think those are a better bet at this point in time.
Okay. Kush Bora, ONGC on the charts, couple that up, of course, with a view or your BTST idea, Kush.
Sure. So ONGC, what we are seeing from a technical standpoint is more of a rebound from the short covering, or rather the oversold territories that it had reached. So this is more of a short covering rally. This can extend up until 270, and thereafter, you will see some resistance around the 280 mark, which is a 200 moving average. So I'll be a little circumspect. I wouldn't really go out and buy just yet because of the couple of resistance levels, that are very clearly, laid out. So if anyone's got it from a slightly lower level, not a bad idea to continue to hold on with a trailing stop loss around the 255 mark, but no fresh, no fresh recommendations on ONGC. Now, as far as my BTST idea goes, it is Muthoot Finance. The stock has actually done rather well in the last, 7-8 odd sessions. Yesterday, day before, saw a bit of a profit booking along with markets, but other than that, it's been on a strong footing. We think the kind of rally that has started all the way from 1800 odd levels can extend much higher. But from a BTST perspective, also you could gain, you could go for targets of 20 to 55 and 20 to 95. Stop loss being 2170.
What is the BTST call on the index, Kush? On Nifty or Bank Nifty? Because, I mean, it's surprised on the upside. I'm saying this because 24 hours ago, our technical analyst came and said, if you have a brave heart, go long on the Nifty. He's been proven correct. Do we have a great call for tomorrow?
Sometimes doing nothing is also a great deed done, right? So I would suggest don't do anything just yet. This is perhaps a rebound, a technical rebound. You want to see a follow through of that. If that comes around, then perhaps, but right now, no.
Okay, so Nifty and Bank Nifty, you won't really do much on. Would you look at some kind of a bounce back or further movement in a TCS? This again to Kush, just a day ahead of its results?
No, Tamanna. I mean, TCS, Infosys haven't featured on my buy list for a while. And, even if you see the kind of move that started in the entire IT pack somewhere around November, especially when the elections in the US happened and, Trump came into power and all of those things, those moves haven't really been sustained. So I think once again, TCS, Infosys don't really make the cut for me. If I were to pick one, even at the risk of sounding like a broken record, for me from the large cap, it's still HCL. And I'll also give you a reason, which is that the gains that it had made, have been sustained. At best, you're seeing a dip towards the 20-day moving average, and you still see the stock, rebounding from those levels. So for me, an HCL Tech is the only one that makes the cut. Wipro, we don't even bring into discussion. TCS, Infosys haven't really been doing all that well. So HCL Tech, any kind of dip should be taken as a buying opportunity, not too constructive on TCS and Infosys.
Okay, not too constructive on TCS or Infosys. You're staying away from IT. Lancelot, are you looking at IT as an option at all?
Yes, definitely IT will continue to be an option. Maybe not at this valuation, because valuations are still a little bit on the higher side, so they are looking a little bit elevated. Especially because we also do not know how, the new US government and their policies is going to impact the IT companies at this point in time. So maybe if the stocks do correct at that point in time, valuations become relatively attractive, then one can definitely look at holding, some of the larger companies. But I think the opportunity in the technology space lies with some of the small and the mid cap companies, because they are specialized in certain niche areas, and you will see those areas continuously giving higher growth rates than the overall industry. So whether it is like a persistent systems, or it is a latent view analytics, or happiest minds, they will because they are focused on certain aspects of the IT spectrum. So when those aspects provide you with higher growth rates, these companies will perform better in terms of growth in earnings as compared to the overall large companies. So what we saw from TCS, Infosys, and Wipro, HCL Tech, the earnings and the revenue growth has now reduced to a single digit growth over a year. So that's merely not suggesting huge appreciation in the price multiples, unless there's a re-rating of the stock, which is very difficult at this point in time.
Another factor for tomorrow to watch out for is that ahead of the budget, government is set to release its first advance estimates for GDP growth. That'll come in at 4 post-markets. Could be a big factor tomorrow, considering that the last time the GDP numbers came out for Q2 were very, very disappointing. Pallavi, what are we expecting?
Ahead of the union budget, the Ministry of Statistics will release the first advance estimates for GDP growth for FY25. Now, according to a Bloomberg poll of economists, the country's GDP is likely to grow by about 6.4% for FY25. Now, GDP growth, according to the RBI, is projected at 6.6%, which is anyway significantly lower than its earlier projection of 7.2%. Now, what had happened was that GDP grew by just about 5.4% in Q2. That was the lowest pace in 7 quarters, and this was primarily led by slower growth in manufacturing. This was compared to about 6.7% that we had seen in Q1. Now, the lower than expected growth had anyway tempered estimates for the full year as well, and economists had lowered their projections for the full year. So this number is definitely going to be critical and something we're going to be watching out for closely. Now, the expectation is that despite a subdued first half, the second half of the fiscal year is likely to be better. That's on the back of a pickup in capex, a better investment, a revival in consumption demand, both in rural as well as in urban areas. How the second half does pan out is something that we're going to be watching out for. But what high frequency indicators currently suggest is that there has been minor improvement in the second half of the fiscal year.
Okay, so that's on the macro front. Possible improvement in the second half of this year. But let's go across to Kush. Kush, BTST, STBT trade. Okay,
we just discussed that.
Apologies, we've missed that. Okay, sure. Great. Okay, so STBT, BTST out of the way. Let's quickly look at what to watch out for. You have EU December CPI numbers, which will come out later today. You also have the EU December core CPI as part of the larger macro picture, which will come out today, and which will likely determine how rates go. Of course, consensus view expects a bit of an inch up in terms of the CPI versus November. India GDP growth estimates, we spoke about that. That will also come through, and you have Fed's Biocon, who will give a speech, likely also throw some hints on how the Fed as well as him personally are viewing the US economy. And that will be something that we'll want to watch out for. Outside of that, you have a couple of big buzzers. You have something like a Zydus Life, which is up 4% in trade. Kush, views on Zydus Life?
Well, it's consolidated for a very long time now. I think it's about time that it broke out of the range. However, we just need to see if there's a follow through to today's move, and the stock indeed does move above or stay above the 1,000 mark. If that were to happen, then I won't rule out a big move to 1,055 and even 1,095 kind of levels. So brief period of consolidation coming to a pass. One more day. Let's wait and watch tomorrow. If 1,000 is sustained, then for a second target of 1,095, this can be considered on the long side. And the stop loss for this one comes in at 965.
Lancelot, Coal India came out, or rather, we have reports which suggest that Coal India might just ramp down with regard to their production targets. Their 1 billion tons production target for FY26 is now pushed to FY27. Stock has obviously corrected a fair bit from those highs of 500, 550 plus. Would you, find value in a trade like this where the stock has corrected sharply? They've also somewhere possibly revised production targets, or would you feel that it's had its run?
I think, when you look at it, when it moved up sharply, it was way overvalued, right? And even now, while it has corrected, quite a bit from its peaks, I think there's still a lot of overvaluation or a lot of froth left in the stock before it can really become attractive. Because this is just one of the types of execution issues that, you are seeing with a company like Coal India. When it brings down its production targets, what was estimated earlier, then you may see costs rise, and that may have an impact on margins. Then you could have an impact on coal prices per se, because with an economy that's slowing down, you could see domestic coal prices also fall. So I think there are so many aspects which can impact the business going forward, and the stock seems to ignore a lot of these factors, especially when it comes to building out the the price. So I think that there is still potential downside left in terms of re-rating or valuation. And maybe by the time March is over, you would get a much better sense of where the correct values would be, or most relevant values would be, and then one can take a call if it has really bottomed out. And there is upside potential thereafter, one can look at it at that point in time.
Okay, so that's the view coming in for Coal India. Lancelot, Kush, thank you so much for joining us this afternoon. It's been a pleasure interacting and always great having your perspective. But let's start wrapping up for today. Let's look at where the Nifty is settling in at. A minute away from close now, a third of a percent higher on the Nifty. Still holding roughly 23,700 odd. Of course, levels that most of our analysts have suggested is 23,900 to 24,100 is something that they will be looking out for before they start looking at a change in stance. But for the moment, everyone seems cautious. The Nifty bank up 0.5% thereabouts. Let's pull up the heat map on the Nifty as well. Try and see IT, whether there's absolutely any recovery. Not really. We're seeing all of those IT stocks languishing at the bottom. HCL, TCS, Tech Mahindra, Wipro, as well as so those, as well as Infosys, in fact. So all of them somewhere at the bottom of your screen. What's doing well? ONGC is up 4%. Solid note coming in from CLSA. High conviction overweight is what they've given it. SBI Life and HDFC Life, so the life insurers seem to be doing fairly well in trade. You had an initiating coverage note on life insurers as well today morning. Reliance seems to have pulled the index higher as well. Let's pull up the contributors on the Nifty, and Reliance will likely be sitting on almost at the top there. We've closed for the day. There you go. Reliance and ICICI Bank. What a move by ICICI Bank as well today. L&T is done fairly well as well, and ONGC, even though a low weight, you're seeing that reaction on the stock reflecting here on the contributors. In terms of the losers, outside of Trent, all three of the top four being IT names. No surprise there. The heat map with regard to sectors, if we can, and very similar kind of a chart we'll see. Auto, FMCG largely flat, slight negative bias. IT seems to be the one which has taken the knock. Banking index 0.5% thereabouts. Within that, the private banking index seems to have done fairly okay in comparison to the PSU banking index. So largely a third of a percent higher on both of those. Look at maybe the top gainer is oil and gas. No surprise, metals seem to have done well as well. Last off, let's pull up the BSE 500 top gainers, top losers. The broader markets, of course, have outperformed the index today, and that's reflective here. ITI, on the back of volumes, we've seen a surge in trade on that counter. today we've seen a bit of a correction after the clarification coming through that there's no information that they are holding back. The stock surge simply seems to be market forces. Zomato is down 5% on the back of a downgrade which has come through. Info Edge on the back of numbers seems to have disappointed as well. Blue Star is down as well today, 3% odd. What's done well? Equinox, Aegis Logistics, RCF, some chemical names have done well in trade today. Even an EPL, a Biocon has done well on the back of new drug announcement as well as an upgrade. So that's how essentially it's played out. From Neeraj, Tamanna, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
From my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
From my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims?
You're watching Market Express and I'm Aditya Rao, and let's get started with some market updates today. Markets recoup yesterday's sell-off to end higher as fears of HMPV virus are no longer spooking the markets. The Nifty ends above 23,600, whereas Sensex ends above 78,100. Broader markets outperform the benchmarks. All sectoral indices barring Nifty, IT end higher. Metals, realty, oil and gas and pharma pack gain in trade. Nifty oil and gas was the index that ended as the top sectoral gainer. ONGC gains around 4% on CLSA upgrade. Nifty auto ends flat. IT index is in the sole spot on the index to end with cuts. The big Indian IT tech that is HCL Tech, TCS, Tech Mahindra and Infosys drag the index most. Polling dates for the national capital have been announced. Delhiites will vote for the new government on February 5th. The counting of votes will take place on February 8th. Delhi has 70 assembly seats, out of which 62 were won by Aam Aadmi Party in 2020, after which Arvind Kejriwal was sworn in as the chief minister. Microsoft is all set to invest $3 billion in India for empowering cloud and AI. The global tech giant's CEO Satya Nadella is in Bengaluru, the Silicon City of India, where he addressed the Microsoft AI Tour keynote session. While speaking in the session, Nadella said that he has already spoken with PM Modi about the investment in India. On to an NDTV Profit exclusive now. Proprietary desk trading, also known as prop desk trading, is facing challenges in Mumbai and other cities. Prop desk trading is when a financial firm uses its capital to trade. NDTV Profit learns that many prop desk trading are shutting or downsizing. This has been happening due to SEBI curbs on speculative trading. Well, the earnings season is back in the business, and GM Breweries reported its third quarter earnings today. Net profit of the company declined by nearly 3% to 21.6 crore rupees as opposed to 22.6 crore in the same quarter last year. The revenue of the company was 5.7% above the last year's number, and that was at 166 crore. And the operating profit was increased by 18.1% year-on-year to 29.7 crore. GM Breweries is the largest manufacturer of country liquor in Maharashtra. Dalal Street debutant One MobiVic Systems reported its earnings today, and the fintech company reported a consolidated net loss of 3.6 crore rupees in the first 6 months of this financial year, and this was against a profit of 5.2 crore rupees in the same period last year. The total income increased by 42% year-on-year to 294 crore, but the shares of the company held a strong grip on the exchanges today. Share price rose close to 8% intraday. FADA has released retail auto sales data for the month of December. Overall retail sales grew by nearly 10% in 2024. Two-wheeler sales rose around 11% year-on-year to 1.89 crore units in December. And three-wheeler sales saw a 10.5% jump, reaching to 12.2 lakh units as compared to a little over 11 lakh units last year. Four-wheeler retail sales grew by 5.2%. 40.7 lakh cars were sold in December 2024 as compared to 38.7 lakh units sold in December 2023. India's car industry has carried over nearly 2 months of unsold stock into the new year. Vehicle registrations rose 5.18% year-on-year to 40.7 lakh units, and this is as per the FADA data. While some dealers benefited from the year-end schemes and expanded product range, overall demand remained subdued in December, with customers deferring purchases to January for anticipated benefits. Inventory levels were between 55 to 60 days. On to a business update now. Kalyan Jewellers reported a strong Q3 with a consolidated revenue growth of 39% year-on-year. India operations saw a 41% revenue increase, with same-store sales growing 24% YOY. The company opened 24 new showrooms in India during December quarter. Kalyan Jewellers' Middle East revenue saw a growth of 22% YOY. The company also plans to open 75 showrooms in non-South Indian regions and 15 across South India and international markets, and 80 Candere showrooms in India. On to some IPO updates now. Indofarm Equipment listed on NSE at a premium of 19.1%. The company listed at 256 rupees versus the issue price of 215 rupees. On BSE, the company was listed at a premium of 20% at 258 rupees per share. Quadrant Future Tech is now open for public subscription. The IPO consists of a fresh issue of 1 crore shares. The company is aiming to raise up to 290 crore rupees, and the price band of the IPO has been set in the range of 275 to 290 rupees per share. Out of the total IPO size, 75% is reserved for the qualified institutional buyers and 15% for non-institutional investors, and the remaining 10% is for the retail investors. Quadrant Future Tech develops train control systems under Indian Railways Kavach project. BPCL grants approval for an initial public offering to Maharashtra Natural Gas Limited. The company is a joint venture with GAIL and Indraprastha Gas. The proposed IPO is expected to raise approximately 1,000 crore as per the BPCL's regulatory filing. IGL holds a 50% stake in the company, while BPCL and GAIL each own 25%, and Maharashtra Industrial Development Corporation holds the remaining 5% stake in the company. Let's take a look at a few brokerage calls now. Jefferies has downgraded Zomato to a hold with a target price of 275 rupees. Jefferies expects 2025 to be a year of consolidation for the company, while valuations are reasonable given Zomato's strong performance. They have sharply reduced Blinkit's EBITDA forecast for FY 26-27, citing profitability challenges. Jefferies has also cut Blinkit's target valuation multiple by half. Jefferies expects a recovery in capex and B2B demand in H1 2025 in the Indian electrical space. This should benefit Polycab and Finolex Cables. Blue Star has been downgraded to hold after a 140% rally in 2024. A delayed winter is seen as a positive for AC players but negative for winter product sales. Jefferies maintains a buy on Polycab, Finolex Cables and V-Guard with slight target revisions, while Havells is rated hold and Whirlpool is expected to underperform despite a minor target price increase. Citi has initiated coverage on Hyundai India with a buy rating and target price of 2250, indicating a 23% upside. The company benefits from stronger parent support and attractive product line and a higher share of SUVs. Hyundai India's focus on premium models and export growth adds further potential. Capacity expansion at the new plant is expected to drive volumes from the second half of FY26. CLSA upgrades ONGC to high conviction outperform and raise the target price to rupees 360 from 330 earlier. This indicates a 41.2% upside on the company. The production ramp up at KG 98 boosts confidence in meeting targets, while higher gas prices realizations are expected in Q3 results. The removal of windfall tax also supports better crude earnings. CLSA increases EPS estimates for FY25 to 27 by 2 to 8%. Despite these positive triggers, ONGC continues to trade at a significant discount to the peers. Now, let's shift focus to the pharma sector. Jefferies advises focusing on domestic formulations over US generics in 2025. Jefferies' view is based on the consistent growth prospects. The NSE Pharma Index outperformed in 2024 with 39% returns, but market growth was limited to 7% due to the price caps and drug bans. Recovery is expected from April 2025, driven by broader price hikes and stable raw material costs, which should improve the margins. Titagarh Rail Systems delivers its first driverless made in India train set for Bengaluru Metro's Yellow Line. The automated train set will run on an 18-kilometer stretch to Electronic City, and the company will deliver 2 more train sets by the month of April. Titagarh Rail also plans to ramp up production to 2 trains per month by September 2025. Vodafone Idea enters into a share purchase agreement with iBus Network and Infrastructure. The pact is for the transfer of entire 50% shareholding in Firefly Networks for 4.5 crore. Post the transfer of shareholding, Firefly will cease to be a joint venture of iBus Network. Vodafone Idea's stock jumped over 2% intraday. Nuvoco Vistas has won a bid to acquire Varadaraj Cement, which was undergoing insolvency resolution. The transaction will be executed via its subsidiary, Vanya Corporation, without increasing the debt levels. This acquisition adds a 3.5 million ton per annum clinker unit in Kutch and a 6 million ton per annum grinding unit in Surat. The acquisition will also add to quality limestone reserves. With this acquisition, Nuvoco Vistas' total capacity will increase to 31 million ton per annum. NVIDIA unveils Project Digits, a personal AI supercomputer launching in May, powered by the new GB10 Grace Blackwell superchip. It delivers powerful AI processing in a compact desktop form. The desktop is priced at $3,000 and will offer a high performance in a small package. Samsung Electronics is investing more in AI for its consumer electronics. The company is using its wide range of devices like smartphones and TVs to stand out in the AI field. CEO Hang Jong-hee pointed out that company's strong position in both mobile devices and home appliances, aiming to connect the billions of products it sells each year. After facing challenges in AI memory and competition with SK Hynix, Samsung is focusing on smart home technology to regain confidence. Akasa Air has appointed Belson Coutinho as the Chief Operating Officer. In his new role, Coutinho will oversee critical operations in areas like in-flight services, airport services, flight operations, and operational excellence. He will also lead the Akasa Air's Learning Academy. Adani Group partners with Thailand's Indorama Resources to strengthen its petrochemical presence. With investment of 35,000 crore rupees, the petrochemicals business will be under Adani Enterprises. A joint venture will be set up in the name of Valour Petrochemicals, and Indorama Ventures is one of the largest petrochemical producers globally. Now let's take a look at some order books. DCX Systems, a company involved in the electronics manufacturing primarily in the defense and aerospace sectors, has a consolidated order book of 3,000 crore rupees as on November 2024. The company also holds export purchase orders worth over 450 crores each from ELTA Systems in Israel and US-based Lockheed Martin Global. The company's focus going forward is on recovering raw material costs and improving margins. It is also aiming to achieve 50 to 60% of the order book execution. Paras Defense and Space Technology secured a license from the Department of Promotion of Industrial and Internal Trade, DPIIT, to manufacture light machine guns. The license allows the production of Mk46 and Mk48 LMGs with a capacity of 6,000 units annually. The stock price surged more than 10% in the trade today post this announcement. Larsen & Toubro bagged a large order in the range of 2,500 to 5,000 crore rupees. The company has won an order to implement advanced distribution management system in West Bengal. Company has also got an order in Saudi Arabia for 380 kV substation, which will facilitate evacuation of solar generation. And company's transmission and distribution business also got a major order of 400 kV substation in Kuwait. Board of Shakti Pumps has approved raising up to 400 crore rupees through qualified institutional placement. The company manufactures stainless steel pumps and motors, and the shares of the company hit lifetime high for a second consecutive session post this update. Now, on to an NDTV Profit exclusive. New tax regimes could be modified in the upcoming Budget 2025. NDTV Profit learns from its sources that the Finance Ministry might even consider tinkering the personal income tax slabs. The government is examining possibility of reducing tax rates of income tax up to 10 lakh rupees. In an update on HMPV virus, more cases have been detected in Maharashtra and Gujarat, raising the HMPV total count to 7 in the country. Health experts have said that virus is not dangerous, urging citizens not to panic. However, the central government has urged states to increase surveillance and implement preventive measures. Several states have issued the advisories to prevent the spread of the virus. The Nagaland government seeks exemption from the protected area permit, which mandates foreigners to obtain permission before visiting certain Indian states. The protected area permit was originally introduced to protect these areas, with over 2,000 foreign visitors attending the Hornbill Festival annually. Nagaland aims to simplify access by being excluded from the permit requirement. The move follows a cabinet review noting that festival processions have been conducted peacefully. India's funding in space sector dropped by 55% in 2024. This drop comes amid a global 20% decline in the space sector investment. The government plans on reviving sector by approving a 10 billion rupee loan approved in October 2024, which will help to fund space startups. Union Home Minister Amit Shah launched a Bharat Pol portal. The portal has been designed to streamline the process for law enforcement agencies in India to seek international assistance through Interpol in criminal matters. The portal facilitates requests for issuing red and the other color codes notices against fugitives wanted for crimes in India. The Supreme Court has granted interim bail to Asaram Bapu on medical grounds until 31st of March. He was currently serving a life sentence for raping a schoolgirl. He will, however, remain in jail until he gets an interim bail in another rape conviction. He will not be allowed to meet his followers after his release. A strong earthquake of 7.1 magnitude in Tibet took away the lives of 95 innocents. Not just Tibet, the tremors were felt in several parts of India, including Bihar, Assam, and West Bengal. During his visit to India, US National Security Advisor Jake Sullivan announced the easing of regulations that have prevented nuclear cooperation between India and USA. He said this was an essential for realizing the full potential of the 2008 India-US deal, and the formal paperwork will be done soon. He also expressed concerns about dual use of technologies falling into the wrong hands and that India and USA need to work together. Indonesia's bid to join BRICS bloc has finally been approved. Brazil adds Indonesia as the newest BRICS member. The country has officially joined the team of Brazil, Russia, India, China, and South Africa. BRICS was created in 2009 and is seen as the counterweight to the Western economies. US President-elect Donald Trump renewed his offer to making Canada the 51st state of United States. This was hours after the resignation of Canadian PM Justin Trudeau. Trudeau announced his resignation on Monday, pressured by the ruling Liberal Party due to his declining popularity. Trudeau will remain the Prime Minister till the party elects a new leader. Trump has been flouting the idea of making Canada the 51st state of US for a long time now. Visitors to UK will now have to pay an extra fee for electronic travel authorization before flying. The application cost will be around £10, and babies and children will also need to authorize via this system. The ETA is a pre-authorization for travelers from countries where the UK doesn't require visas. And that's a wrap on Market Express today. There is more on NDTV Profit. Stay tuned for more news and updates.
on my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
Benchmarks end the session higher, recovering yesterday's losses. Gains fueled by financials and oil and gas stocks ahead of Q3 earning reports. Delhi Legislative Assembly election to be held on February 5. Election Commission of India announces that the results will be out on February 8. The election will see a three-cornered contest between the AAP Bharatiya Janata Party and Congress. Indian economy likely to see growth decelerate to a four-year low in the fiscal 2024-25. The Ministry of Statistics and Program Implementation is set to release its first advance estimates ahead of the union budget in the next few minutes. Taxpayers are expected to see income tax relief in this year's budget 2025. NDTV Profit learns from sources that the government is examining possibility of reducing tax rates for income up to 10 lakh rupees. And top executives of Taurus Jewelry House booked after it allegedly dupes thousands of investors in a multi-million Ponzi scheme. Panic-stricken investors gather in front of the company's Dadar showroom to demand the money owed. That's the word coming in from Satya Nadella at the Microsoft AI tour in Bengaluru. Adds that Microsoft will invest $3 billion to empower India with cloud and AI, calling it the golden age for systems when it comes to innovation. Adani Group partners with Thailand's Indorama Resources to strengthen petrochemicals presence for 35,000 crore rupees. Group's market cap rises to 12.82 lakh crore rupees. Car industry enters 2025 with 2 months' worth of unsold inventory. Underscoring demand headwinds, retail car sales rose to 40.74 lakh units according to 2024 FADA data, compared to 42.86 lakh cars dispatched to dealerships last year. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, markets recovered from 2 days of losses, fueled by gains in financial and oil and gas stocks ahead of corporate earnings. Harsh joins in with the wrap of all the action on the bourses.
Well, the index itself closed a third of a percent higher, so no complaints on the benchmark, neither on the broader markets because those outperformed the benchmark. There you go, around 0.4% higher. The Nifty Bank closed around 0.6% higher, so we saw gains. Nifty Bank bounced back from sub 50K above the 50K mark, so that's definitely a positive, and the Nifty 50 closed above the 23,700 mark. So let's look at the heat map. Try and check up on a few stocks which were buzzing, especially on the losing side of things, because there were a few losers in comparison to gainers. So you'll see a bunch of IT names, HCL Tech, TCS, Tech Mahindra, Infi, as well as something like a Wipro, all closed in the red, even if marginally. So IT was under pressure for sure. What else was under pressure? You'll see auto names, quite a few. Eicher Motors, Hero Moto, a couple of auto names there, including an M&M, which was in the red for a better part of the day, were under pressure, but largely the auto index closed flat, if not higher. ONGC did very, very well for itself after that CLSA note. Very constructive CLSA on ONGC. The life insurers did well on the back of an initiating coverage note. Reliance Industries pulled the market higher for sure, and ICICI Bank 1.3% higher definitely aided the index in that sense. Let's pull up the sectoral heat map as well. Try and zoom into how the sectors played out. Oil and gas, no surprise there, the top gainer on sectoral charts. Nifty Metal did well. You also had the Nifty Bank up around 0.5%, and therefore the Nifty PSU Bank as well as the Nifty Private Bank in the green. What didn't do well, no surprises, Nifty IT and Nifty Auto. The India VIX calmed down a little bit, but after yesterday's spike, nowhere close, down about 6% thereabouts. Let's now zoom in and look at the broader markets. The advanced decline, the breadth first, the advanced decline definitely in favor of the advances today. So the breadth was favorable, a bit of a relief after everything that played out yesterday. 3:1 in favor of the advances. The broader markets is where a bulk of the action was. Plenty of positive moves on the broader market. 0.9% higher on the Nifty mid cap, 1.5% higher on the Nifty small cap. So the broader end of the spectrum is where all of the action was. Let's pull up the BSE 500 top gainers, top losers. While ITI was one of the top losers in trade today after that clarification that came through with regard to the fact that no price sensitive information has been withheld and that this is purely market forces which is driving the stock higher. 150% since November this year. That stock saw a lower circuit, 10% lower. Outside of that, you saw a bit of a cool off in Zomato and InfoEdge for different reasons. Zomato on a downgrade, InfoEdge on the numbers that it declared. Blue Star too, very similar lines. Look at the ones which have done very well. Some chemical names as well over there. RCF, EPL standing out. Biocon did well on the back of an positive announcement by the company as well as a brokerage.
Thanks, Harsh, for that. Now, Pallavi is joining us now to talk about the FY25 advanced GDP estimates that have just come in. FY25 GDP is seen at 6.4% versus 8.24% in FY25. Pallavi, over to you.
That's right. GDP is estimated to grow by 6.4% for the ongoing fiscal year. This is actually the lowest in 4 years. The last time we saw a lower print than the one expected this time around was actually during FY21 when the Indian economy saw the impact of COVID. So this is 6.4%. It's not entirely a surprise given that we did see a bit of a shocker on the Q2 GDP front as well. It was a 7-quarter low and significantly lower than what was even being estimated. That did result in a lot of economists as well as the central bank pulling down estimates for the full year. So we are looking at a GDP growth of 6.4% for the ongoing fiscal. GVA is also estimated to grow at 6.4%. Now, the reason the first advance estimates are important is because it sort of helps the government set the base for the figures that they project for the budget. And what's important there is the nominal GDP. That is estimated to grow by 9.7%, and that's compared to 9.6% that we saw in the last fiscal. With that, let's quickly go on to Gaura Sen Gupta, economist at IDFC First Bank, to share her quick thoughts on what she's making of these figures. Gaura.
Hi, Pallavi. Thank you for having me.
Thank you so much for taking time out for us. So, to begin with, the figures seem broadly in line with expectations. Is that correct?
The real GDP, yes, it was in line at 6.4. We were at a 6.3. So it does indicate some pickup in momentum. So the first half GDP growth is around 6%. So some improvement, maybe roughly around 6.6 or 6.8% in the second half. So, which broadly I think is very realistic in terms of real. What I would say is a little bit of a disappointment is the nominal GDP growth figure at a 9.7. So that's slightly lower than what the union budget was penciling in. So that has some implications for the fiscal deficit ratio. So if you plug in the nominal GDP numbers, it would shift the fiscal deficit ratio by around 0.1% higher.
Okay, all right. So, right, please continue. Sorry.
No, that's it. Broadly, in line with estimates, the real GDP, I think, was very realistic. The nominal was a bit of a disappointment. We are tracking slightly higher. So our nominal GDP growth rate is tracking at around 10.5, 10.3% because the deflator growth has been better. So even with a more subdued 6.4 real GDP growth, because your deflator growth is better this year, nominal GDP can be better than the 10.7 that they have done in the advance estimate. It can be closer to around 10.5, 10.3.
Okay, all right. I do want to understand, though, you did say that nominal GDP, as per your expectations, is expected to be a tad better than what's being projected by the CSO currently. But overall, given that growth appears to, like the 6%, the estimation is on the back of a better second half of the fiscal year, largely on the back of a pickup in government capex or the festive season spending, or be it, the other factors, the agricultural output, the Rabi harvest being better than expected. I do want to understand at this point, are there risks towards the upside or the downside on the overall GDP growth figures?
I would say they're to the downside because the high frequency, at least in Q3, FY25, is still not picking up. For example, we are seeing some signs of rural consumption picking up. You've got better fuel consumption. Rural wage growth has picked up marginally. But then at the same time, you're seeing certain segments of weakness. For example, two-wheeler sales growth has slowed down. You look at NREGA, the demand for employment under NREGA has picked up as the Kharif sowing has ended. Again, when employment demand under NREGA picks up, it basically indicates not a very strong rural job market. So on the urban side, we've seen a sustained weakness. Even if you look at company commentary, there is a sustained moderation in urban consumption, basically reflecting the fact that as listed company performance, the profit growth declined in the first half of FY25. Urban wage growth also slowed, and we are seeing an impact of it on consumption indicators. You look at FMCG sales, you look at passenger vehicle sales. The key support to growth was from especially to the capex cycle, was the government capital expenditure, especially the center as well as states last year in FY24. In FY25, we've had a little bit of an unplanned contraction of the fiscal impulse, with the central government capital expenditure in FY25, at least till November that we have the data. There's a decline in central government capital expenditure. There is also a decline at the state government level at capital expenditure. So that impulse or support that we were seeing to the capex cycle from the government side is also a bit low. So I would say on the whole, the risks are to the downside.
Okay, all right. Gaurav, one last question, a two-part question actually before we can let you go. So first of all, you did touch upon the implications of today's estimates on what it means in terms of the fiscal deficit for, as a share of the GDP for this time around, for this fiscal. So firstly on that, are we broadly still expected to be on target, given that the government had already set a fairly aggressive target for itself? And also, in terms of the industry-wise breakup, any surprises there? So we are looking at a fairly tepid manufacturing growth of about 5.3%. That's compared to a figure that's closer to almost 10% in the last fiscal. Again, given Q2 figures, not entirely surprising maybe. Agriculture, of course, is expected to have gotten better from the last fiscal at 3.6%. In terms of the tertiary sector, we're looking at a growth of 7.2%, with trade, hotels, transport at 5.8% and financial, real estate and professional services at 7.3%. So all in all, is that broadly in line with expectations? And on the first one, what are we expecting in terms of fiscal deficit figures?
I'll start with fiscal. So the nominal GDP is a bit weaker than what even the union budget had penciled in level terms. So it does artificially push up the fiscal deficit ratio. But the good part for FY25 fiscal is that because capex till November, the central government capex on a fiscal year-to-date basis is tracking, I think, around 12% lower. And there is a very good chance that we will not reach the full year target of 11.1 trillion for capital expenditure at the center level. So there will be expenditure savings that will happen on the expenditure side, which will balance out any potential shortfall that we have on the disinvestment receipts front. While broadly the tax collections have been on the stronger side, particularly the income tax collection, and we got a very, very large RBI dividend of 2.1 trillion. So the revenue side is well on track. The expenditure side is tracking a bit softer. So there is actually the fiscal deficit in level terms is likely to be lower. As per our calculations, the FY25 fiscal deficit in level terms can be anywhere between 800 to 900 billion rupees lower than the target levels. So even though the denominator, the nominal GDP was a bit lesser than expectations, there is no risk that the government will not achieve the 4.9% target. Actually, it's going to outperform, and the deficit is likely to be lower than the 4.9% target. And regarding the sectoral breakdown of the advanced GDP, very realistic. Manufacturing sector growth, the profit growth of companies has been on the softer side. It's actually reflecting the fact that sales growth has moderated. It's not just lesser support from the decline in input costs that we had in FY24, but also on the demand side, manufacturing firms are seeing a slowdown in sales growth. Is also getting matched with the high frequency, which is not looking so robust, especially for the urban consumption side. The services side of the economy is doing relatively better. Again, you see this in the listed company performance, where the services side of the economy is doing better. Trade, hotels, transportation, real estate has been one of the key supports to the capex cycle. So it's not just the government, but it's also the pickup in real estate post-COVID, which has helped the capex cycle. So that whole real estate, financial services segment, on the whole, at least for the real GDP, even the breakdown is very realistic and the overall number is also realistic. But the risks, given the fact that high frequency, at least in Q3, which is supposed to be our festive season, is not really it's not picked up as much as we would have hoped. There are some downside risks, but I would say very limited. On the whole, very realistic numbers. Even the internals are pretty realistic.
All right, Gaura, thank you so much for taking time out to speak to us and, taking a quick snapshot view of today's figures. GDP likely to grow at 6.4% for the ongoing fiscal. That will mean that India's economy will grow at the slowest pace in 4 years ever since the pandemic. Nominal GDP estimated to grow by 9.7%. And what these figures are likely indicating at is that fiscal deficit is likely to be on target or maybe a tad below the government's target. We'll continue to bring more analysis on today's figures. Do stay tuned.
Right. Thanks, Pallavi, for taking us through the FY25 advanced GDP estimates data that is seen easing at 6.4% to a 4-year low. Now, in some possible relief for taxpayers in the upcoming budget, NDTV Profit learns from sources that the government is examining the possibility of reducing tax rates for income up to 10 lakh rupees. Shrimi is joining us with more. Shrimi, what are you picking up from your sources?
From the policy makers at North Block that they are looking at tinkering the personal income tax regime, which is the new tax regime in the upcoming budget. What we are also getting sense that lot of deliberation happening to sort of come up with a fiscal measures to boost demand. Of course, one of the concern of the government, and also as you can see, the advance estimates are clearly showing slower pace in the overall GDP growth. So fiscal measure as a part of fiscal measure, there are a lot of consideration happening, especially the tax cut. And what we are also getting sense that they are looking at how to make this new tax regime more attractive, more incentivize, give more benefit to the, especially the salaried class and the middle class. And we could see some sort of tinkering in the lower slabs, especially those having income over 10 lakh rupees could see lower rate from the current existing rate. Remember, the new tax regime, which is now a default set option, is about 72% of taxpayers has already moved to this tax regime. So government is of course of a view that how to make it more lucrative. Also remember that July budget has already made changes in the tax slab and rates, and in fact in the standard deduction of new tax regime. And now they're also looking to further modify this new tax regime. However, the consideration and the possibility is still under examination mode. Nothing has been finalized yet, but so far the focus is to how to increase spending here and also to have more disposable income in hand of taxpayers. So definitely there are a lot of fiscal measures is under deliberation, and this is one among them, is what we are getting sense from the top sources.
Right, Shrimi, thanks for bringing us those exclusive details. Now on to another exclusive. Now, NDTV Profit learns that proprietary desk trading, also known as prop desk trading, is facing challenges in Mumbai and other cities. Prop desk trading is when a financial firm uses its capital to trade. Sources say that many prop desk trading are shutting or downsizing. This is due to SEBI curbs on speculative trading. Charu is joining us with more on this.
As per the sources that NDTV Profit spoke to, proprietary desks or prop desks are either downsizing or shutting down in cities like Mumbai, Delhi and other places. Now, this is estimated to have been coming up because of the curbs that the market regulator recently imposed on speculative trading in its effort to save household wealth and retail investors against facing significant losses. Now, these curbs were quite stringent to deter the volumes in F&O trading, which included tripling of lot sizes, fewer weekly expiries and reducing trade volumes. Now, because of this, it has been seen by several sources that NDTV Profit spoke to that prop desks are either downsizing, reducing in number or closing off completely. There are other things also seen that the traders who are, engaged in quant-based trading are still resilient. However, some other traders who are using other strategies to do these tradings are sort of facing the heat of the curbs on a larger scale. Now, for our viewers, I would like to elaborate what prop trading is. Prop trading or proprietary desk trading is basically when traders are engaging in the capital markets on behalf of the entities that they are associated with or involved with. This is basically done to raise funds for that particular entity.
Thanks, Charu, for breaking that down for us. Now, top executives of Taurus Jewelry House booked after it allegedly dupes thousands of investors in a multi-million Ponzi scheme. Mumbai police registered an FIR against Taurus Jewellers directors and CEO for defrauding investors. The company promised lucrative returns but stopped payments in December 2024. Panic-stricken investors gather in front of the company's Dadar's showroom to demand the money owed. My colleague Agnidev Bhattacharya is at the showroom now and joins us with what's happening on the ground. Agni, over to you.
We are standing outside the showroom of Taurus in Dadar, a company which stands accused of defrauding its investors of over 12 crore rupees. The company started out with a jewelry business but then reeled in investors, promising them alluring returns of 4 to 11% weekly on their investments. Now, original investors did end up getting these sums as well as bonuses on referrals for other investors. However, starting January, when investors piled up, the company stopped these rollouts, shut shop and escaped. Now, investors have lost anywhere between 20,000 rupees to 50 lakh in this pyramid scheme. However, in between all of this, the WhatsApp forward and a handout from what seems to be company spokesperson has come out accusing the company's own CEO and accountant of defrauding the investors. Now, this is not undersigned by anyone and we can't take credibility or claim credibility of this document, but this accuses the internal stakeholders of Taurus of defrauding the investors, and the company is promising that it will come out and pay its investors all the bonuses and returns due. So investors, including policemen in the region, have lost money. However, the case, the FIR was filed with the Shivaji Park police station right down the road from here, and it is now with the Economic Offences Wing. For NDTV Profit, with cameraman Vivek Amre, this is Agnidev Bhattacharya.
Thanks, Agni, for bringing us those details from the ground. Now, polling dates for New Delhi have been announced. New Delhi will go to vote on February 5 and the counting of the votes will take place on February 8. Remember, Delhi has 70 assembly seats, out of which 62 was won by Aam Aadmi Party in 2020, after which Arvind Kejriwal was sworn in as the Chief Minister. Now we have been following Texpedite, a very exciting startup accelerator program by Games 24/7 since it was launched in Bengaluru in October. And not only has the program been providing critical resources to startups that have applied and got selected, it also organizing meetups, mentorship and knowledge sharing events across our country. Here's a brief report from Texpedite's New Delhi and Hyderabad events.
After a successful launch in Bengaluru, Texpedite was in Delhi discussing key topics like funding for startups. While special guest Sri Sanjeev spoke about the need for startups to innovate, how collaborations between the government and private companies can be fruitful, and why successful companies should contribute in germinating an ecosystem of sustainable growth.
The whole concept is to bring private and public enterprises together. We look forward to industry and academia coming together to promote the startups, their incubation, and help the startups reach to the different markets.
A panel of investors and VCs talked about key aspects around funding for startups, how they can get funded, and how they can be frugal by using open source solutions, and what expectations must an investor keep from the founder and vice versa. In the Startup Stories segment, co-founders of Bolt and Bobble AI shared their journeys and learnings, thereby providing valuable insights to the newbie startups in attendance. High-Tech City in Hyderabad played host to Texpedite in its next chapter, where true to its name, AI was in the spotlight. In the presence and participation of Chief Guest Sri Jayesh Ranjan, discussions around adopting AI, innovating with AI, creating ethical and sustainable products using AI, being frugal with open source solutions, and fostering a culture of innovation and adoption of disruptive technologies in companies was discussed at length.
The cost-benefit analysis of investing time, of investing resources to participate in an event like this, and what you get on the other side in return is huge.
Founders of HitWicket and Rava AI shared their incredible journey of growth and how they've made AI and its disruption a part of their product development. Texpedite's journey continues in choosing startups that will go through this 60-day program to come out on the other side with tangible benefits like tech credits and invaluable benefits like a huge network of industry leaders, peers, policymakers, VCs, and more. Keep following NDTV for further developments.
Viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
From my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
From my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hello and welcome to KYC. Today our focus is on Rainbow Children's Medicare Limited. It's a hospital chain which deals with child care, childbirth and the like. In simplest of terms, established in 1999 in South India. Let's pull up some data with regard to the company. It was started as a small clinic and thereafter has forayed and has grown extremely sharply. In terms of the locations, etc., we'll come to, but let's first focus in on what it actually does. It operates a multi-speciality pediatric, obstetrics and gynecology hospital chain. The hospital chain focuses on all of the following care in terms of, largely in terms of childbirth. And it currently has a presence in 5 states, across 6 cities, has 19 hospitals and 1900 plus, to be absolutely specific, 1935 beds. And that's how it's stacking up at the end of Q2 FY25. In terms of the business itself, you're looking at a size of around 16,500 crore in terms of market cap. You're also seeing that it got listed in 2022. If you can have the 5-year chart of the company, you'll see it's given a very, very strong return. Since May of 2022, the stock has gone from 450 odd to 1620. So from the date of listing, it's given very strong gains to shareholders in the hospital space and a healthy return in terms of return ratios as well that the company offers. But let's dive deeper into this one. Let's try and see and zoom in, because on every one of KYC shows, we try and rate each company on the basis of 8 performance parameters. The first one being the income statement, then it's the balance sheet, how healthy is the balance sheet, return ratios is the third, how cash flows have stacked up historically last 3 years, as well as what one can expect going forward is the 4th parameter. The 5th one is on shareholding, how much is the promoter holding, and 6th focuses on street cred, how the performance of the stock has been. This one of course has been very, very strong. We'll try and break those numbers down as well. Street coverage, how many analysts track it, how do analysts view the company, that's the 7th parameter, street coverage, and 8th one is the valuation picture. This company versus others, how do valuations stack up in relative terms? Is it a good investment to make at this point? So we'll try and break all of that down. Joining me for that is Puneet Javeri. Puneet, hopefully we'll break this down in a nice and healthy manner for viewers. Let's first start off with the income statement. And the income statement, smaller company, and therefore growth has been very good, reflecting on that income statement over the last 3 years odd. The revenue CAGR has been around 24%, strong revenue growth. It's doubled in the last maybe 3 years odd in terms of revenue. From 650 crore, the revenue has gone to 1300 crore in FY24, and it grows at a fairly healthy clip even in FY25. In fact, FY25's Q2 numbers were extremely strong. One of the quarters they clocked around a 450 crore rupee top line. So therefore the growth, the revenue growth in that sense looks quite good. You've seen a 24% CAGR, 3-year CAGR on the top line. EBITDA also very similar kind of growth, 30% growth on EBITDA. So some amount of operational efficiency also kicking through. And your EBITDA margins as per the revised Ind AS is at 33%. Earlier was operating at around 27-28% as per earlier Ind AS, but currently at 33%. PAT CAGR as a result, on a low base of just about 39 crore in FY21, PAT has zoomed to 218 crore, and that's why you've seen that 76% CAGR in terms of profit after tax. Can that sustain, grow? What's the direction in which it will go is something we'll have to zoom in on better. But that is of course forward guidance, what one can expect going forward. The second one is with regard to the balance sheet, and I'm going to try to break this down into 3 metrics. One is the shareholders equity, healthy at this point, 1367 crore of shareholders equity. A large component of that is premium. Some amount of that premium is attributable to the IPO itself, which happened 2.5 years ago. But a large component of the premium is also profitability, which continues to accrue. Mind you, 218 crore of profit in FY24, likely already sitting in that number of 1367 crore as of September 2024. So that's one metric. The other one is the gross debt. A large part of the gross debt, it's a debt-free company largely, but a large part of the gross debt is lease liabilities. Generally, land is leased, building is leased, and therefore some bit of this debt reflecting here is lease liabilities, or rather large part of it, 700 crore plus is lease liabilities, and therefore the gross debt is largely zero. We'll have to ask management as to what the capital allocation strategy is going forward, what the growth strategy is, and how they intend to fund growth. That will be an interesting conversation, and we'll have the management with us shortly. The third piece on the balance sheet is the cash and bank balances. They've got investments which are quite sizable in that sense, but the cash bank balance is just about 26 crore odd, which is also healthy for a company of this size. Decently healthy cash and bank balance sitting in. One more thing I want to just highlight as part of top line and balance sheet is that there's a 50-50 split between the revenue which comes in from insurers and revenue which comes directly from customers, which is uninsured treatment that the hospital chain is currently servicing, and therefore it's kind of a 50-50 split where 50% is coming straight from insurers. So some amount of visibility even in terms of cash flow there. Now, coming straight to cash flow, because that's the important metric. Cash flow from operations has grown again very healthy clip, largely in line with that EBITDA number, 30% growth. But you're looking at net cash flow, which is negative. Fair point there, because what you will see in fast growing businesses is all the cash flow that comes in gets invested fairly quickly. And therefore, the important number to track here is the cash flow from operations, which is growing healthily in line with EBITDA. And the second metric is going to be return ratios, because once that cash is invested, what's the kind of return that the company is generating on that? And Puneet's going to break that down for us.
Well, definitely, because the return ratios, while as you already said, it's maintained at a very strong clip. The ROE is around 19%, so it's been very steady over the last few years as well. I think post that FY21 blip, and that was guaranteed accrued to the pandemic, it was a one-time effect. When you look at the return on capital employed ratio as well, that's also very strong at about 18.2%. That's another key positive for this company as well. And for the industry as a whole, as a hospital chain, it is expected to maintain a decent clip. Because of the other peers also investing capital very quickly, as you rightly said, Harsh. But it's maintained at a good 18.2%. Let me move on quickly to the shareholding as well, because that's another aspect to look at. It's been steady at around 49.8% for the promoters, while we have seen strong participation from FIIs, specifically around 25% of the shareholding is with the FIIs. There has been decent interest in terms of DIs as well as from the public as well, public investors as well in terms of this company. Finally, when you look at the street cred as well, as you rightly said, Harsh, from May 22, the stocks been almost up about 2.5 times or 254% since listing in May 2022. It's given, when you look at the returns CAGR on a yearly basis, about 54%. So it's done very well for us investors who participated in the IPO and henceforth as well. So definitely a key aspect. Of course, you rightly mentioned that the company is a very high growing company. So the investments have been higher, and that's the reason for the negligible dividend yield of about 0.19%. But I think the reason we've given it, of course, a thumbs up is, of course, it's opening newer hospitals as well and requires that kind of capital. So definitely on that, the dividend yield will be accepted by the investors because it's a high growth company. But Harsh, what about the street cred as well? What is the analyst currently thinking on the street according to for this company specifically?
Yeah, absolutely, Puneet. So interesting point made there that dividends generally, I'll just cap that point off. Dividends generally are lower for fast growing companies. Also, the important metric to track when dividends are low is the return ratios. And return ratios here are higher teens.
Yeah.
And therefore, they are deploying cash at a far faster rate than your average company, or rather the average returns offered by companies in the listed space. And therefore, that dividend number is not so bad. Let's look at though the street coverage. There are 11 analysts which track this one. 9 of them have a buy rating on it, but the upside is what the key is, just about 2%. And therefore, while 80+% analysts have a buy call, the upside is absolutely muted. Therefore, the next 12 months, analysts don't expect much, even though they're quite constructive on the business per se in the longer term. But Puneet, let's talk about valuations here, because likely that's the reason why analysts are not so bullish on this one.
And definitely, because over the last 6 to 7 years, we've seen number of very nice hospitals get and list in the market as well. So when you compare not just on valuation but also on the occupancy, on the ARPOB, of course, is average revenue per operating bed, as well as the kind of capacity and bed capacity that they hold in the current hospital is another key metric to track. When you look at the ARPOB for a company like Rainbow is the highest among the 5 that we've taken in this particular comparison, and that's also because of the niche that they operate in the pediatric space. That's of course giving them a premium compared to others in terms of the average revenue per operating bed. And essentially, when you look at the bed capacity as well, while it is currently at around 1900 and it's lowest among the 5 that we've compared it with, it's interesting that the company is looking to increase the capacity by almost 50% over the next 3 to 4 years and going to almost 2900 installed beds at that particular time. Currently, the occupancy would be slightly something that is a slight worry because of it's fallen by around 7.5% to come in at 47%. So it was around the 55% range mark in FY23, and as of FY24 end, they've come in at roughly around 47%. So that occupancy is one of the key things. But of course, it's bear in mind that this is a niche business of constructed around the pediatric care as well as the gynecology that Harsh spoke about. So that's one of the key things as well. When you finally compare it to the valuation, there we'll see a stark difference and a premium to someone like a Rainbow based on the other peers as well. So you see KIMS is another hospital that's gotten that kind of premium. They're also operating other hospitals and entering key states like Maharashtra while increasing the presence in the south. Yatharth is another one which is present in the western. But when you look at the other peers as well, comparing to an Aster DM or a Shelby, it is kind of asking for the premium because of the higher ARPOB or the average revenue per operating bed, while also having a clear path to growth expansion over the next 3 years. So while the valuation has been at a premium compared to the other peers, it seems that the street is quite happy with the company's niche focus as well as higher margins as well.
But what stands out for me, Puneet, as part of that is the ARPOB. I mean, the ARPOB is at 56,000 rupees when others have a range of around 30 to 43,000. So it's nearly 25% higher than everyone else. Whether that can sustain or not is one question, but that is possibly one of the reasons why you're seeing the kind of valuation picture that you're seeing on Rainbow versus others. Not looking as expensive when you're looking at that ARPOB number, which is generally the right metric to look at. Also, occupancy is slightly lower, which is understandable because the space is niche. But let's sum all of this up. Let's look at each of these metrics. Income statement, such strong growth, right? And therefore is a positive. Balance sheet is healthy at this point. Very little debt in that sense. Return ratios are very strong, high teens. You're looking at cash flow, which has grown largely in line with your EBITDA. Shareholding 50% owned by promoters and therefore continues to be quite well held. FII's good interest being seen over quarters. If you look at the FII trend, very good interest in that sense. Street cred, well, it's been a very good wealth compounder, 26% in the last 12 months and multi-bagger in the last 2.5 years. Street coverage is flattish, and that's largely because of the fact that the upside here does not seem all that lucrative with just a 2% upside, and the valuation picture is negative largely because you're seeing that it's one of the most expensive hospital chains in that sense. So 6.5 on 8 is what Rainbow Children gets as part of what we have analyzed today. But let's quickly look at SWOT, Puneet. Strengths, weaknesses, opportunities, threats. I'll start with strengths. One, it's well recognized, right? It's a profitable company and it's in a very niche market. So what you're seeing is a company which is high margin, high growth in a niche market, always difficult to replicate as a business, and that's one of the key strengths that it has. Pediatrics, not too many listed companies and not too many companies only altogether, and therefore that is one of the key strengths of of Rainbow.
Yeah, but on the weakness side, of course, the valuation is one of them, but can't complain too much on valuations. It is getting rewarded for the kind of business they've built. And the falling occupancy is something that, we'll quiz management also about, because from FY23 to 24, there has been a drop to 47% as well. But, on the opportunity side, there is, quite a bit that, we should also
Yeah, it provides a range of services, right, Puneet? You have a customer come in, you can provide him with far more services, which currently it does not provide, because it focuses on childcare. And therefore, you have a larger window of opportunity available for it to grow in terms of its service offering. Second is the scope for expansion. Currently focused on very limited geographies. We spoke about 5 states, but just about 6 cities. And therefore, the scope for expansion is very, very large in a high return kind of a business. And therefore, you have free cash flow coming in, which you can always utilize for the purpose of growth and expansion.
Well, then the other part is, of course, the competitive intensity that's been increasing around the city, because certain, multi-specialty hospitals are getting into this space, and they're also entering the southern market as well, which is a big growth driver for the company. While the company's entry into the North Indian market has been slightly delayed, it's expected to start construction in March of 2025. So that's been one of the key things. But we will also be speaking about this to the management as well, Harsh, because the North Indian market is something that's, a very big growth driver going forward as well.
Well, yes, absolutely. So let's bring on board the management. Let's not delay this. Vikas Maheshwari, who's the CFO at Rainbow Hospital, talking to us live. Welcome, Mr. Maheshwari. It's good having you here. And it'll be great getting your perspective. So we've tried to break down your company, of course. The attempt here is to try and understand what the growth could be over the next 3 years. What's your sense, and where will the growth come from? Existing hospitals versus new hospitals? Just break it up for us.
Yeah, thank you. Thanks for inviting us, and wish you a happy new year to you.
Wishing you a very, very happy new year, sir.
Yes. Thank you very much. So as far as the growth is concerned, it will be on the 3 legs. One is the existing units, which we have, the matured units. We keep adding the doctors, we keep adding the specialties. So the growth will come from there. 1/4 of our units are new units, which has to grow and mature. With, in our language, the mature and non-mature is less than 5 years. So we feel that another leg of the growth will come from there as they keep on growing for the capacity which we have added. And the third growth will come from the new units which we have planned. In the next 3.5 years time, we are thinking of adding 1,000 beds. We have already laid out the plan for roughly close to 800 beds in our geographies. Out of that, in the 4 years, 3.5 years, you will see these capacities keeps coming up. So the growth will come from there. Broadly, on all these 3 legs or the growth drivers which we have just laid out, we believe that we should be able to grow our company based on the capex plan which we have listed at around 15 to 18% growth, or mid-teen to high teens growth over a period of 3 to 4 years time.
Funding plan, Mr. Maheshwari.
So we have a very healthy balance sheet. I was looking at your presentations. So we have a very large investments also, which is invested into the debt funds, etc. So that the cash is 25 crores, but close to roughly 575 crore rupees we have invested into the debt funds, and the company is generating very healthy cash flow of around 350 crore rupees every year, and it will keep on growing as the company grows. So as far as the capex is concerned, it will be funded internally through the existing cash balance of 600 crores rupees plus our internal accruals going forward. And with this, whatever the capex plans we laid out, we believe that we will always remain a cash surplus company.
Mr. Maheshwari, good morning, and thank you so much for joining us today. It's Puneet this side. I just want to ask your expansion into the North Indian market. I think you are opening 2 hospitals in Gurgaon. Wanted to understand, because you've been focused on the south and steadily deepening your presence in cities like Hyderabad, but the North Indian market is of course very difficult to operate in because of the kind of competitive intensity there is there, while the company has also taken its time to go there. Just wanted to understand, because just looking at some stats, the North Indian market does account for 60% of India's annual childbirth. So wanted to understand what's been the company strategy, because these all will come only in FY28. So what would lead the growth in the next 3 years, as well as your thoughts on the North Indian market as well and your entry into the same?
So let me complete this in a different way. The growth from the south market, we are adding capacity in our existing market, which is Bangalore. 2 hospitals are opening this calendar year. We are opening 1 hospital at Rajmundry, which will also get opened first half of this hospital. So the growth will come from there. At the same time, we are expanding our footprint in Tamil Nadu, which is Coimbatore. We are putting up some hospital, which will get operationalized next 18 to 24 months time. And then the bigger one, which is the North India, which will come. But in the interim period, obviously, we keep looking at opportunities where we can put up the hospital where the healthcare requirement is there. So as and when we identify, we'll keep on adding. So that will drive the growth in the interim period, where the biggest capex or the biggest capacity of 400 beds, which is coming in the Gurgaon. What we believe is that the Gurgaon is going to be the capital for the healthcare for the whole North India. It is an advantage north now because the government focus is also too much is on the North India, putting up the facility in terms of the infrastructures, road conditions, connectivity, etc. is very is much larger improving. The most of the capex or the infrastructures earlier was developed in the South India. Now the type of infrastructures, road, etc. is getting built up, and the connectivity across all the North Indian states is much larger. Say for example, Gurgaon to Jaipur or Lucknow or Kanpur, it is less than 5-6 hours, right? And in case of emergency, the people can drive down, reach out, or they can take the flight, medical ambulances, and then land out at Delhi. This is one part, because we believe that whatever our peer group is also doing, they are putting up the large facilities in Gurgaon. We believe that the Gurgaon is going to be the hub, which was earlier the Delhi or other micro market locations. But I think Gurgaon will become a much larger hub, as in South India. If you come, there are the 4 or 5 large cities like Chennai, Hyderabad, Bangalore, Vizag, and obviously Coimbatore in the Kerala, 2 cities, which has developed as a healthcare hub. I think the Gurgaon is moving towards that. And in the next 5-6 years, we'll look at Gurgaon as a hub where the whole North India will flock for the healthcare. At the same time, in the pediatric space in the North India, there is nothing actually. So we believe we have a very high hope, and based on the discussion which we had and the internal assessment we have done, we have a high conviction of putting up that capex. And that capex, for that we have already procured the land, and few approvals have come, few approvals are expected, which we believe that it should be coming by February and the March we will do the groundbreaking. From there, it should take 2 years time to build that hospitals. We are putting up 2 hospitals. There one will be the larger multi-specialty, super specialty hospital of 300 plus beds. Another will be 100 plus beds.
And what about your ARPOB, sir? Because it's sharply higher than some of the other competitors. Is that number sustainable, 56,000 rupees odd? And what should one make of your return ratios? Would you continue to maintain a healthy return ratio, late teens kind of number? Is that the aspiration?
Yeah, so first is ARPOB. We believe that ARPOB we will be able to maintain and keep it growing inflation adjusted. Right now we have at around 55,000 rupees of the ARPOB. I think we will be definitely able to maintain that and keep it growing as a inflation adjusted. This is one. Second, as far as what was your second question on
return ratios, sir? You're clocking very healthy ratios. Is that sustainable?
Yeah, we are very financially disciplined company. Any project which we take up, we ensure that the return ratios are at 20% of the northward in terms of ROC. So any project which doesn't yield the returns below 20% of the ROC, we generally don't take it up. And what also helps us is that we are out of our 19 hospital, only 1 hospital is our own. The rest is all on the leased model. So that also helps us to maintain a very healthy balance sheet and return ratios.
Very a quick last question, hopefully a 30-second answer. I wanted to understand your acquisition that you're looking to do in the northeast as well as the western markets. You did speak about it at the end of the quarter too, that you are still in very early phases. Anything that specifically we should look at in terms of both of these, because western markets still very difficult to get into. What's your strategy for both these markets?
So for the Northeast, yeah, obviously, once we have seen the data, the healthcare is very, very much required on those areas. And as far as the acquisition is concerned, our strategy is very clear, is that we want to acquire the hospital who has followed the same principles and on the clinical side excellence which Rainbow has followed. Because in case of pediatrics or the mother care, what is very important is that you take care end to end, and the patient satisfaction should be up to mark. And on that space, very limited opportunities are available to acquire. But one or two opportunities which has come on our table is where the succession issues are there. They have built a good hospital, good system, processes, and the outcomes, clinical outcome is good. We are looking at that one. It is obviously is a little early to speak about whether that will get closed or not. But we are pursuing one or two opportunities, and hopefully get closed in 3 to 4 months' time.
Okay, great. Mr. Maheshwari, thank you so much for joining us today. It's been good chatting with you. It's been great breaking down Rainbow Medicare.
Thank you very much.
Right, with that, it's out of time on this edition of KYC. From Puneet, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
This is on my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream, and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be
Hi, thanks so much for joining in. I'm Alex Matthew and this is Your Money Matters on NDTV Profit. Because for us at NDTV Profit, your money matters. It's as simple as that. We discuss everything related to money, not just your investments, but also your expenses on things like travel, luxury, and even health. In fact, that last bit is what I want to focus on today, because health insurance is something we don't talk about enough. So let's start with that topic. Of course, a lot of you are covered by your corporate health insurance policies, and we've always talked about the importance to have your own cover and to ramp it up over the course of the years as you increase your income. And even before that, in certain cases, a lot of financial planners have stressed the importance of putting health insurance first before you do anything else. But today I want to talk about why claims get rejected by health insurance companies and what your approach should be if your claim has been rejected. Joining me, my first guest today, is Siddharth Singhal, who is the head of health insurance business at PolicyBazaar.com. Siddharth, thanks so much for taking the time and pleasure speaking with you. Let me start by asking, according to your data, what is the kind of situation or what are the numbers that relate to rejection of claims? How many claims get rejected on average?
Okay, so I think first of all, thank you, Alex, for having me on the show, and I think it's absolutely important to talk more about health insurance as such. See, I think largely what we've seen is, at least as per our data, 94 to 95% claims get approved. Obviously 5-6% claims do not get approved, and largely there are a couple of reasons, and this number may vary from an insurance company to insurance company. So I think that's our data. I would want to stress more about why do claims get rejected. So there are a couple of reasons for why claims can get rejected, and then what should a person do to ensure that the claim does not get rejected. So I think the first and the foremost reason, and this is a large reason enough, is when a claim is made during a waiting period or is not as per the policy terms and conditions. So what I mean by that is, for example, my health insurance policy has a 3-year waiting period in that for a pre-existing disease. Example, I'm suffering from heart-related ailment. Now, within those 3 years, if I go and claim related to heart, then automatically, since it's a part of waiting period already, so that in that scenario, the claim can get rejected, and claim in fact will get rejected. But if you make that claim beyond after you have served the waiting period, then obviously the claim will get honored. So this is one of the largest reasons, I would say, why a claim gets rejected. In most of the health insurance policies, and it's actually very important when you're buying a health insurance policy to understand what are the waiting periods in a health insurance policy. Primarily,
Siddharth, do all health insurance policies have waiting periods, or is there a policy in which you can reduce the number of illnesses where you have a waiting period?
Sure. So I think that's a very important question, Alex. See, most of the health insurance, in fact, every insurance policy has a waiting period. Many offer the option of reducing the waiting period. So there are primarily 3 types of waiting period. One is the initial waiting period of 30 days, which is there in every policy, which means that except for accident, you can't claim in the first 30 days. So if you claim, then the claim is liable to be rejected. Then there's a second type of waiting period called as specific illness waiting period, or we call it as slow growing disease waiting period, which is majorly 2 years in almost across health insurance policy, which means that certain listed disease named illnesses like cataract, hernia, etc., which are slow growing in nature in the body, won't be covered till the first 2 years of the policy, beyond which they will be covered. And then the third is the pre-existing disease waiting period, which is now standardized since 1st of October across the products. It's 3 years now.
Okay.
So yeah, so you have the option of reducing those waiting periods, by opting for those covers. So that is there. So actually, that's a very important thing for any person to look at while purchasing a health insurance.
So when you do purchase this health insurance, this is something that you should speak to the insurer about. If you have, for example, if you have a family history of certain illnesses, perhaps you should look at those illnesses and, if possible, reduce the waiting period, particularly if you're in certain age groups, right?
Absolutely. So I think just one thing I want to highlight here, many of the now health insurance plans offer the option of reducing your waiting period to date 31st for largely common illnesses like asthma, BP, cholesterol, diabetes, high, if somebody has a high BMI or even heart-related ailment. So from a 3-year, if you pay, 15-20% extra premium, then you can bring down the waiting period from 3 years to day 31. In certain cases, it can be day 1 also from the next day. So it's a very useful feature for the consumer.
Okay, so you mentioned pre-existing conditions. What are the other reasons why a claim can get rejected?
So I think the second thing is, in certain cases, 2-3 other reasons which come in is in case of a non-disclosure. For example, if I am suffering from certain illnesses, for example, I have a cancer and I buy a health insurance policy and I don't declare it while, filling out the proposal form, etc. And then, I go and make a claim for cancer. Wherein, if there is an investigation and it's a non-disclosure, then in that scenario, the insurance company can reject your claim. So I think it's very important while you are filling out purchasing a health insurance plan, that you disclose any current medical or lifestyle, related habits or any past medical history, so that, when insurance company is evaluating the proposal, they have all the information available with you, obviously, which is known to you. In certain cases, if something is inside the body and you don't know about it, then obviously, you can't mention it.
Okay, so that kind of answers the question that I had, which is, if you are unaware of a situation, and you mentioned cancer, which is now becoming more prevalent, unfortunately, but the onset is sometimes something that you don't anticipate, and sometimes it's something that is not picked up. So in the event that you don't know about it, it's never showed up in any test, you will still be covered, right?
Yeah, absolutely. You will be covered. See, insurance is basically a promise between the consumer and insurance company that, consumer declares everything what is known as per the consumer, and then insurance company covers for the, high, risk event. So I think that is what is very important.
In terms of lifestyle habits that people tend to not disclose, I've met a lot of people that consume alcohol, that have the habit of smoking.